Good morning and welcome. This is NDTV Profit. My name is Alex Matthew and you're watching All You Need to Know. Like the name suggests, we'll tell you everything that you need to know to start your day on the right note. Let's start with the headlines. Rate cut hopes are back as the Fed says 3 cuts are coming sometime this year, or indicates that 3 cuts are coming sometime this year, but sticks to its inflation control talk. That gives the bulls fresh fodder. S&P 500 hits an all-time high, while the Dow and the Nasdaq close at record highs as well. India could pick up global cues and see some bit of a rally at the start. At least the Bank Nifty records its worst losing streak, meanwhile, in 20 years and falls for the 9th consecutive session on Wednesday. The SEBI tightens safety norms for transfer of shares to beneficial owners in dormant demat accounts. Chief Justice of India says we treat everyone equally and we stand by the common people. He says this in an exclusive chat with NDTV. Now, the US Federal Reserve maintained a status quo, keeping its policy rate unchanged after its meeting this week. It has also continued to signal 3 interest rate cuts in 2024, but has indicated that it is not in a rush to ease policy. The committee cited slowing economic activity and easing but elevated inflation in its statement. In fact, let me read out the operative part of that statement. Quote, "The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. The economic outlook is uncertain and the committee remains highly attentive to inflation risks." Unquote. The expectation, as I said, for rate cuts in 2024 remains at the median 75 basis points, but officials only see 3 cuts in 2025. That's down from 4 that were projected in December. And that's probably because of the recent uptick that you've seen in inflation. Wall Street has gained quite significantly overnight, and we'll try to get you a sense as to why. All 3 benchmarks gaining quite significantly, and the Nasdaq gaining over 1%, and so did the Dow, the S&P 500 gaining as much as 0.9%. And you've got a positive start in the Asian markets as well. The Asia Pacific, the Japanese Nikkei up as much as 1%, and the Hang Seng, which has just opened up just a short while back, up about 1.6% or thereabouts. Let's also listen to what Fed Chair Jerome Powell had to say after the statement of the Fed was released.
As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate.
All right, so now let's try to get you some perspective on what the Fed has just done and what is likely to do over the course of the next year. Dr. William Buter, who is an independent economic advisor, is joining us now. Doctor, thanks so much for taking the time and help us understand this latest update from the Fed. A lot of people are reading this as a dovish statement or an indication towards a dovish statement. Is that the appropriate understanding?
I would say so. I think everybody firmly expected that rates would not be cut at this meeting, but there were quite a few commentators, followers of the Fed, who believed that they might get fewer than 3 25 basis point cuts for the rest of the year. 2, 1, or some would argue even none. And the fact that the Fed, in its own forecast of its rates for the rest of the year, penciled in 3 25 basis point rate cuts, is definitely dovish, yes.
Okay. What about the underlying factors, though? You have had inflation in the last few readings that have been a little hot, or hotter than expected at that. And you've seen resilience in the US economy. The jobs numbers seem to be holding up as well. So why this expectation that they need to cut? Are we at the point yet where we absolutely need to cut?
Oh, no, I agree with you. I think there is absolutely no need to cut. The jobs figure in February, 275,000 jobs were added, which was more than expected. And inflation is actually sticky, but if we look at the PCE deflator, and especially the PCE core deflator, which is the Fed's inflation index of interest, that's been running, the most recent observations, at 2.4% for a headline and 2.8% for core. The CPI inflation figures are a bit higher, with in February 3.2% for headline and 3.8% for core. So if I was focused on the CPI, I might be a bit more hawkish. But the PCE figures are still pretty close to targets.
Okay, so then from that perspective and from what you're seeing in the economy, Dr. Willem, what is the base case in terms of what happens to economic growth? Because if, we spoke to several economists last year and the expectation was that perhaps a soft landing was possible. That seems to be the base case right now, is it?
A soft landing is definitely what we are experiencing and have been experiencing for well over a year. In fact, no landing at all. The economy at the end of 2023 was growing at real terms at 3.1%, which is a very high figure for the US. And there are no clear, immediately visible threats to continued strong performance. We can't expect any fiscal tightening anytime soon. The rest of the world, external demand for US products is not particularly buoyant, but the US has been living with that quite merrily for the last year and a half. I think where the markets are too optimistic is about the long-term view of interest rates. I don't think bank rate myself, that bank rate will go down to the 2.6% long-run projection that the Fed has in its summary of economic projections. I think that period of ultra-low interest rates is over, and we should view Fed rates at the 4% plus level as the norm in the years to come.
That's an interesting perspective. Dr. Willem, thanks so much for joining us this morning and for speaking to us about the latest development. All right. So I wonder whether the mortgage payers or payers of U.S. debt in the U.S. would be comfortable with the Fed funds rate at 4% or thereabouts, and let's see if that comes to pass. But meanwhile, let's turn to the Indian equity markets and get you the latest cues heading into trade today. Agam is joining in to break down the latest F&O cues. Agam, barring what we saw in trade yesterday, there is a lot of positive sentiment globally. If you talk about the handover from the US and Asian markets, does that have a bearing at all?
It could, Alex, but what's also really perhaps perplexing for a lot of these market participants is the kind of the decline that we've seen in the Bank Nifty. In fact, the decline on a daily basis, that is about as many sessions that we saw in the Bank Nifty is the largest that we've seen since in a very, very long time. So we need to keep that into consideration as well, whether or not the Bank Nifty can in fact be weighing down on the Nifty. So the Nifty, of course, well, it was flat yesterday, and while it was choppy, we saw unwinding coming through as far as your index futures go. The Bank Nifty, of course, was also in focus because of its weekly options expiry, and that was flat eventually, but we saw some amount of shorts building into the system. And when it comes to the Nifty options space, and that's where the focus will be, considering today is the Nifty weekly options expiry. Obviously, the traders took that as an opportunity to go ahead and sell your higher level 22,100 and 22,200 calls, considering the Nifty will largely remain flat. We still do expect consolidation around the 22,000 mark, but it's a wait and watch on that one. And as far as your overall open interest distribution is concerned, as I was mentioning yesterday as well, 22,000 perhaps could be a little bit of a hard one to take out, but once you do take it out, you can't necessarily rule out strength in today's day of trade, and especially given that we have some very strong global cues supporting a good move upwards. Of course, on the lower end, we're now starting to see a little bit more base formation around 21,500. It's unlikely that this could be breached in today's day of trade. So probability is less. And finally, coming down to stocks, we have Eicher Motors and Maruti Suzuki leading the auto pack yesterday. Longs there, and SRF was the other one. Among stocks which saw unwinding, about a short covering for Indus Tower and Exide, along with PI Industries, which saw longs unwinding coming through. Overall, Alex, it was a mixed day of trade. And to be honest, well, the cues have not given you anything to go by in terms of direction. I reckon that a lot of traders are still waiting for that. And once some of those cues do come in, that's when we'll start seeing some sort of direction.
Absolutely. And the Bank Nifty today, one to watch as well, considering that it's had its worst run in, what, 20 years?
Yes.
Absolutely. All right. So watch out for that. In the meanwhile, we have to slip into a very quick break. We've got more on the other side, stock-specific information to bring you, so do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's
Welcome back. You're watching All You Need to Know. It's time to focus on some stocks that will likely be seeing action in trade today. Mihika is joining with the first list. That includes Torrent Power as well as Jupiter Wagons and more. Mihika, morning. What are you picking up?
Yes, I'll start off with Torrent Power, which has entered into a share purchase agreement to acquire 100% of an entity called Solapur Transmission Limited from Power Finance Corporation. Now, the acquisition supports their focus area in the transmission business, and Solapur Transmission is to establish a transmission system for the evacuation of power from renewable energy projects in the Solapur Special Economic Zone in Maharashtra, which is about 1,500 megawatts, and the shares were acquired at a face value of rupees 10. Then we have Aeroflex Industries, has increased its installed capacity in its phase 1 of expansion to 15.5 million meters per annum from 12.5 previously. Now, phase 2 expansion is to increase the capacity to 16.5 million meters per annum, and it will be expected to be completed by December of 2024, and the company is going to invest 39 crores, and this will be funded via internal accruals. Then we have TVS Motors, which has entered, the board has approved the scheme of arrangement to allot cumulative non-convertible redeemable preference shares by the way of a bonus issue. That means 4 of the non-convertible preference shares will be allotted to a shareholder who owns 1 equity. The issue price is at rupees 10 and the coupon rate is at 6%, and the aggregate values of the issuance is at 1,900 crores. This will be as on the record date that will be later announced, and they're going to utilize their general reserves, which are around 7,574 crores in Q3. And lastly, we have Jupiter Wagons, which has become India's first rolling stock manufacturer which have their own wheel plant, and this is done by a latest acquisition that they have declared. They're going to acquire an entity called Bonatrans India at an acquisition cost of 271 crores. And now Bonatrans India is a manufacturer of rolling stock wheel sets, and they have a production capacity of 20,000 wheels and 10,000 axles per annum. This not only helps with efficiency and the self-reliance, it also reduces the company's import costs when it comes to wheels in order to manufacture their wagons.
Got it. All right. Thanks, Mihika, for getting us those details. There's more to talk about in terms of stocks in the news, and Varsha has got the rest of the list. Morning, Varsha. What's on your list today?
Good morning, Alex. So few stocks that should be on radar, starting with RVNL, where they emerged as lowest bidder for railway project of Southeastern Railway, for which contract value is at 167 crore, and this contract need to be executed within 18 months. Then we have Crompton Greaves, wherein they've got order from HARED for water pumping system. Now this is the 4th consecutive order for solar water pumping system, for which contract value is over 9 crore, and a total order accrued till now from HARED stands at almost 65 crores. Now also they've secured letter of empanelment for 2,500 solar pumping systems from Maharashtra and 1,000 solar pumping systems in Rajasthan, for which total value stands at almost 85 crore. Then we have ASM Technologies, wherein they've announced 170 crore equity fund raise. Now this is through preferential allotment and warrants, for which 70 crore has been raised on 28th March, that is yesterday, and balance rupees 100 crore to be received over 18 months. Now issue price is set at around 470 rupees, which is 50% discount to last closing price. Also, Mukul Agrawal participated in fundraise, and this proceeds to be used for organic and inorganic growth opportunities. And lastly, we have Wokhard, wherein they've launched QIP of rupees 570 crore. Now, term sheet has been seen by NDTV Profit. Now, this QIP is for a base issue of rupees 350 crore with green shoe option of rupees 220 crore, for which issue price is set at 517 a piece, which is at almost 5% discount to yesterday's closing price. Now, post this issue, the equity dilution will be around 7%.
Got it. All right. Thanks, Varsha, for getting us those details. Now, sometime last year, the centre laid out its plan to set up a fact-checking unit. And at that time, this was something that it was understood that PIB would be that fact-checking unit and would be responsible for it. There's been a few changes in the interim, but there has been an update as of yesterday. Charu is joining in to give you some perspective and to tell you what this is all about. Charu, what can you tell us? Morning.
Good morning, Alex. So the government on Wednesday came out with the establishment of fact-checking unit under its power, which it got by amending and bringing in the new IT rules. Now, this is going to be the official unit which is going to check the accuracy of information that is floating on social media platforms, particularly relating to the activities of the government. Earlier, this power was already present with the Press Information Bureau, and this particular unit is going to be under the Press Information Bureau, under the governance of the Ministry of Information and Broadcasting (IB). Now, does not come without its fair share of legal challenges. Kunal Kamra, the comedian, and a bunch of others have already gone to Supreme Court against the establishment of these fact-check units. They have approached the top court of this country after the Bombay High Court rejected their request of putting a stay on the establishment of these units. The case is still pending before the Bombay High Court. However, they said in their order that since there has been no argument or submission or any evidence put forth before the bench till now to say anything against the fact-check units, we cannot put a stay on it. However, they are still continuing to hear the matter. Now, today, in all likelihood, it will be taken up before the Supreme Court as well. So we'll keep you updated on what happens on that front as well. That's all we know for now.
Thanks so much, Sharu, for getting us those details. Now, NDTV had an exclusive chat with Chief Justice of India, D.Y. Chandrachud, and they spoke about a number of different issues, including the state of India's judiciary and the importance of last-mile justice. As we end this program, here's a slice of that conversation.
Normally, the dialogue between the higher judiciary, that is the Supreme Court, and the high courts is with each other. And I thought that has to change because the first point of contact for our citizens is with the district judiciary. आम नागरिक की कोई समस्या आती है तो पहले कोर्ट कचहरी कौन सी कोर्ट जाते हैं वो सर्वोच्च न्यायालय में आना उनको मुश्किल हो जाता है पहला जो उनका पॉइंट ऑफ कांटेक्ट है वो जिला न्यायालय है From that perspective, I thought that it's important that we engage with the district judges, understand what are the issues which confront the district judiciary. Because when we strengthen the district judiciary, we are really going to strengthen the interface of our citizens with the district judiciary. And from that perspective, we had this national conference of over 250 judges from across the spectrum in Kutch, all belonging to the district judiciary. It was a conference where I heard their stories, heard their perspectives, their opinions, so that we can change our policy making to adapt to their issues and of questions which concern them. Because through the judges who have a direct interface with common citizens, we gain to learn a lot more about the problems of the stakeholders in our system, including the litigants, the lawyers who come to courts, marginalized groups who seek access to justice, women, what kind of issues they have when they have a case in a court. So I thought this was a very unique attempt, and this is going to be a forerunner for a larger conference of over 1,000 judges, which we are planning to convene, drawn from the district judiciary all over the country, again in Delhi.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome to India Market Open. It's Thursday and global equity markets are celebrating that there is no news is good news for now from the look of what the Fed has done. And good morning, guys. It seems like we might get a leg up, a little bit of a leg up this morning.
I think so. It's been, a good flow of news.
There is news, guys. There is news. Why is there no news?
No, there is news, but the news is that
I'll tell you what the news is. That my two co-anchors have decided to wear the dot plot on their ensemble today.
Yeah, I think you're getting a little dotty with age. But no, the big news, of course, this morning, all about the Fed. And when Samina says no news, she's right, because the interest rates haven't changed. But that was expected.
Yeah.
That was expected. What's also stayed the same is the dot plot, which is I would say an amalgam of all the Fed members, the FOMC members' views, has once again reiterated after January that they see 3 rate cuts this year, totaling up to 75 bips. And that's what's really cheering the markets. Having said that, of course, they see inflation going up, they see the economy also growing up, and we'll go to all of that in detail. But overall, I would say good indicators.
No, fabulous. One, the dot plot, and two, Powell saying that it will soon be appropriate to slow the pace of QT. That is such a big statement. I mean, in some sense, we've all been talking about how they have been reasonably hawkish, not too focused on growth as much as focused on inflation, but now coming out and saying that QT might be slowed for risk assets, I think it was music to the ears.
No, but let's just break this down, right? For people who, I mean, for a layman,
yes,
cutting rates means the economy is not doing well. If the economy is
or
not
inflation is under control,
or inflation may or may not be under control, because eventually if the economy is doing well, it would fuel inflation, for example, in India, right? This is where I think most people get perplexed. So the cheer should be that there are no rate cuts at all in life, because that really means that you're in a good place generally, right?
But you want Goldilocks, right? You want the
porridge Goldilocks
which is not too hot, not too cold. That's
no, also
best case scenario.
And also from a risk asset perspective, I mean, one would love that the pace of hike has been so steep that for risk assets, valuation multiples to become a lot more reasonable, rate cuts are so welcome. So rate cuts happen, central banks are doing this. If QT is slowed down, all of that will fuel.
But I do feel like rates
into
may remain elevated for longer than initially anticipated, more than likely. Of course, there was one article that I came across where they said the Fed, even if wants to stay neutral, they may not be able to, because their reputation now is at stake, because they've gone back and forth so much, and with elections around the corner in the US as well.
But if they're saying 3 rate cuts this year, you have to start them at some point from June.
Yes.
So that's all now in. All right. So
but the good news is it means very little for us, because our markets have largely been driven by domestic inflows. So
no, it's great from our market's perspective as well, right? Because everybody's saying that the Fed doesn't cut.
Yeah.
How will Shaktikanta Das have the ammo to do so?
But we talked about this too. There could be one rate cut where Shaktikanta Das might have to do.
Yeah, but this is just favoring
it, right? The rate differential will eventually play out, because
So guys, let's get to the global news flows and then what happens today. And we're going to have a more detailed conversation with Jeff Dennis ahead on exactly this. What does this mean for our markets? Why this is important? Meanwhile, the bottom line, whatever Powell said, and of course, as usual, he's sort of hedged both versions. He's saying that I still want inflation to come down to 2%. The dot plot shows it might not, but the 3 rate cuts for this year has been reiterated. As a result, you've seen US indices rally to close at all-time highs after the Fed meet. It's just a stupendous response in the US markets that you saw across the board. So that has been the good one. Very quickly to take you through the highlights of what has happened, and we discussed a few of them, but just to put those in pointers. The Fed has decided to keep rates unchanged. It's reaffirmed 3 rate cuts this year. That's through the dot plot, or the SEP, which is actually the technical term. And because it's 75 bips, the implication is it will be 25 basis points each time round, possibly starting from June. That's what has been taken as a positive. On a bit of a, I wouldn't say concerning side, but also to balance that out, the fact is that the GDP forecast has increased from January to 2.1, which was 1.4. Now it's 2.1%. That means you have a hotter than expected growth. The point that Samina was making, that if you have hotter than expected growth, where is the rationale for cutting rates? Same with inflation. Core PCE is expected to go up as well, and that projection has also gone up, but by 0.2%. Nevertheless, if there's a Goldilocks scenario that the Fed wants, this is probably the right point for it. And we'll play out in a bit what Powell is saying. But I want to quickly tell you what's happened to bonds. Nothing too much. It is benign. I would say the US 10-year has been benign at about 4.28%. So not too much movement there, because on balance, everything sort of evens out. Crude's been okay. Crude saw, a bit of a downtrend, but then has come up again, because inherently there are concerns as far as crude is concerned. So Brent was at about $86 a barrel. Asia has really at least started in celebration. And let's pull up and see what Asia is doing now. Nikkei completely was zooming about 1.5–2%. Look at the Hang Seng, 2.5% up. Let's quickly just look at the implied open as for India and see what it looks like for us. Are we also participating in the party? Yes, we are. By all indications as of now, we're joining that sort of post-Fed party this morning, and let's see if that pans out. Flows were nothing great to speak about. There was some FPI selling yesterday, evened out by domestic investors. So quickly, the fund flows before we go on to the trade setup for the day. But that's going to be the big story where you do have the FIs, DIs pretty much balancing each other out, where you have Fed speak as the big indication.
And the yields coming off really helping the risk assets sentiment globally. So keep that in mind. 22,000 strike is now where the maximum call open interest is centered at, and therefore if the markets stay higher for over an hour or a couple of hours, and if there is some bit of covering here, then that might just help the market. So that's essentially the key point for the trade setup today, that from a setup perspective, it was the 22,000 call, strike call, which is the most important thing, and let's see if there is further covering out there. It's difficult to make a case for sustained gains due to valuation issues at the small cap and mid cap end of the market, you have to admit. But be that as it may, today could be a different kettle of fish altogether. And while people are talking about staying away from the commodity linked stocks, so while crude has come off a little bit, but rubber prices have gone up, so watch out for tire companies, don't go out and bet them, because the quarterly numbers as they start coming out from April will not show good performance there. OMCs could be an interesting kettle of fish as well. But I think the stronger stocks which are impacted by price or policy cuts are now coming to the buying table. Yesterday we saw Nomura speak about it. Samina probably going to talk about the OMCs today, and we're going to talk about OMCs a bit later on with Probal Sen as well. There's also a talk of MGL, I think, today, and we'll probably talk about that too. So anything which is strong but impacted quite viciously in the last 15-20 days because of price or policy action is now coming back to the table on the buying side. So watch out for that whole bucket.
Well, yeah, I think we were ripe for a bounce back, at least in yesterday's trade. It's gone home flat, which has been a bit of a relief. Volatile, though, nevertheless, like Neeraj indicated. But of course, with these very strong global cues coming in, it is setting ourselves up for a strong opening. If 21,900 gets respected and taken out, it could actually mean the next leg or the breakout of this consolidation phase for the Nifty. Well, I think, Neeraj, what I want to quickly talk to you about is Bank Nifty. 9 straight days of a lower close on Bank Nifty, and I think that is the struggle. So if Bank Nifty doesn't pull through in today's day of trade, I'm not sure how far the Nifty can go from these levels. And I guess we've got to get that piece of the puzzle right. That's one. And secondly, while you talked about risk assets rallying sharply post the Fed's meeting, gold, which is not a risk asset, has actually gone back to record highs. So I'm not sure what asset is not going up. Bitcoin is back to 67,000, so that's risk. You've got equities doing well. Crude, that usually is considered risk on, is actually eased off. And gold, which is a risk off, so it's usually a hedge, has also rallied quite sharply in trade. Remember, gold has an inverse relationship with interest rates. So if there are 3 rate cuts, gold traders would be long gold as long as there is no reduction in the number of rate cuts. So it's a mixed bag in every sense in terms of what we are picking up in terms of cues. But for now, a gap up on the street is what we are eyeing. Lots of pockets of interest. Whether or not this is sustainable is going to be anybody's guess, but I guess we'll cherish what we have for now on the street. Well, in terms of stocks, not too many stocks that are going to be driven by news flow, so smaller names in that sense, but one that we'll be tracking, and this was an exclusive by NDTV Profit, it's Wockhart's QIP. We've talked for the last few months about how they've talked about raising funds for the aggressive expansion plans, debt reduction. Finally, they've confirmed yesterday evening to the exchanges that they're launching a QIP of 570 crores. The QIP base issue of 350 crores with a green show option of 220 crores. The issue price is going to be 517 rupees a piece, which comes in at a 5.5% discount to yesterday's close. The equity dilution would be about 7.11 post this one. What you want to keep in mind is we don't know how this has got lapped up or what the response is going to be. 26 March is when they will be regrouping the management. But it'll be exciting to see how Wockhardt opens up. Remember, this was our exclusive and you heard it first on our channel. So no surprises there on Wockhardt's QIP, a big one there. Apart from that, railways seem to be having it quite well in terms of order wins. RVNL has emerged as the lowest bidder of Southeastern Railway project. The contract is valued quite big. It's 167 crores. The timeline for execution is 18 months. We will try and get a sense from the management in terms of the cash flow cycle on this order too. Well, you've also had one brokerage report, and I want to bring it up on IOC. Also, we will be talking to an OMC specialist later on in the show to get a sense of what's really happening, because up until 8 weeks ago, brokerages were upgrading their targets on OMCs, and now it seems that there are downgrades coming in fast. But Citi maintaining its target price on IOC. They've said that the sentiment has dampened by a cut in fuel price and an up move on crude prices, impacting the profitability of PSUs. But they did say that the price cut, remember, is temporary. OMCs are relatively well priced as compared to other public sector undertakings, and the recent price correction is actually a great opportunity for investors to go out and buy some of these OMCs. In order of preference, they like BPCL, HPCL, IOC and HPCL. So it's OMCs that continue to look good. And traders still not enjoying this for now, but I think for an investor, this space and this opportunity is actually a good time to go out and pick up some of those good OMCs at these prices after the recent correction.
Yeah, because the big, negative of rate cuts at the pump perhaps are behind us. So that there definitely could be a case, and we'll talk more about it. But just talking about another sector which might be in focus today, I think we should look at the IT stocks. Neeraj's favorite, which he's been very, not right now bullish on, but I reckon IT stocks may have a good day today. You're likely to see that once the rate cuts have been underlined. And look at the dual combination. Fundamentally for IT, it's not bad at all. You're going to have an improvement in the economy, maybe better spends coming in from customers of our largest IT companies, and a benign interest rate scenario also helps. So I would look at some of those IT counters today, maybe.
Just a small interjection there. One, of course, we don't form our views, but remember, between yesterday and today as well, I know Samina was saying that how we've spoken about IT in slightly constructive fashion in the past, and yesterday we were talking about how there is very less room for an upside. But one of the pillars on which you can make a bear case for IT is that what if the rates would not be coming off, because that doesn't re-rate the valuation multiples for tech at large and IT services in India. If this were to happen, that changes at the margin something. So therefore, some bit of upside because of that thing comes in, even if the demand commentary doesn't change. So I'm just making a case out here.
Are we of the opinion that a 25 basis point rate cut is going to increase demand and order wins for the IT sector?
No, the multiples for the space, for all tech stocks, because of the interest rates, would definitely change.
So it's an investor sentiment as real business recovery,
right? On the DCF, the valuation multiple. Yeah. On the DCF, the valuation multiple. So not, but not a sentiment, but because of DCF.
So my I wouldn't say argument, but my pitch is that today, because of investor sentiment more than anything else,
the stocks might
you're going to see possibly a positive reaction, and then what you pick from there is, of course, the long-term view, and that's what's important.
And then we go back to Neeraj's yesterday's
conversation.
And then
we go back to that, and we'll speak to all of our experts on it. But the other stock, and Samina spoke about railways, I'd just like to add Jupiter Wagon there. This is a space which went hot and then went cold, but the fact is that the order flows and the movement in this space is at breakneck speed, because you have governments planning 5-10 years ahead. So that doesn't change no matter what the stocks do. So having said that, Jupiter Wagons becomes the first Indian rolling stock manufacturer with its own wheel planey. So they have acquired something called Bonatrans India at 271 crores, which manufactures rolling stock wheel sets with a production capacity of 20,000 wheels and 10,000 axles per annum. So this reduces costs and dependency of imported wheels. So if you look at it in the big picture, and I just want to zoom out on that for a second, you are trying to develop this Make in India next leg for export orientation, and Jupiter Wagons is setting itself up for that. So I would look at that. Sapphire Foods, the other one, and this is basically an NCLT approval, so maybe an overhang moving out of the way. They've approved scheme of merger of absorption of two players, that's GPPL, Gamma Pizza Craft Overseas Private, and Gamma Pizza Craft Private. These are distributors of Pizza Hut in Sri Lanka, essentially. So this was on the anvil, and NCLT has sort of cleared the decks for that. That might be a sentimental positive as well. More on my list, but after you're done, Neeraj.
No, just the top three stocks on my radar, Samvardhana Motherson and KPIT. The reason I say this because amongst everything else, Japan export data came out and rose for the third straight month, but predominantly led by autos. Japanese auto exports have surged to the US and the EU markets, and therefore suppliers or companies that work with Japanese auto companies could benefit from this. So let's see if there's a sentimental uptick there. Could be a positive for Samvardhana Motherson in particular, but some of the others related to that space as well. We're talking about brokerage notes. Jefferies on MGL is an interesting one. It's a buy. The target price has been raised to 1540 versus 1515 earlier, which is about a 22% upside for MGL from the current market price. Remember, we talk to the management tomorrow on India Market Open. They say that the stock has corrected 20% after the recent price cuts that they have taken. The margin impact of the price cuts, however, according to Jefferies, is cushioned by the decline in the feedstock cost. They expect margins to remain at the upper end of the FY 25-26 guidance. And they say, more importantly, that valuations are at close to less than one standard deviation or minus one standard deviation as per the long-term average, which presents an attractive opportunity to enter, which I believe is the case that both Citi and Nomura are making on OMCs as well, and Jefferies is now making on MGL. So watch out for that one. Lastly, very quickly, because I think we have Jeff Dennis up and a lot of other stocks to capture, but Citi on NMDC is an interesting one. They sell with a target price of 180 versus 215 earlier. They've opened a negative catalyst watch on NMDC because they believe that an iron ore price cut is imminent because domestic prices are more than 25% higher at a premium to the export parity, and 100 rupees per ton change in fines impacts the EBITDA by 4%. So if a price cut comes in, NMDC would correct. Let's see if NMDC sees a bit of a corrective move today.
Yeah, just two quick stocks, and this is not on back of news this morning, is Eicher Motors and Maruti, two that we'd want to watch out for in terms of today's trade as well. Both had a stellar performance in trade. Maruti, of course, made a new record high. Stock was up 15% in 2024. CLSA's come out with a pretty aggressive call on this one. It'd be interesting to see how the counter actually plays out in today's trade of trade. That's Maruti I'm talking about, if you can pull that one up. Eicher, on the other hand, was up 5.5%. UBS has anticipated a 34% upside, and the markets clearly got very excited on back of that. And you saw a 5.5% up move. Be good to see whether the gains continue into today's day of trade. But I'm assuming there was quite a bit of delivery activity on both these counters yesterday.
Yeah. And we had an interesting chat with Shashank Srivastava yesterday, which was really fun because it came at a time when JSW and MG were launching their EV, and they said, we want to be the Maruti of the EV space. So it was great to get Shashank Srivastava on that. And, you know, him talk about even if Maruti's EV plays in 2025, he doesn't think they're late to the party. Just a couple of more I would add, maybe Prince Pipes, if you want to look at. The company has signed an agreement with Klaus Warren Fixtures and NM Shah. They're going to purchase the Aquel brand and other assets. Not a huge sort of an acquisition, 55 crores, but greater value built in their bathware segment. And Prince Pipes has been definitely interesting. And then, of course, we have BNP Paribas on Bajaj Finance, where they've initiated coverage with a target price of 9,000.
9,000, guys.
Yeah, 9,040.
And Bajaj has had a good run.
Yeah, has started off very quickly. Now, just before we go to Fed, just wondering, Samina, any updates on Wockhardt, QIP? You mentioned about it, demand?
Yeah, the book was full, so well subscribed, and I don't think that comes in as a surprise. Of course, we've confirmed that. So it came in at a 5% discount. Remember, the confirmation came in from the management yesterday, and we do believe that the book has been fully subscribed. So it'd be interesting to see a reaction on Wockhardt this morning. The stock, remember, has been active. Mr. Korakiwala has aggressively talked about their very ambitious plans, debt reduction being one of them. Getting rid of non-core assets was something else that the company and management had indicated to us earlier. But do we have Jeff ready to join us? Yeah. Jeff Dennis, independent advisor, emerging market expert, joins us. Jeff, good morning. Thank you very much for joining us. Jeff, the three of us have been debating about, what and how to make of what happened last night. First up, I guess status quo, no changes on 3 rate cuts that's expected. Some may argue about the commentary being dovish, but what I want to understand from you, if the economy is doing well and inflation is sticky, how does the street or analyst or economist even expect a rate cut at this stage?
I couldn't agree more. I had expected that the Fed would go from 3 rate cuts to 2 rate cuts at this meeting. I'm very, very surprised they didn't do that. And I think it's inconsistent, frankly, with the rise in the increased forecast for GDP growth, which has gone up quite a bit,
since 3 months ago, and also a slightly higher inflation forecast. So I think it's very surprising that they still went for 3 rate cuts. And I think the market reaction will tell you the market was surprised as well. I don't know how they're going to fit 3 rate cuts in, because also you've got to consider the timing of the rate cuts vis-a-vis the election. The Fed will not want to start rate cuts just before the election or just after the election. So it does imply they're going to have to start thinking about cutting rates in June or July. And that still seems to me to be quite early. So I thought this was a big surprise today.
Jeff, I know global markets seem to be very excited, and I'm assuming it's the no news is good news in that sense. Wall Street went up 400 points. Asia looks good. Crude is doing well. Dollar is eased off. Bitcoin is rallying. I mean, risk on, risk off, everything's moving up. My concern is that if crude continues to stay elevated over the next couple of months, commodities are beginning to move up as well, given what's happening in China. Do you feel like 3 rate cuts today actually seem very unlikely for the rest of the calendar year, because there are going to be so many unknowns which are going to catch markets and regulators off guard?
Yeah, I agree. I think the key thing for me about inflation is that inflation is coming down. I focus more on the CPI. Inflation has got stuck, I should say, on the headline CPI just north of 3%. The core is coming down, but very, very slowly. Okay, the core PCE is lower for sure, but there's just not enough progress there towards the 2% level to justify 3 rate cuts. And then you are absolutely right. You bring in a really important factor here, that oil prices have now broken out of their recent trading range. It was a very tight trading range. And that's going to push inflation up, not just in the US, but of course around the world. So I think what the Fed is probably doing, they're saying they trust that the economy stays reasonably stable, does not accelerate or anything like that. It could, of course, slow down. And the progress on inflation continues. And therefore, you get your 3 rate cuts. But frankly, right now, as we sit here now at the end of March, the case for a rate cut in the US is very, very weak indeed. So I'm just very surprised. And you brought another factor in there to, if you like, underpin the surprise, and that is the rise in oil prices.
Jeff, good morning. Tamanna here. One of the reasons being talked about, and I wanted to get your take on this and why rate cuts are still on the horizon, despite, for example, you saying that the case for it is weak, is because you have elections in the US this year. The anticipation of rate cuts has grown, and high rate cuts are actually hurting people as well. And do you think this is why the likelihood of rate cuts is very much there? Maybe once they start, it won't be a quick reversal of stance, but definitely 75 basis point cut is coming in.
Well, I published something earlier in the week where I said if you look at the election calendar, and bizarrely, the November FOMC actually begins on the day of the election and finishes the day after. I think if you assume the Fed will not want to start cutting rates the meeting before the election, and will also not want to start cutting rates the meeting after the election, because one move would upset one side and the other move would upset the other side. My best bet is they would have to start cutting rates in July, and then maybe they cut in November or December. But the politics makes this more complicated. And the politics, for me, makes this decision still about 3 rate cuts very difficult to justify, frankly. Higher rates are hurting in certain parts of the economy. You're seeing a big increase now. Don't know about a big increase. You're seeing some sort of increase in credit card delinquencies. Obviously, with bond yields having moved back above 4.3 to 4.35 recently, although they've come down on the back of the Fed's meeting today, that is still holding the housing market back a little bit. But if you look at what the Fed has been talking about and their goals, and you look at how decent the economy is, it's just hard for me to see that the monetary policy outlook isn't changed from what it was 3 months ago. And specifically, I'm not sure how they get 3 rate cuts in given their goals between now and the end of the year, given also the handicap to their flexibility that exists because of the election. Sorry.
I mean, having said that, there is no compulsion on the Fed to stick to 3 rate cuts, this year. This is an inference from the dot plot. The Fed has always said that they will watch the data and see what's happening next. Just want to understand from you, Jeff, implications for emerging markets such as India.
Very, very good, I think. It's been a pretty dull year for emerging markets. We're just above the zero line. One of the things that's helping emerging markets to come back from being down about 5 or 6% earlier in the year is China has stopped falling, and that's helpful. You're seeing some big sell-offs in certain other markets, like mainly in Latin America. But you've seen some very strong markets like Taiwan, for example. Now, India is outperforming this year. It's up slightly in dollar-adjusted terms, which is good. Based on my outlook for monetary policy and my outlook for the economy and inflation, I think EM puts on about 10% on the year, and we're up now somewhere between 1.5% and 2%. So this was a good day for EM because you're getting the classic signs that pull people back into EM: a weaker dollar, lower bond yields, risk assets doing well in the US. So I think all of this is good for the emerging markets. I still think India outperforms. I don't worry about the election with respect to the Indian market because I think we know probably what the outcome will be. As I've said many times on this show, I think the issue for India is always valuations. You need the growth to come through. You need the earnings growth to come through. You need to know that the inflation story is improving a little bit more. But at the end of the day, India looks better to me than China, and India looks to me like a small overweight. And I think this news today is very, very good for emerging markets.
Here, good evening to you. Just one question, really. Assuming that the Fed does what you're saying that might be difficult, which is 3 cuts, plus the comment about QT as well coming in from Jerome Powell, would you believe that risk assets would be higher between now and the end of the year if both of those things happen?
Yes, for sure. In other words, you're not going to get many days like you've had today, but the general theme will be, in other words, I've been saying to people that even if they ended up cutting the number of rate cuts in their plan or in their dot plot from 3 to 2, the narrative has not changed or will not change. That narrative is rates are at their peak, the economy's doing okay, inflation's coming down, heading towards 2%, albeit a little bit more slowly than we'd like to see. And ultimately, we don't really know when, but ultimately, they will slow down on the QT process and stop the QT process. I think if you assume if you assume as I do, that the dollar is overvalued, and after being pretty resilient so far this year, starts to come off, and you do see slightly lower bond yields, that is what I think gives you higher risk assets between now and the end of the year. And that will include EM, and this is why I'm very happy with my 10% call on emerging market equities in 2024.
We love having you, Jeff Dennis. Your views on the Fed and the resultant impact on EMs always help. Thanks so much for taking the time out and staying up for us.
Thank you.
That's the view from Jeff Dennis. Tracked emerging markets as closely as anybody on the Western side and believes that EMs and India could be a good take on the back of this policy and even otherwise. Well, the implied open looks okay. As we head into the break, while you've heard all about what the Fed implications are, hear out Jerome Powell as well, as he maintained the dovish stance on the rate cuts amidst a strong labor market.
I mean, you saw last year very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade,
Back with India Market Open right here on NDTV Profit. A quick look at the implied Nifty and show you how much higher are we likely to start off very strongly. So whether it's 120 points, 150 or 180 points, the point remains that on the back of what the US markets have done and the Asian markets have done this morning, we are likely to start off positively. The question is, what can we do from there on? Agam Vakil joins in to give us the derivative setup. And Agam, I was looking at the call put options as well. Significant concentrations at select strikes, which if the market stays higher, might come in for a bit of short covering, you think?
Actually, short covering is due, Neeraj, because from what we see, despite the fact that the sentiment has been, well, not necessarily bearish, the Bank Nifty specifically has had the worst run in 20 years. That decline that we've seen of late. So yes, the question really is that whether or not we can in fact see that short covering coming through. Of course, the Nifty yesterday was flattish and it closed marginally higher, and of course we saw unwinding in futures, and the Bank Nifty is where we saw a little bit more addition in open interest towards what it seemed like shorts. But as I've been mentioning, that we've just been seeing that ever so slight gradual decline on the Bank Nifty, and this losing streak has been the longest in the last 20 years. So that's something that to keep an eye on. It doesn't really mean anything, because this losing streak hasn't really lost substantially as far as the Bank Nifty is concerned. But let's move on and talk about the options market. Naturally, the Nifty will be in focus because of the weekly options expiry, and yesterday we saw a lot of writing in terms of calls when it comes to the 22-100 and 22-200 strikes. And we saw a lot of unwinding inputs as well. even as the Nifty, well, moved downwards ever so slightly. But 22,000 is where we are keeping an eye on. So let's bring up the overall open interest. And you continue to see the 22,000 call as the one with the max OI. And that perhaps will be around the region where we could see some amount of volatility take place, because that in the near term acts as some sort of a key level. Moving on, let's also talk about stocks, and the auto pack was in focus. A lot of impetus there on the back of Eicher Motors and Maruti Suzuki, looking at longs building in along with SRF, which also saw longs, and a short covering for Indus Tower, Exide, as well as Vedanta and AU Small Finance Bank. So keep an eye on these levels. But let's get in an expert opinion here. We have Sony Patnaik of GM Financial who's joining us on the show. Sony, good morning. Thank you for joining us. Let's start, as usual, with your view on the benchmarks. How are you trading them?
Hi, good morning, Neeraj, and good morning, Agam. Thank you so much for having me on the show. I think what GIFT Nifty is trying to imply that, we'll be opening right somewhere near the congestion area, which is 21,950, 22,000. You can see a lot of call writing that is still present in 22,000. There was a significant change in open interest. Maybe, it's wise just to watch the first 15 minutes to half an hour and to see whether the gap up is getting sustained, whether Nifty is trying to sustain above 22,000, which is your congestion area. So I think that will depend a lot. Right now, we can say that the support is at 21,700, but the expiry range is indicating somewhere between 21,750 to 22,050 on the higher side. So I think it will be important to watch how it can sustain. And going forward, 22,200 remains the very crucial resistance level, only above which we can see a trend reversal back again, of which Nifty can test new time all-time highs again. So I think these are the crucial levels to watch for Nifty. When it comes to Bank Nifty, 46,000, strong support, closing was around it. So I think not to panic a lot about Bank Nifty. Maybe it can support Nifty going forward. There's a resistance around 47,200, 47,500 for Bank Nifty. So I think these are the two crucial resistances to watch out for. If Bank Nifty is able to take out these resistances, then good enough. I think Bank Nifty can head towards 48,000 also in the coming while. I think, maybe a lot of focus can be on Bank Nifty today and a bit on IT stocks as well, just to watch how they react.
Okay, fair enough. Sony, in that case, let's talk about stocks then. And I believe the first one on your radar is ONGC. Can you take us through that one?
Right, so ONGC, after a sizable correction, it's trying to reverse back with a good support from 260, 258 levels. And it has even closed very comfortably above 260, which is an option chain breakout. So the strategy here is to buy a call option of 270, to buy it in the range of 2.1 to 1.8, keep a stop loss of 0.5 and a target of 5 to 6 points in premium. The view for ONGC is that it can test 270, 275 by March expiry. So that's the reason why the safest call option to bet on right now is with 270 call option. And the second strategy is for Sun Pharma 1560 call option. We can buy that in the range of 11 to 12. Keeping a stop loss of 16 and a target of 22. So Sun Pharma has taken very good support from 1530, 1520 levels, which is also its option chain, good support. So going forward, there's a resistance of 1560. If it's able to cross that level today, you can see a good short covering and short of Sun Pharma towards 1590, 1600 levels as well.
All right. Sure, Sony. And the other one, I believe, on your radar is Sun Pharma.
Right, so I think I just covered that.
Pardon me, yes. Well, okay, fair enough, Sony. Well, in that case, thank you so much for joining us and taking us through your views on the markets, as well as giving us a couple of ideas. Well, with that, it's over to you, Tamanna.
All right, thank you for that, Agam. It's going to be an exciting day because at least for now, Jerome Powell has kept hopes of a rate cut or 3 rate cuts this year alive. Let's begin now with commentary from Nirav Ashar, Head Equity Research Analyst at Latin Manharlal. Nirav, very good morning to you. Great to have you back here on NDTV Profit. We've seen Asian markets respond very positively. Is it likely that this is exactly the sentimental positive booster dose that the Indian markets needed?
Yeah, good morning and thank you for having me on the show. I think this could be a kind of a perfect situation for the markets. We have had a correction in the markets, and it was a pretty much kind of a calibrated kind of a correction which we saw in the markets. And markets, of course, were waiting for the global cues, the global commentary from the Fed. And now with the Fed having re-performed the 3 rate cuts, I think it's likely to boost the sentiment as far as investments and risk appetite is concerned. So I think the risky assets definitely are going to get a boost from this. And predominantly, I think the IT sector is likely to benefit from these developments. We've seen the IT sector being under some sort of pressure, but I think we are likely to see some revival over there, and more so in the mid-cap IT space, we expect stocks to start moving. Bank Nifty will be an important factor to watch out for. We expect Bank Nifty also to start inching upwards in trade.
What do you expect in terms of sector-specific response, Nirav? On the one hand, of course, you'll have this, like we said, a sentimental booster dose. So maybe pockets that have been suffering a bit last few sessions may see an up move, but we've been talking about financials and tech since morning. Do you reckon that you will see a constructive sentiment there as well?
Yeah, so as we already discussed about IT and banking, I think going sector-wise, I think we've seen a kind of a very different kind of performance from different sectors. For example, I think starting off with the auto space, I think it's been a kind of a flawless performance from the auto sector. Month on month, I think we've seen very good data points. And even in a tough market, we've seen two-wheeler stocks continue to do very well. We've seen good re-ratings happening over there. Yesterday, I think the positive upgrades which we saw on Eicher Motors and Maruti, I think they augur extremely well for the auto sector. In banking, I think the struggle still continues. I think it will be quite some time before we start seeing signs of confidence over there. Capital goods continues to do very well in trade. We've seen pharma under some sort of pressure of late, but overall still it continues to do well. And FMCG too has been struggling in trade. I think we've seen HUL at a 2-year low, and at the same time we've seen stocks like Nestle and Colgate continue to perform quite well. So it's a kind of a divergent performance which we are seeing in the markets. Some infra stocks, the overall infra space, I would say, is doing well on the back of strong order books. But at the same time, the valuation support is still not there because most of that is factored into the price.
Okay. Well, Nirav, stay on, so much more to talk about. Let's shift focus to some key stocks, which are the newsmakers today. It's probably not a very big list, but Mihika joins in with some of those at least. Mihika, good morning.
Good morning, Niraj. So yes, at first we have Torrent Power, which has entered a share purchase agreement and is going to acquire 100% equity stake in Solapur Transmission, which and Power Finance Corporation is selling this. Now the acquisition supports the focus area of the business in the transmission business. And Solapur Transmission is to establish a transmission system for the power evacuation of the renewable energy projects in Solapur Special Economic Zone in Maharashtra, which is to the tune of 1,500 megawatts, and shares were acquired at a face value of ₹10. Then we have Aeroflex Industries, which has increased its capacity, finished its phase 1 expansion, and its capacity now stands at 15.5 million meters per annum versus 12.5 million meters as of Q3. Now they're also going to start the phase 2 of expansion, which will increase their capacity to 16.5 million meters per annum, and this is expected to be completed by December 2024. And the company is going to invest 39 crores, and this will be funded via internal accruals. And lastly, we have TVS Motors, where the board has approved the allotment of cumulative non-convertible redeemable preference shares, and now the issuance of the shares will be via a bonus. So the 4 non-convertible preference shares will be allotted at a face value of ₹10 to every 1 equity held by the shareholder as on the record date, which will be released later. Now the issue price is at ₹10 at a coupon rate of 6%, and the aggregate values of all the preference shares that will be issued is 1,900 crores. Redemption will be after 12 months, and they will issue it on the approval of the NCLT, and they're going to use their general reserves for the capitalization. And as of Q3, their general reserves stood at 7,574 crores.
Okay, interesting. Thanks a lot for that, Mihika. And interesting because, for example, Aeroflex, a company that came in with a lot of fanfare, massive subscription, got heavily subscribed, went up, I think, all the way to 180 or 190, currently at 125. Just shows that even with companies which had got strong subscription and good fundamentals, they have been pulled back. Nirav, any thoughts on Aeroflex? I mean, interesting development right now, but a business that got heavy subscription during its IPO.
Yeah, so I think there was a lot of euphoria and fanfare at the time of the IPO on account of certain very influential investors having being involved with the company. I think if I'm not wrong, the IPO price was close to around 108 rupees. And we had a very strong listing, after which things have cooled off a bit. And I think the price has come down, and I think it's really a good opportunity to start nibbling into the stock. I think we have to see the quarterly results also, but I think this seems to be an ideal opportunity to start having a look at the stock in a serious way. And of course, why just Aeroflex? There are a lot of whole host of mid-cap companies which are looking very attractive at the current levels. Yesterday, I think a case in point would be LT Foods, where we have seen 1% stake being picked up by another influential investor. So there are a whole host of such opportunities in the market.
Shrikant Chauhan as well joins in to talk to us about the technical setup and of course what the markets are indicating. Shrikant, what does it look like? I mean, a big gap up is what we're expecting in today's day of trade. But it doesn't seem like these global cues could, replace the nervousness that our street has been feeling for the last couple of weeks now. What do you feel about the index at this stage, keeping in mind the global context and local news flow as well?
Yeah, good morning, everyone. I think, the market was correcting and it was down mainly because of domestic as well as global concerns. But I think after this particular specific meeting, Fed's meeting, now the market has completed its correction. We can see one more pullback from lower levels because the fall was like quite deep. From the levels of 22,500, we saw the levels of 21,700, and there was hardly any recovery. But after this particular event, I'm expecting now the market should start pull back to the recent sell-off. It has completed its correction, but in case if we see the market is again dropping below the levels of 21,800, then we can expect furthermore weakness in the market. Otherwise, I am of the view that the market is now moving towards 22,200 or 250. So if there is any long position or if someone is like really interested in taking any specific buy call on the market, then 21,800 should be the final stop loss on a closing basis. For the Bank Nifty, the formation is equally similar. It is much more resilient as compared to Nifty. 45,900 should be the final stop loss on a closing basis. Again, we can expect 47,000 on the higher side. So broadly, I am of the view that from here onward, I think for next few days, we are going to see pullback in the market.
So if you do get a gap up, Shrikant, this morning closer to 21,950, 970, traders could be recommended to initiate longs. And where would the take profit level be on the upside? 22,200 becomes important to take profits?
Yeah, absolutely. Like even if we see the market is opening somewhere close to 22,000 levels, then also we should look for adding some position. Intraday correction, if there is any, then I think that will be an opportunity to add more. 21,800 should be the final stop loss. On immediate basis, as you mentioned, yes, 22,050 will act as resistance. And in the best case scenario, 22,200 or 250.
What about the ideas for the morning?
Yeah, good morning, Neeraj.
Very good morning.
I would like to go with Tata Steel, which is currently trading around 145, 146, and the pattern of the stock is like showing a lot of strength. In fact, if we see the pattern of last 10 days, then it is trading within the broader trading range of 15%, which is unusual. That means something is happening in the stock. And whenever the stock is falling to the levels of 145, 140, we see some recovery in the market. At the same time, we cannot forget that this is integrated player and iron ore prices have again started moving upward after hitting the levels of 97, 98. So I think what I can see on the chart is that the stock is again heading for the levels of 155, 157. on immediate basis. And I think the stop loss level is also very close by. So 142 should be the final stop loss for creating any long positions on Tata Steel. We also like Tata Communications, which is around 1875 or 1890. Here also I am expecting stock to move towards 1950, 1975 on immediate basis. I'm going to say in next 1 or 2 days of time, and we can keep stop loss at 1850 for the same.
Very interesting. Tata Steel and Tata Com. The entire Tata pack has really been suffering the hangover.
I'll just tell you, every show closing,
Tata Investments.
Tamanna makes it a point of highlighting, oh, Tata Group stocks have gone
But
down.
they have been.
I'm
But
not.
they have
No,
been.
no, you're right. But I'm just
Which
saying.
is why, look at
The way
Shrikant's
Samina's
fixed
obsessed about Tata Investments move, price move, you're highlighting.
You're not too far behind on Tata Chemical, just FYI.
The last several sessions you've been.
No, you're not wrong, Baba. I'm just
just
bringing it up.
And I'm just wondering.
We're close watchers.
Why so much punishment for something that they did not do to themselves?
Point well taken.
Nor did they say we're bringing an IPO, nor did they say we're not bringing an IPO. The market has just decided and those stocks are suffering. But Shrikant's two picks today are both Tata Group picks. So I've really found that interesting. But another stock, definitely, that is on our radar is Bajaj Finance. Interesting note out this morning from BNP Paribas. Harsh joins with more details.
Well, absolutely, very, very interesting. A 35% plus upside given by BNP Paribas to current market price. And this is after the stock has gone up maybe 4-5% from the month's low that we saw. So what BNP Paribas seems to be suggesting is with regard to growth, there is absolutely no concern. They also believe that Bajaj Finance is well placed from a perspective that they cater to the more affluent Indian. And as there is a remarkable shift in terms of demography and more affluent people start to come into the funnel of Bajaj Finance, so to say, it should only benefit from this shift in demography that India will go through. They are therefore expecting growth to be in the late 20s all the way till 2030. So extremely strong growth that they're continuing to expect on a very high base. Mind you, Bajaj Finance has grown 30% plus in all 3 quarters of this current financial year on a year-on-year basis, of course. They're expecting that kind of a trajectory, late 20s kind of growth to continue. They're also suggesting in the near term with regard to some asset quality issues, especially in unsecured, they're saying that that's below the 50,000 kind of ticket size, and they believe that this should not be a threat to growth for Bajaj Finance even if this were to continue, and therefore growth will remain as is. They're therefore penciling in, current valuations are at roughly 4.4 times FY25 price to book, which they believe are reasonable, and given historical levels they are reasonable. They are expecting a 5 times price to book value roughly. FY26 9,040 is the target price.
Right, Harsh, there with this BNB Paribas note, which is, I mean, quite, I would say, optimistic on Bajaj Finance. Keen to know Shrikant's views on whether you see that kind of an upside on the charts, or is this really, you know, the rosy picture that perhaps this note is saying?
I think, say, like, Tamanna, at this level, the stock is quite attractive. The reason is because it was around 8,000 levels. From there, all the way it fell to the levels of 6,100, 6,500. And even if we go through with its fundamental asset quality is like stable. Also, the company is delivering what 30% sort of net interest income, which is like something really robust. So I'm of the view that fundamentally, certainly, it is very attractive at these levels. Technically, also the stock is showing divergence, positive divergence. What it means that it is going to shift its previous trend, which was falling. So based on it, I am expecting stock to move towards at least 7,200 in the near term. But in the best case scenario, we may see the levels of 7,800, 7,850, which is also our fundamental target. Okay.
Well, that's the long and short of the initial set of stocks that you need to monitor. Stay on, Shrikant and Nirav. We'll be right back. We head into a break. As we head into the break, we highlight the biggest story of the last 10 hours or 8 hours, if you will, which is Fed Chair Jerome Powell's reiterating that he expects interest rates to start coming down later this year, but is not ready yet to say when.
As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are coming into better balance. We believe that our policy rate is likely at its peak for this tightening cycle, and that if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys.
Back, less than 2 minutes to go for pre-open rates to hit, and we're looking like we're set for a good start at least today. Will it sustain is another question, and whether we will see sort of selling pressures as some of those prices come up. But one sector that I want to focus on this morning is autos, because Eicher and Maruti were the stars of the day yesterday. A lot of I would say in Eicher's case a brokerage note, in Maruti's case fundamental reasons as well. But Nirav, let me start with you. What do you make of a Maruti, and what do you like in the auto space? Do you think that there is a turn coming in?
Yeah, so as we pointed out that I think Maruti continues to maintain the leadership in the CNG segment, and is likely to do so, at least in the foreseeable future. And the product mix has also been changing, and it's been more favorable towards the SUVs. So the overall realizations have been going up. The margin trajectory has been improving. And overall, I think the outlook is improving as far as Maruti is concerned. As far as Eicher is concerned, then I think we are seeing them maintain their leadership position in the premium segment. And Bajaj Auto also, on account of the buyback related announcements, etc., has been doing quite well. So I think the overall picture as far as the auto segment continues to be strong. why just the larger players? We also have smaller players like SML, Isuzu, and Force Motors, which have been doing quite well. For example, Force Motors, they've indicated that all the three segments, whether it is a school segment or whether it is the employee travel or whether it is the tours and travels, all these segments have been firing quite well. Their components business has been doing quite well. Their engine business has been doing quite well. So overall, across the board, I think whether it is the larger players, whether it is the smaller players, or whether it is the auto ancillaries, especially those which are going to supply to the EV space, they have been doing quite well in trade. So overall, we like this space in the medium term.
What about you, Aisha and Maruti? Yesterday, both of them made, for the big gainers on big volumes. Further upside expected. And if you missed the rally yesterday, do they still look good for fresh entry at these levels?
Yeah, for Maruti, yes, we are like specifically bullish based on its technical formation. The reason is because after crossing the multi-year resistance of 9900 in the month of September 2023, we saw a sustained rally in the stock. And whenever there is a multiple resistance breakout we see in any particular stock, after that we saw a long stretched rally. So based on its technical formation, we are expecting stock to move towards 14,000 in next maybe few weeks or months. So it will take some time. But broadly, we are of the view that the stock is heading for 14,000 based on its technical formation. And in case if there is any correction, then certainly we should look for adding positions at current levels, even on dips close to 11,900 or 850. But for iShare, the stock is holding well above the important level of 3,700, 3,800. Based on its near-term overall volume-based activity, we are of the view that the stock is heading for at least 4,200. And the entire space, auto, is also doing well. So I think, yes, iShare as well as Maruti both looks good at current level.
Okay. Well, auto is right up there. Remember, today we'll watch out for some of the auto ancillaries. I wonder how is Samvardhana or Samil really, Samvardhana Motherson trading in the first, actually it's just the first 2 minutes, so we'll give these stocks a chance to settle. But let's see if some of the auto anchs have a good run. What had a very good run yesterday was Praj Industries, was up about 10% in trade. No apparent reason, I couldn't figure out a news flow element which would have gotten this, but the stock was up and about in trade yesterday. Shrikant, you notice any kind of breakout move on the charts or anything specific? We'll ask Nirav the fundamentals as well, but technicals for Praj?
Yeah, I think Neeraj, technically the stock completed its corrective pattern somewhere close to 480 because the stock corrected to 50% of its entire rally that we saw from the levels of 300 to almost 600, 650. So around 475, 450, the stock has formed its base building sort of formation. And after this particular volume-based activity, I am of the view that the stock is again started its pullback to the recent sell-off from the 650 to almost 450, 475. So we can see the levels of 550 or 560 in next maybe few weeks. So yes, it's a buy at current levels. And I think the pattern has shifted from bearish to, I can say, bullish.
A lot of rumors surrounding Praj around some corporate activity. So bear that in mind. But Nirav Asher, fundamentally, Praj Industries, big 10% candle yesterday. Worth investing or you would find better opportunities?
Definitely like to have a look at it because it's a niche company and I think ethanol related equipment maker and they are into biogas. They are working on compressed biogas related projects and a lot of innovative projects relating to bagasse, etc. So it's a very niche and an innovative company and they've got a very strong order book also. And I think this stock ran into trouble when we had these ethanol related developments, announcements which came. And I think as they say that form is temporary, but class is permanent. So I think that would apply to this company. And I think we are seeing a pullback in the stock. And definitely we expect the stock to rally from the current levels.
That's Praj Industries. Shrikant, very quickly, I don't know whether you talked about Tata Chemicals, but after that 8% fall yesterday, would you bet on an intraday pullback on the stock if you get a flat start? Shrikant, we can't hear you. Yes.
Yes. Achha, you are asking about Tata Chemical, right?
Yes.
Yeah, I think, the stock fallen to its 50 as well as 100-day simple moving average, despite the stellar rally that we saw from the levels of almost 900 to 1350. So I think at these levels, again, it is attractive for those who are like positional traders or investors in the market. With a very short-term view, it is very difficult to say because the stock can continue its correction maybe up to 1000 or 950, which is again almost 5% lower from current levels. But if there is a medium to long-term view, then certainly it's a buy because this particular level most of the time acting as support level for the stock. And whenever there is a rally in the market or in the particular Tata Group stocks, we see rally minimum up to 1150 or 1200. So at these levels, the risk reward ratio is quite favorable for positional traders.
Nirav, do you agree? I mean, soda ash prices have only seemed to be moving one way, which is down. Tata Chemicals, of course, gained on back of that Spark report. Fundamentally, enough reason for one to look at the current price as an entry point on Tata Chemicals, or it's an avoid for now?
I think I would like to be cautious on the stock and avoid the stock for the time being. Wait for the quarterly results and the commentary from the company to have a better understanding and then take a position in the stock.
A quick look at your top brokerages this morning. Harsh is joining us on this segment that we do every day. He's curated the top brokerage notes that you should watch out for, might have impact. Harsh, what's on your list?
Well, yes, absolutely. First off, let me start off with MGL. Jeffrey's bullish call on MGL, target price 1540. They've upped their target price from 1515, so it's a 22% upside from here. What they're suggesting is post the 20% correction, MGL looks poised with regard to a possible value buy. They're looking at a margin impact due to the price cut, but they believe that that margin impact will be limited, will be softer because they are expecting feedstock costs to decline as well, and therefore they believe that margins will remain at the upper end of the management guidance. They are also expecting EVs to not make a big dent into the gas and the CNG demand, and therefore they believe that demand will continue to be robust. Also, the acquisition of Unison, they believe that that one is volume accretive and will create value for MGL, and that's also another positive. They're expecting an earnings CAGR of 14% on this one going forward for the next 2 to 3 years. Dividend yield of 3 to 4% also they believe is quite lucrative, and therefore they believe the risk reward at this point for MGL is favorable. The other one that Investec is looking at, in fact, is BSC. Target price 2800 on this one, 40+% upside. They are expecting that the strong print with regard to option volumes will continue on the BSE. The margin miss in Q3 they believe is largely because of one-off 91 odd crore expenditure was a one-off in Q3, and they believe that that may just reverse given that it was relating to Forex, and Forex seems to have declined a little bit in Q4. So they believe that margin stability will be brought through Q4 onwards. And some guidance around that is awaited in Q4 as well. And they believe that that better clarity and better stability should aid the BSE stock. Currently trading at roughly 24 times. They are expecting a potential 40 to 45% EPS CAGR all the way to FY26, target price 2800.
2800. Today's a day for stiff targets, I must say, Harsh. You brought out Bajaj Finance target of 9,000 odd, brought out BSE 2800 odd. Pretty interesting, some of the moves there. But thanks, Harsh, for bringing us that.
Do I sense a hint of skepticism in some of these targets, Neeraj? So the brokerages, I mean, it is always a incentive to have good targets, and it's attractive to investors
and to be able to justify them as well. So yeah,
I mean, who's who's catching anyone's neck if they don't hit it? Think about it. So
No, I mean,
in
the
that
clients
sense,
would probably, but
Yeah.
the limited point is on a Bajaj Finance, a 9,000 in a year seems to be very stiff. For that, the market just needs to do really well for BAF to be able to do this, right?
Tamna, nobody's stopping them for coming back in a few months and revising the target
Exactly.
price. So nothing
So-
stands and
so-
nothing stays.
So there is no huge stiff penalty for getting it wrong. Having said that, we're not claiming that these are wrong.
I mean, BSE is already up 2.5% in pre-open.
Shrikant, any take on BSE?
See, like for BS, it is really tough to say anything because the stock is very close to its overextended trading range and there is hardly any correction. But from the from the gas space, oil and gas space, we like Gujarat Gas, which is currently down, but at the same time, it is very close to its important support levels. And I think if there is a medium to long term view, then certainly we should look for adding Gujarat Gas to the positional portfolio. I'm expecting downside is very much limited for the stock, but at the same time, if there is any pullback, then the stock can easily come back to the levels of 600. So currently it is available at 100 days, 200 days simple moving average, which is a very good entry point for those who like mid-cap stocks to buy and hold.
So Gujarat Gas is definitely
made
a
it,
pick.
Nahi.
Shrikant, of any of these, RVNL in the news today, Jupiter in the news today, any of the rail stocks that you would buy right now?
Yeah, I think, see, all these railway stocks, they are showing some signs of stability. Although there is hardly any recovery even after hitting the important supports. But we like stocks like Railtail, which is currently around 349, 350. The stock is into corrective mode, and I am of the view that the stock is on the verge of forming higher bottom. So at current levels, it's a candidate, and is a very decent candidate to buy and hold with a target of at least 420, 430 on the higher side. We also like RITES, which is around 630, 635. And the stock has completed its correction by hitting the 50-day simple moving average and 100-day simple moving average. So again, it's a good entry point for buy and hold. In case if there is any pullback, then the stock can easily move towards 750 or 760, where it has next leg of resistance. So these two stocks are really good to buy and hold.
Okay, there's from amongst brokerage notes, the Gujarat Gas is one stock, Bajaj Finance is other. There is also an HSBC upgrade on Cummins, and Cummins target price is 3,300. The stock has opened up higher. Nirav, any thoughts on Cummins India?
Yeah, I think it's due for an upgrade basically because we have the new pollution norms, the CPCB norms, what we call the sixth phase of that, and I think that is likely to boost the demand for Cummins products. So I think the commentary which has been sent out by the company has also been quite encouraging. So I think can expect an up move from the current levels as far as the Cummins compressor related business is concerned.
So, another stock very quickly. We spoke about BSE. Nirav, keen to know your views on BSE and MOSL as well. There's an MK note on MOSL. Another exciting target price. How do you see this entire play, because it's based on the enthusiasm in the capital markets fundamentally?
So I think BSE pedigree stocks, I think there's always going to be a scarcity premium. So that is one factor which is going to influence the markets. So I think always such type of stocks are going to be in demand. So that is one factor. And at the same time, I think MOSL, I think, continues to do well because markets generally have been doing well. So I think enjoy the party. That's what one can say.
Okay, enjoy the party. Just bring up the stock price of Wockhardt out here on the screen before we go to our market open. But Wockhardt should come up on your screen. Remember a few days back, NDTV Profit broke this exclusive piece of news that Wockhardt is going to come out with a QIP. The price will come up on your screen. It's up 4%, which suggests that despite the fact that the floor price of the QIP was 5% lower than the price yesterday. No, let's just stick to that, please.
despite the fact that the floor price of the QIPs was 5% lower than the current market price or other closing price yesterday, the stock is up 4% today, which means that the demand for the QIP has been strong. So pretty good going for Wockhardt, and something that we'll talk to both Nirav and Shrikant post-market open. But about 9 seconds left for the markets to kickstart trade. So let's focus on what the Nifty does this morning. We'll also try and, of course, see if IT stocks lead the charge higher. So that will be the other interesting piece to watch out for. But here's how the markets are starting off this morning. In the green, 170 points as per the implied open, 22,000. Remember, there's a key level. There's a lot of call concentration here. If the markets stay convincingly higher, if they do, then there might be case for short covering as well. Mid caps and small caps as well as Nifty IT should come up on your screen. And let's see what those indices are doing. Mid caps 1.28% higher, small caps 1.37% higher. Strong show by the broader markets. They were beaten down also badly, and Nifty IT is doing better than the Nifty. That's the key point. Look at the differentiation, 0.74 versus 1.15. Bring up the heat map and let's see if IT stocks are right at the top of the pile or no. Well, metals are and OMCs are. So Tata Steel 2.5% higher. Remember, commodities across the world have inched up. Precious metals, non-precious, everything has gone up. BPCL continuing from yesterday's up move. Today there is an upgrade on IOC by Citi as well. But it's metals first up and then IT. So Wipro, LTI, HCL Tech, all of them higher. So, well, good spotting by Tamanna on the trade setup, because these are the stocks that are actually leading the charge when it comes to the weightages. Not too many losers. That's the other key point to notice in the session today. Well, Metallica with a bit of tech twang. That's how the Nifty 50 Open seems to be today.
Well, whatever it is, it's music to the ears.
You bet.
On a day when the market's looking very, very good, and thanks to Powell G this morning. So we're having a good day, no issues. Broader markets also doing very well. Specific stocks that we've been talking about since morning. So let's pull up and see how they're doing on opening. Rail Vikas Nigam, lowest bidder for a railway project for Southeastern Railways this morning, 3.5% up. Jupiter Wagons has made an interesting acquisition. They're buying something called Bonotrans India, which makes wheels, about 3% up. RateGain has has bagged a big order. It's selected for a SaaS solutions for travel and hospitality, US-based company. Again, 3% up. Not really in the rail stock focus category, but yeah, RateGain's doing well. Polycab, I wanted to see what happened, because this was some news flow which came in that they were the target of a ransomware attack. Has not made any difference right now. 1% up. Patanjali has been seeing a negative news flow. They've gone to court and apologized for their misleading ads. They've been summoned to court. Doesn't matter today, 1% up. The mood is good. The mood is good is what I would say. Mahanagar Gas, good note by Jeffries with a target price of 1540. Just about 0.5% up. That stock has also seen quite a bit of run up. Aarti Drugs again had, I would say, bad news gone. So permanent reversal of a closure order from Gujarat authorities, the Gujarat Pollution Control Board, on their Saregam plant, and that's definitely a positive for them. So that's about nearly 3% up. And Wockhardt will revisit once again. Neeraj spoke about it at the opening. That's an NDTV Profit exclusive. My colleague Smriti broke it late last night, and that QIP seems to have done well, about 2.5% up. So a good day today for the markets, Meena.
Yeah, it's Wockhardt is going to be interesting to see. Remember, the book was fully subscribed, on back of which you are seeing a move up on Wockhardt, 2.5% gain on that stock. Apart from that, lots of big movers in the broader markets coming in on brokerage upgrades. So you've got IRB that's topping the list with a 6% up move. Kotak Insti has upped the target price on IRB Infra, on back of which the stock is up 6%. You've also got Avenue Supermart, an upgrade coming in on that stock too, with a 2.7% up move in early minutes of trade. IOC, the brokerage has maintained its stand, but said current weakness is a good opportunity to buy, on back of which, joining the rest of the OMCs, IOC trades with a gain of nearly 2%. You've also got JB, Auto Ants has been doing quite well. We've been talking about that all through this morning. JBM Auto is up 6%. You've got PFC that's up 4%. SAIL, Tata Investment Corp, for a change this morning, is not hitting lower circuit. Neeraj has a smirk on his face, but the stock is up 3.5%. So taking a break, I think, yeah, the Fed came to the rescue of Tata Investment. The stock trades with a gain of 3%. Pull up Tata Chemicals, Tata Communication while we're at it. Let's see what the movement there is. Tata Chemical as well after an 8% sell-off yesterday, seeing a 2% up move, and Tata Communication trades flat. Rico Auto is up 6%, JBM Auto is up 5%. So anything in the auto ancillary pack is actually doing really well. Motilal Oswal continues to do okay, it's up 0.5%. Electra, which sold off yesterday, is up 3%. Muthoot Finance is looking good. REC, after seeing some pressure over the last couple of days, is finally seeing a little bit of an up move this morning, 4% higher, but the counter, remember, has moved down from 485, 490 to levels of 420. So this recovery coming in after seeing weakness over the last few days. All in all, it's actually looking pretty good. On the sell side, very few losers and very small cuts. So you've got Praj that Neeraj was talking about this morning. Remember, the stock was your big gainer yesterday. Some profits off the table this morning. No major cuts there, but maybe a technically consolidating after that big move yesterday. So 0.7% low on that one. Ipca Labs, Castrol India are some of the small losers, but nothing major in terms of cracks. The gains are looking good. It's a broad-based recovery after we've spent the last few days consolidating in trade. Bank Nifty also not doing too badly, performing in line with the benchmark. No outperformance there either, but remember, it's been 6 straight days of lower closes on Bank Nifty. Shrikant, you want to come in on the opening? We've got to start about 22,000. It's tiptoeing around those levels. If you have to initiate a trade right now, do you recommend it?
Yeah, say like the way it opened with a gap, there is always a chance that intraday correction, we may see a correction during the day. But in case if there is a positional view of at least next 1 week, then even at current level, it's a buy with a stop loss close to 21,800. I'm expecting minimum 22,200, 250 on the higher side. So there is like 1:1 sort of risk reward ratio. But if there is any correction, then again, it will traders will get opportunity to buy more. So yes, it's a buy because I'm expecting now the market has started its pullback towards 22,250, or in the best case scenario, maybe 22,400 again. Again, if we see the overall setup of the sector-specific activity, then banks as well as IT, both these indices are reversing from their immediate lows. So again, there is also downside is limited. So broadly, we are of the view that yes, if there is somebody is really interested in buying with a positional view, yes, it's a at current level, it's a buy.
Bring up Wockhardt and just see if it's sustaining that 4% uptick that it showed in the pre-open session, or doing better maybe. Now 3%, but not bad considering the fact that the floor price was much lower. 2.5% higher now. Now, Nirav, there is a drug in the offing. They've done this QIP as well for reasons that at least not explained thus far. But I doubt that, I mean, aside of debt restructuring or debt payment, there could be other uses maybe for capital purposes, etc. How is Wockhardt placed fundamentally, Nirav?
So unfortunately,
okay, you don't track it.
There's been very less information which has been available as far as Wockhardt is concerned, and the kind of stock movement which we have seen, the stock was at 180 levels just about a year back, and this phenomenal run which we have seen in the stock. And in December, we had this announcement that the company has completed the phase 3 clinical trial for the pneumonia-related drug. So I think after that, we've started seeing developments in the stock, and now this fundraising activity essentially for the promotional purposes of the drug, etc. So I think we would be very hesitant to take any positive call on the stock because simply because of lack of information about more developments with respect to the company.
Got it. Okay, but Shrikant, anything on the charts for Wockhardt?
Yeah, Neeraj, the overall sentiment for the stock is quite bullish. Whenever there is a correction in the stock, we are seeing a good amount of buying interest in the stock, and stock manages to surpass its previous or swing high. So this time also, after hitting the levels of 500, again, the stock is moving upward. And there are like positive developments in the stock since last almost 1 year. And this time also, the QIP price is just 5% lower from the current price, which is, again, I'm telling you, bullish for the stock. So I am expecting stock to cross its previous high of 620, 630, and eventually we are going to see the levels of 750 or maybe 800, which was its 7 years or 5 years highest level for the stock. So broadly, we are bullish on the stock based on its technical formation, and I think even at current levels, it's a buy.
Take on Wipro and what's happening with Wipro. You're seeing, of course, the Fed rate cut hope momentum across IT, but Wipro specifically because of a management change at Capco, their largest acquisition to date, which hasn't been too hot so far in terms of its performance, has seen a pretty good morning. Nirav, I'm wondering if you're tracking this and what you feel about Wipro right now?
Yeah, I think the recent changes definitely augur well for the company. So we can expect a good upside from the current levels for Wipro.
Nirav, we'll let you go on that note. Thanks so much for taking the time out and being with us. Shrikant Chauhan, very quickly before we let you go, you've given us your top ideas, but after open, 10 minutes into open, you've seen some of the price charts as well. One stock to monitor for the day.
I think in that space, we like BHEL, Bharat Heavy Electricals, which is around 230. The stock opened up with a gap, and again, it has completed its immediate corrective pattern. So based on its formation, on immediate basis, we can see the levels of at least 240 to 42. So here also, we have a buy call with a stop loss at 225 on the downside.
Shrikant, we'll leave it at that. Thanks so much for talking to us today. I really appreciate your time. Just before we hit that break, it's important to highlight this note that Morgan Stanley's come out with, wherein they say that it is India's decade. So the first thing is it's an emerging market note, wherein they are saying that multipolar world trends are supporting FDI and portfolio flows, while positive demographics and success in macro stability, I think, underpins some of the EMs, and particularly for India, a strong capex and profit outlook. They say we see a secular trend towards sustained superior USD EPS growth versus EM over the cycle, with a young demographic profile supporting equity inflows. This is a very important point, by the way. They are saying that valuations for India are at a premium, but in their view, this is warranted by a superior EPS CAGR that India has shown and will see. They've highlighted Q3 and said it's a 23% CAGR, if I'm not wrong, will come in. Maybe it will come in, but they're effectively highlighting that even if you look at the recency bias, or if you have a recency bias, the EPS performance thus far has been northwards of 20-23%, and therefore the valuation premium that India is demanding is strong. So net viewers, what they're saying is that they like Japan and India within the Asian pack as amongst the most important pockets to bet on. On that piece of news, let's slip into a quick break. We are back with a conversation with Shyam Metallics. Metals are up, so talk about that. And then a bit later on, talk about the oil marketing companies.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
This
listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to...
Hello and welcome. We have with us a very special guest, Brijbhushan Agarwal of Shyam Metallics and Energy joins in. Remember, this company has been on the radar for a lot of the big private investors and also caught the fancy of retail investors. Mr. Agarwal joins us to talk to us about what the outlook looks like, how's business, and of course, the big plans locally and globally. Mr. Agarwal, thank you. Thank you for joining us this morning. I'm going to start with the most recent news flow on Shyam Metallics, where we had the business update from you, where your sales volumes have actually looked really good. So there's been a sharp rise in sales volumes, but realizations are actually down across all segments. You want to elaborate on that and tell us why?
Yeah, very good morning. And as your first thought process about the business, it's very exciting. And I would say there's no complaint with the kind of changes what we are seeing in the economic policy, the kind India is shining, the business is doing very well. And related to the sales realization, yes, this is going down because the major pricing is being controlled by the international price, and we are seeing there is a steep fall in the raw material. So there is some kind of a correction which is happening in the finished steel on the product side. So it's nothing. It's maybe 30, 35 days or 40 days carryover of the high price of inventory which affect. But I would say from the data point of view or from the point of view, the overall margin, it is pretty decent.
And Mr. Agarwal, just looking ahead, right, in the next couple of months or couple of quarters, so a little more out there, would realization stay at these levels, or we could expect an improvement as early as next month?
See, I see now we are at the election quarter. I don't see the realization should further improve because there will be a lot of concern on the from the supply side and a lot of concern on the election quarter. The general issue will be there. So, but the margins are going to remain, and I also don't see any kind of a steep correction in the pricing as well.
Okay, so no steep correction anticipated, and margins will maintain because those have also gone up quite substantially quarter on quarter. I'm going to be very brave and ask you, any upside risk on margins going into the next few quarters? And also you did talk about how it's election time. Usually at this time, business does slow down until and of course elections are done with and policy continuity is in place. Fair assumption for me to make that the next quarter potentially could be a little more subdued in terms of reporting?
See, business is doing pretty decent, and I don't see a major changes in the next quarter as well. Because, we have to understand, during the election time, there's a lot of disruption in the logistics sides. And, the consumption of the steel also depends on the people, down the street, the workers, the laborers. So that is only a kind of a hitch. Otherwise, everything is good. The order booking is very good. And we are seeing a very good demand, extremely good demand in the domestic market.
Can you quantify the kind of growth you're expecting on your top line, sir?
For this year?
Yes.
Oh my God. So whatever we had, stated before, whatever we have, it's almost going to be in the same line. We should be doing in the range of around 8 to 9% this year.
And that, of course, is going to be consistent. You don't anticipate any sort of upside on that, huh?
So this coming year is going to be a big time change because a lot of capex, what we did, almost 4,500 crores capex we did in more than 2 years from now. So most of the plant will be commissioned in the coming year. So this is coming year is going to have a good steep, hike on the volume as well on the revenue side.
We talked about how realizations were slightly weaker, but if I look at your margins year on year, there's an 85% increase, and quarter on quarter also is an improvement. Further improvement is expected, Mr. Agarwal. Any sort of ballpark guidance in terms of what margin growth can we expect from your company?
Margins are, we are focusing more on the B2C market, and whatever new expansions we have done, it is majorly either the backward integration or the forward integration. So forward integration is enhancing our margins and creating more value to the consumer directly. So I think we have done in last 2 years, we have done a major issues. We will not see that kind of growth what we have seen in the margin from B2C. But on an average, you can say we should be doing around 12 to 15%.
Okay, so 12 to 15% is the range that you're looking at for the rest of the year. I want to talk to you about your greenfield expansion project for cold rolling mill in Jamuria in West Bengal. I believe that's got an approval for PLI benefits. What is the quantum of that, sir?
We'll be producing around close to 4 lakh ton, and which we plan to commission this plant middle of this year.
And so the capacity will come on stream as early as mid-year?
No, third quarter, since we'll be commissioning in the second quarter. So from the third quarter, it should get regularized. And by end of last quarter, we expect that, we should be able to streamline to the extent of around 80-90%.
Right, and how is exports looking right now? You do export to 7 countries from what I understand. Big conversations happening outside India as well. And how much does exports contribute to your top line, and what are the margins there, sir?
So presently, I would not say that the export market is very encouraging, but it's not bad as well. Like earlier, we were doing close to around 18 to 19%, but this year, I think we should be doing around 10 to 11%. So there is a steep, the reduction in the international businesses, because of the geopolitical situations and a lot of issues which is happening around the world.
Right, we talked about infrastructure, we talked about real estate. What I forgot to ask you was EV. I mean, that's another upcoming space, and there's so much of conversation around that. Are you in talks with partners, collaborators for the EV business manufacturing in India? Can we expect anything from Shyam Metallics on that front?
Very interesting question, but I will not be able to discuss in detail, but I can just brief you. Like all the top battery manufacturers, we are in touch with them. We have done some kind of a confidential agreement on the product development and long-term supply. So this is this is one of a very unique product of Shyam Metallic, what we have been always talking, and we see we will have a good presence in the time to come in the EV battery and all the battery, plant which has come up in the country under the PLI scheme, like they've been, regulated to buy more than 70%, 65 to 70% of the stuff from India. So we will have a good value,
How significant can the contribution of this be to your top line over the next 3 to 5 years? And I know it's early days, but internally, what sort of projections are you working with? And I'm not talking about the next few quarters now. A little more long term, the next 3 to 5 years. How significant can this be to your top line?
See, this is very interesting. In aluminium, we are doing a backward integration. Also, we are putting up a green cycle, green recycle aluminium plant. So the present battery foil raw material also we will be making as a green alloy, which is also going to add a lot of value to our business. So this is also going to be one of a very unique product, and is going to be a backward and forward integration. Also, we are planning to enhance the capacity in the battery foil. So once we are through with our board approvals and all things, we'll be declaring it officially.
You know, I want to ask you very quickly about the Mittal Corp as well, which you acquired towards the end of last year. You usually land up doing a lot of, ramping up at that unit. You want to tell me what is happening there? Any additional capex in this company that you've acquired? And if yes, what can we expect in terms of numbers over the next couple of quarters?
First of all, I would like to brief you. Mittal Corp was a very strategic buyout for us. Number one, the raw material, the ingredient, what we make, what is used to make in stainless steel is a forward and backward integration of our existing plant. We have taken over the Mittal Corp this year, and today we are operating. This year we'll be operating at around say 30 to 40%. Coming year, we expect that we should be able to ramp up to around 70 to 80%. To your next question, we are going with a high value business in the stainless steel. As you know, we are going into the stainless steel wires, and we are planning to get into the engineering applications like stainless steel bars and special sections of the stainless steel, which has a huge international market, and India has as well is developing a lot. Also, we are focusing on some railway segment in our stainless steel business. So this is a good plan. And next 2 years, I feel we should be able to put everything, on the street, and we can very well enhance extremely good value in our stainless steel business.
Right. Just going out maybe 1 to 2 years from now, there are a couple of brokerages who believe that contribution from additional revenue streams such as color-coated steel, pig iron, and downstream steel products could actually lift your EBITDA quite significantly. Maybe FY26, really. Is that a possibility? And if yes, what is your FY26 EBITDA target?
Oh, see, we can't discuss all these things, but yes, I see since we are commissioning the major expansion this middle of this year, 26 is going to be a very interesting year, and definitely our investors will see a huge exponential, in the terms of revenue. And yes, with the top line increasing, the bottom line also will increase. And the most beautiful thing, if you see, it's all backward and forward integration from B2C and value addition. So we will see a very different, Apple over and above what we are seeing now in the company. And it will really have a good edge on the specialty product side, specialty alloy side, aluminum side, stainless steel side. So if you see, this is going to be a only company in the country with having so much of unique apples and portfolio in the metal space.
Right. Also, you did launch a QIP, right, to the tune of 1,380 crores. So your net cash position looks very healthy at this stage. Any plans to sort of, use that? I mean, what is the cash utilization plan that you have in mind? Because this is significant.
So, no, we have a good treasury, but this QIP money was, utilized to reduce our working capital and, other short term. So in the time to come, since we have a good treasury also and we see a decent EBITDA, so new capex plans are going on. So once we are done with our internal review and board and all, we'll definitely would love to share with you.
Sensitive are your margins to coal prices? Because, I mean, that also looks very volatile. I know in Jan that was much higher. We look at them now, coal prices have reduced. Any measures to hedge that? Because I know that's a key, it's a key sort of input cost that goes in for you.
See, coal is a very important cost because, we have a huge capacity of power, and in steel making, as I have rightly said, the most interesting thing in our business is like our dependency on the Indian coal. So we are seeing there is a huge correction in the coal prices. So we will definitely be beneficial. And in the time to come also, we are seeing the capacity in the coal India and the supply of coal in our country is growing exponentially. So I don't see any kind of a, major correction further in the coal prices, because I think today whatever, prices are there. It's almost at the very, very reasonable, bottom level. And in the time to come, also for next 1 or 2 years, at least for 2 years, I don't see there's going to be a major change in the coal prices.
So you're comfortable at these levels, sir. Is that right?
I feel so, I feel so because, we are totally dependent on the Coal India production and the.
Yeah. So
and the
if there is
strategy.
operational efficiency, there is an upside risk to your margins then. That's a fair assumption if coal prices stays at these levels.
Yeah, but whenever the coal prices goes up, the prices of the metal also goes up. So there are sometimes the risk, but we say that it's very sustainable and very, very consistent margin business because maybe for 30 days or 60 days the cycle changes, but majorly it doesn't have a big impact.
Okay. Also, very lastly, and I have to ask you this, any more acquisition on the cards? Because at the pace you're growing, and like you said, the demand is not going to stop anytime soon. You're venturing into the EV business. There are PLI benefits that you're going to avail, and your books are quite healthy. Any more acquisitions, anything that you're currently eyeing, brownfield projects on the anvil?
So presently not very serious on the table, but yes, our media team is evaluating a lot of projects and we are seeing if there is any strategic value what we can add to the investors and to the organization, then only we go more deeper. But since you are seeing which we have a lot of capex and a lot of expansion for next 2 years, what we have already declared. So not very, very serious, but yes, I would say we are looking for a few acquisitions, but not majorly on the larger side, mostly on the strategy side, and we are focusing more on our brownfield expansion.
And no risk to delay in commissioning, right, at any of these capacities?
No, not at all.
Okay, lovely. Thank you very much, Sagrawal. Good luck with business. It's looking good for you. Enjoy this, and we'll hopefully see you soon.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dream?
Well, Welcome back. You're watching India Market Open. It's turning out to be a pretty solid day of trade for most markets across the world. India is no different, holding on to 22,000 for now. But it wouldn't be a surprise if we see some profit taking in the second half of trade. Broad-based rally largely. OMCs, they were gaining yesterday, they're gaining today, but it's been so news heavy in the last couple of months for the sector. Probal Sen, Senior Research Analyst, Oil and Gas Sector for ICICI Securities, now joins in. Probal, hi, good morning. When we spoke about 6-7 weeks ago, we talked about how it was getting difficult to go back to the room and review your target price on these OMCs because the surge was unprecedented almost. Fast forward 6 weeks, it seems like these OMCs have been on a downward spiral pretty much, today being an exception. Where do things stand right now? Looking good, looking bad? Is OMC a buy at these prices?
I would say that probably, people will calibrate their entry levels at this point of time. Certainly the reduction in fuel prices by 2 rupees came at just the time that after a prolonged period of softness, the crude and product prices both internationally have started to actually rise up again. So to that extent, obviously the marketing margins, for retail fuel certainly are likely to see a downward pressure for the next couple of months. Our core assumption, of course, remains that, given the timing of the cut, we would not really build in any fuel price increases till the election is over. Post which there could probably be a, more normative period of margins that once again begins. So to that extent, one would say that for the next few months, the stock may move sideways. Yes, there could be a uptick here and there, but my sense is that for sustained outperformance, one will probably have to look at a 6 to 12 month period and specifically the closure of the election results to sort of see a normalization in terms of retail margins, which in any ways obviously is a very important factor. The other aspect is that if you look at the way that GRMs have behaved, Singapore GRMs have also softened a bit back to about $6.5 levels in the last couple of weeks. While we do expect that the market will get tighter, and frankly, all data that we look at in terms of demand growth for crude, in terms of economic growth forecasts being upgraded, and supply continuing to remain restricted specifically from OPEC Plus suggests that even refining margins could actually see a little bit of an uptake. But as of now, given that Russian crude is becoming increasingly difficult to sort of, procure, given the kind of sanctions on specific vessels and shipping lines that can transport the crude, issues related to payment, if you put that together, the kind of clear advantage that Indian refiners enjoyed over most of FY24 with respect to Singapore benchmarks, that may come off a bit. So I would say that I'm a little bit cautious from a near-term perspective, but our long-term conviction, specifically on HPCL, I think completely stays unchanged. Our sense is that FY25 and 26 will probably see earnings upgrades on the street. We remain about 20 to 25% ahead of street estimates if I look at my consolidated EPS estimates. And that is predicated on a very simple logic that their refining throughput alone will probably expand by about 30% in 25 through the Vizag refinery commissioning. And from a consolidated level, you would add 9 million tons of effective capacity from Rajasthan sometime in FY26. And when you add to that our conviction that normalized retail margins will persist at about 3 rupees a litre over 25 and 26, I really think that the stock can continue to outperform from a 12 to 18 month perspective.
Probal, your EPS estimates are higher and fundamentally the stocks should do well. Would an overhang of higher crude or government intervention keep them subdued, or do you think this is just the great time and the right time to go out and buy them?
As I said, I think the fact is that the extent of the price cuts were fairly reasonable if you really look at
what
it.
If there is, Probal, sorry, what if there is more that were to come? Could that overhang keep them subdued?
Yes, absolutely. If there are more price cuts that are sort of pushed through, given that diesel is already at just about break-even EBITDA level, as far as we are concerned at current prices, absolutely, we would be forced to sort of revise our core assumptions. does not look to be likely because the window for probably promoter-driven actions in fuels is gone since the election dates and schedule has already been announced and the code of conduct sort of comes into play. And my sense very clearly is once the election is done, you would probably have a much more normal course of business that should return as far as retail fuel pricing is concerned.
Well,
Anything
sure,
changes
these are... Sure, well, these are local factors and elections clearly is the big event. I don't think we are talking about this or worrying about this enough. And I feel like crude could be that ugly surprise that could be thrown at us in the next couple of months. If crude does go out to trade about $90 a barrel, if fuel prices remain where they are, a fuel price cut cannot be coming our way, even post-elections. In that case, what happens to these OMCs? Because on one hand, you've got lower crude price, you've got crude prices about $90 a barrel, which is highly uncomfortable, I'd imagine, right? So is this something you're watching out for too?
See, fundamentally, if you look at where crude is today versus where marketing margins are today, what you are talking about in terms of crude getting to about 90 odd levels, that translates into an additional $4 to $5 of prices. Let me assume that international product prices also rise in the same proportion. Every dollar increase without a change in corresponding prices translates into a 52 to 53 paisa per liter hit on the margins. So effectively, yes, if crude prices were to rise and continue to stay at, let's say, $90 levels, and there is no pricing action that is allowed, even post the elections, and I keep qualifying that. I'm anyway saying that till June, in any case, there is a hit. So therefore, first quarter FY25 earnings could obviously be under pressure, given the trends that we are seeing. But post that, if price increases are not allowed and no action is taken, then obviously, there is a hit. And both, diesel or anyways is at close to EBITDA levels right now. Petrol, which has a little bit of a cushion, that could also see that cushion go away. And that is obviously a significant 15 to 18% hit on earnings that can happen. Having said that, the kind of strength that you're talking about can also be accompanied by a corresponding improvement in refining margins. And therefore, it's important to remember the equation that we tend to sort of look at, that every rupee per liter cut or increase in marketing margin has to be met by anywhere between $1.3 a barrel of GRMs in the case of, let's say, IOCL, to about $2.2 a barrel of GRMs in the case of HPCL, to keep gross margins at the same level. And that's why the expansion of Vizag refinery is also important, because by FY25, that number of 2.4, which is prohibitive today, will probably come down to somewhere under 2 and creates a little bit more stability, as long as the crude increase is also accompanied by a corresponding increase in refining margins, which helps offset the hit from marketing. All of this with the caveat that we continue to believe that the regulatory interference and regulatory intervention in fuel pricing will definitely go away post the elections. Therefore, if prices continue to stay high, there would be an upward pricing action that can happen in petrol and diesel.
Got it. Prabal, thanks for putting that into perspective. Really, really appreciate your time this morning. Watch out for OMCs. Prabal Sen believes it's a pocket that you should seriously consider with all the assumptions around it. It's a wrap on India Market Open. Thanks for tuning in. But up next is Talking Points, so stay tuned.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to NDTV Profit. I'm Neeraj Shah, and let's take stock of what the markets are doing and also a new listing Crystal Integrated is about to list. But first, just a very quick mention of what the indices are doing as we speak, and a rub of green, of course, on the screen today. So it's a good show by the Nifty, 0.75 points. It's sustaining that level of 150 to 175 points, which is actually a really good thing. Now, on such a day, Crystal Integrated Services has listed the 300 crore IPO. Was subscribed about 13 times. It's a provider of facilities management services for healthcare, education, and other things. And the listing price will come up on your screen, about 8% higher. So not a bad listing. Remember, companies which have not had a good subscription have corrected, but the ones which are decent subscription have done reasonably okay. And I think Crystal Integrated falls in that list. That's the point. Okay, thanks for tuning into Talking Point. I'm your host, Neeraj Shah. In the case for a chat today, well, after the Fed's decision that has come out, you can't talk about anything else but the possibility of rate cuts. And would rate cuts in the second half of the year, consecutive as they might be, make emerging markets an attractive destination or more attractive? That's the first point. We talk about whether private capex recovery is underway or no. And when it becomes underway, would it help select facets of the market? Our guest today has arguably been constructive on BFSI. We talked to him about whether there is more in store for BFSI, or rather whether 2024 will be a year wherein BFSI stocks can finally show or prove their mettle. Our guest today is Dheeraj Agarwal, MD of Ambit Investment Managers. Dheeraj, great having you. Thanks for taking the time out.
Hi, Neeraj. Thanks.
Dheeraj, can't not talk about what the Fed said, leaving the case for 3 rate cuts unchanged, which was a bit of a surprise to many. And Jerome Powell also talking about slowing down QT at some point of time in the year. What did you make of the commentary, and what would it mean for emerging markets like India?
It's clearly a dovish pivot in this particular commentary as compared to the last few commentaries coming in by Fed, which has been slightly on the hawkish side, I would say. And I would add slightly, because it's not that the Fed has ever indicated that they will not be going into a rate cut cycle, but they've always maintained that they wanted to see inflation sustained at their target rate of roughly 2% before they're actually going for any rate cuts. And this was a little bit more specific guidance that markets can expect 2 to 3 rate cuts, maybe 3 rate cuts in the second half of this year. So certainly it is a dovish turn, and the impact of that we are seeing on the emerging markets all across this morning, including India. This certainly removes one uncertainty, because 2023 we started with the markets expecting rate cuts in second half of 23. It did not happen. 24 we started with expectations of rate cuts as early as March. It got pushed out to June or July. So this is the first time there's a little bit more certainty. So more than the cut itself, I would say it's a certainty of this event happening rather than a risk of it getting postponed yet again, is what the market is happy about.
Got it. Dheeraj, sometime at the end of last year, risk assets started factoring in that there will be these rate cuts. Then there's a doubt that crept in the first couple of months, also showing in the way the yields have behaved recently. I would only want to understand from you, what do you think the stance of a foreign portfolio investor might be? Because hitherto, we've missed FPI flows into India in a meaningful way in the last 6 months odd, give or take a few sporadic instances. Does the US economy performance, does Japan's policy normalization, and does a potential troika of rate cuts from the Fed alter the FPI stance in any fashion into India?
I don't think so, honestly. So FPIs have been struggling with one basic variable in India, which is the macro looks outstanding and the micro is a little mixed. And second, within the whole microsphere, wherever there is high confidence in terms of earnings delivery, the valuations are a little bit of a concern. So I don't think any of these factors go away. So some of these macro variables are very good to move the markets on a short-term, near-term basis. But once you zoom out and then once again you start focusing on what the earnings delivery of the economy is. And on that front, I've maintained that for this year, the markets will be non-linear. And when I say markets will be non-linear, I basically try to imply that markets will be very volatile through 2024. And the primary reason for that is earnings performance of the market. So last 3 quarters, while Nifty earnings have grown at 23-24%, sales growth is only 5%. And bulk of the earnings expansion is coming through margins. The positive impact of the falling WPI will start to fade away very, very soon. And if sales growth doesn't pick up, we have a slightly choppy earnings season into the coming quarters and hence the choppy markets on our cards.
So is that the base case, that the optimistic numbers of FY25 on the EPS growth front might actually come under question?
Yes, that's my base view. That the optimistic earnings estimates of FY25 will keep seeing cuts. 5% sales growth is far too weak. And remember, this 5% sales growth of the previous 9 months is despite a 9% nominal GDP growth. So Nifty sales growth is lagging the nominal GDP growth by a good 400 basis points, which is not a good sign.
Why would that be happening, Dheeraj? Just trying to understand this.
2 possible explanations for that. One is if you listen to most of the consumer companies' commentary in the previous results season, almost everybody said that the smaller regional players have bounced back very, very strongly and taken market share away. And I'm extrapolating that a possible reason what has given fillip to the smaller regional players bouncing back is in the last 6 to 8 quarters of cost benefit for listed companies, instead of passing that benefit onto the consumers, the companies chose to increase margins. So just to give you an example of Unilever, just for an illustration point, because Unilever is the largest consumer company in the country, over 4 quarters, the gross margins have gone up by 900 plus basis points. Now, at those kind of margins, regional companies are viable once again. So the smaller regional companies went through this whole pain of winding down a little bit because of formalization in GST, but now they've got their act together in terms of getting more formal. And with this additional booster margins, they're profitable again. So some amount of market share is being lost to unlisted players. That's possible reason number 1. The possible reason number 2 is the K-shaped of our economy. So luxury is doing fantastic. Mid and bottom is probably still struggling to some extent, which basically means that a large section of a listed space, which is exposed to mid and lower segment, are still struggling.
Fair point. Could there a case be made for mean reversion for this as well? I mean, you're right. I mean, base consumption has struggled, staples has struggled. So I'm kind of making a segue into consumption, if you will, Dheeraj. But do you think a mean reversion could be, a case could be made or predicted, or would you rather wait for evidence to show up on the screen?
I mean, honestly, I would rather wait for some evidence to show up on the screen because, I mean, it's easy to take a mean reversion call if the valuations have reached a level where they're clearly in the cheap territory. And then you can say at these valuations, even if I have to wait for a few quarters for a mean reversion trend to restart, it's fine. But that's not the case yet. So I would rather wait for some signals.
Point well taken. Thanks for that insight. The other one, Dheeraj, that I want to talk to you about, and there's this Morgan Stanley note today, Asia EM note, which speaks about, they're saying that it's India's decade and India and Japan still remain the preferred markets, etc. And of course, their considerations are very different than what a local managers would be, but I'm still trying to understand. The argument is that there is it's a good domestic alpha opportunity because private capex finally seems to have entered a clear upcycle. We've been missing private capex for a long time now. I would love to understand, what are your thoughts? I mean, your and Ambit's thoughts when it comes to private capex. Has it taken off to your mind, or is the proof still missing?
No, it's picking up. It's picking up. So on this whole capex front, I would like to put two things on the table. One is, it has been picking up. This has been a capex-driven market. But at the same time, one should take cognizance of the fact that the capex growth or the private capex growth is not as strong as what the headlines make it out to be. So they're offsetting impact. So even on the government capex in the last few years, while the government budgeted capex has gone up very, very strongly, the PSU capex has been a little bit under pressure. So if you consider public capex as PSU capex and government capex combined, the growth is more like single digits, but it sounds a lot more because the on-budget government capex growth has been almost 23-24% in the last 3 years, 17% budgeted for FY25. So capex will pick up undoubtedly. The capacity utilization ratio for India as a country as a whole is reaching 77-78%. At that point of time, we have no choice to start reinvesting. So yeah, we are optimistic on private capex, but just temper it down in terms of what extent and size and the strength of the whole capex.
Got it. And okay, and Dheeraj, just before we slip into that break, so the headline number not that strong, but a bit of a pickup. Maybe the pickup comes in. I was looking at a note by Pranjul Bhandari of HSBC, who said that in select cases, and I wonder if your view is the same or similar, in that some of the capex that is happening in sectors wherein the initial spurt is not as high as maybe what will come about in the next 2 or 3 years. So both FDI will come into some of these sectors, and the resultant up move in capex over the next 24 months on the private side would be thick and fast. Could that be possible? And could that have a multiplier effect? Sorry, that's my main question.
Yeah, see, the capex will certainly pick up. So both in terms of capacity utilization number, which I gave, as well as some of the new sectors that we're building, like semiconductors, EV, etc., where new money is coming into the ground. So capex will certainly pick up. We will continue to be sort of a capex-driven economy for the next few years. And I would just link it back to the consumption discussion that we had a while ago. So, mathematically, and we have seen that in the 2003 to 8 cycle as well, when the capex growth is picking up, the consumption growth tends to take a backseat. Anecdotally, why does it happen? Because a lot of consumption and capex in the Indian context, the way our national accounts is defined, the household savings and household consumption, a lot of it is actually goes into businesses as well. So when there is a tendency, or when there is a positive bias towards the economy about reinvesting more in your own business, many people just tend to postpone consumption, whichever areas it can be postponed, to be able to free more capital for investment. So there's always a little bit of a trade-off between I and C. So I would say that within the GDP component, I will continue to grow at double digits, which is what it has been doing in the past, which will put a little bit of pressure on C for the next few years as well. That's high likelihood.
Okay. Sorry, just a follow-up. I'm tempted to ask this to you. So would you believe the bottom end of the C will suffer, or the premiumization which has held out for the last 3 years post-COVID will come into question?
I think premiumization is probably shielded.
Okay, shielded. Okay, fine. Okay.
At that segment, even the high ticket spends is not that large percentage of expenditure of
Got it.
The super rich, right? So that just continues to go on.
Got it. Interesting point. Dheeraj, stay on. So much more to talk about. Lovely thus far. Just stay on. We'll take a quick break. We have to take one. Come back and talk about some of the themes which have been, for lack of a better word, lackluster in the recent 12 months. Try and see if there is, talk to him about whether there is a pickup possible. Stay tuned.
presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs. Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy.
Back on Talking Point right here on NDTV Profit. Well, we told you first on February 26th that Workhard, the company, was looking to raise funds via QIP. The announcement has now been made. My colleague Smriti, who broke the story then, has more details. Smriti, good morning.
Good morning, Neeraj. Yes, we broke the story here first. Now it's public that the company is looking to raise 350 crore rupees. Now that's the base offer with a green shoe option of 220 crore rupees. The issue price is set at 517 rupees, which is about 5% discount to yesterday's closing. Now the equity dilution post this issue is around 7.1%. And now remember, in August of 2023, the shareholders of the company had approved a proposal to raise 1600 crores via public or private placement, and now out of that 1600 crores they're looking to raise 350 as a base offer.
Okay, Smriti, thanks for thanks for bringing us this detail, and of course I'm sure we'll keep us updated with what happens with the QIP response as well, supposedly strong. And that brings me to healthcare as a pocket as well. I mean, Workhard is a specific case in point and important to highlight today. But Dheeraj, healthcare is, in some sense, chalk and cheese, isn't it? The US generic makers have had a good 2023 after a long lull, if you will. But as a overall pocket, it's kind of has its ebb and flows with more downsides than upsides. I mean, is there a trend that could be predicted for healthcare per se?
Yes, I think there is. I think US generics is on an uptrend, and these uptrends don't fizzle out in a short span like 1 year. So the previous US generics uptrend we saw topped out in 2014 after a good 11, 12, 13 years of a very, very strong uptrend. It's been in a downtrend since 2014-15 approximately, with price erosion, double-digit price erosion, sometimes even high teens. Continuously right up till 2022, 21, 22, which is when it started to bottom out. So 8-9 years of down cycle does various things. It forces weak players out of the market. It forces consolidation. It forces a little bit of supply deficit because people underinvest. And a time has come where a number of generic drugs are actually going into a little bit of a supply deficit scenario as well. With few specific drugs, sometimes there has been supply shortages as well. So I would say this whole US generics uptick, which has happened, is not an uptick, it's a reversal of trend. At the very minimum, it should last 5-7 years. So I've been very constructive on pharma from a medium long-term basis, at least for now.
And is it contained to US generics only, or do you believe other facets of healthcare? I mean, people talk about CDMO being this multi-year opportunity where people are not seeing the, people might miss the forest for the trees if they look at only the near-term performance, or for that matter, hospitals and diagnostics as well. Anything on those lines?
So positive on that too. So CDMO is, in some senses, no different as compared to any offshoring sort of a strategy, any offshoring kind of a business. And there are multiple factors play in India's expertise in chemical engineering, whether it is chemicals or pharmaceuticals, high quality of production, as well as some amount of China plus one shift, which is happening across sectors, will continue to benefit us. CDMO and those businesses, by definition, will remain slightly more bulky and chunky, and hence one might see some volatility up and down going forward as well, like we have seen in the past. But structurally in an uptrend for sure. And same with hospitals and healthcare. The incidence of Indians reaching the bucket where they can afford a better quality healthcare is rising. The penetration of health insurance is rising. India is sort of a health tourism destination is also improving. So that business also seems to be in a structural trend. So the entire sector, I think, should do well over the next 5-7 years.
Okay. Could we extend that argument to two other large sectors, which is BFSI and IT? Let's start off with BFSI. Almost everybody on the street, I don't think there is an exception to this rule, is constructive on banks. One doesn't know when would that uptick come, but for now, save for select private banks, the larger ones have been sulking. Yeah. When can we make this case that bhai ab ho jayega? Now we will see them move. I mean, how do you make that case?
Two things in terms of banks. So the larger ones have been sulking not because the larger ones have been doing badly, but simply the rest of the sector started doing so well, right? So what we have seen in the last 3 years in banking is a mirror image of what happened between 2015 to 20. So in fact, in one of the recent newsletters that I wrote, I actually published a very interesting chart where I showed that if we look at the Bank Nifty constituent performances for between 2015 to 19 and 2021 to current, it's exactly a mirror image of each other. So 15 to 19, Kotak and HDFC were up between 150 to 175%. And amongst the large banks, SBI, Bob were right at the bottom with -10, -5, +5, etc. 2021 to now, BOB is up right at the top at 177, SBI is about 150, and HDFC and Kotak are right at the bottom with just 5-10% performance. And the reason for that is the other banks which are not doing well in 15 to 19 started doing well in this horizon. So if you look at FY24 numbers, it'll be very difficult to distinguish between the top 5 large cap banks, whether it's ROE, growth, NPL ratios, etc. All the metrics look very, very similar. So there has been a valuation convergence in the banking system. So the bigger guys' valuations have come down by the stocks not doing much and the earnings rising. And the names which struggled between 15 to 19, the valuations are caught up by stocks performing. So at some point of time, the whole convergence process gets over. Sector is doing well. I don't see a big issue in the sector. The growth is intact. There are no big challenges on the credit risk, at least for the next few years on the horizon. So no reason why the sector as a whole can't start delivering good performance going forward.
Mm-hmm. Okay, so okay, that's on banks and some insights there too. The other one is information technology. Now, whether the rate cuts or the rate cut chatter improves sentiment and valuation multiples argument is one thing, but until recently, none of the companies are talking about demand turning at the corner at all, no visibility there. Would this be too early for somebody to look at IT, never mind the fact that they are high quality companies?
I think IT might struggle a little bit this year in terms of growth pickup. So, US is as we all know, US is a hardcore capitalist country. And sometimes I feel a little strangely hardcore capitalist country because once I say it, you'll be able to see that in perspective. That US companies start dialing down on expenditure, even if there is a fear of a slowdown coming in at some point of time down the line. They don't really wait for a slowdown to come in before they start cutting expenditure. And that's what has been happening in the US right now. Every single economist is calling for a growth slowdown. At some point of time, it hasn't happened yet. Few even calling for a mild recession. Again, no signs of that yet. But those calls by the macroeconomists is enough for the companies to say, hey, let's just postpone our spending for some more time. There's no hurry. And then they'll just do it time and again. And hence, till such time that whole cloud on whether US economy slows down or not goes away, whether it actually slows down or not is immaterial. I don't really think US companies will bump up their budgets in a big hurry. And hence, IT will continue to do their middling sort of a performance. But if the markets were expecting or hoping for a big bump up in spending budgets by the American companies and hence a big pickup in growth this year from IT sector, it might be a cause for a disappointment.
Fantastic insights. Dheeraj, lovely talking to you today. Thank you so much for taking the time out and being with us, and see you in the studios sometimes.
Thank you. Would love to drop in.
Great. Thank you. And viewers, with that, it's a wrap on this edition of Talking Point. Thanks so much for tuning in.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs. Co-powered by Canara Bank. Together we can.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
What are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a
Benchmark indices trade in the green after the US Federal Reserve kept interest rates steady in March, the fifth straight meeting. IT stocks start the trading session with strength, led by positive signals in the global markets, all sectors in the green. And this is an NDTV Profit exclusive. We told you first and it's confirmed. Walcott has initiated a QIP to raise 570 crore rupees. Stock is up over 3%. And rate cut hopes are back as the US Fed hints at 3 cuts coming sometime this year, but sticks to the inflation control. On the back of dovish commentary from the US Fed, gold rallies to a record high. Hello and welcome to the FNO show. I'm Samina Nalwala and joining me is Agam Vakil, and we'll take you through all the FNO action this morning in the markets. It's a good day of trade. On back of a positive handover from world equity markets, it seems like the Nifty itself is holding steady about levels of 22,000 in terms of trade. The breadth of the market's good. The broader markets are performing in line with the benchmark, and anything that is related to the dollar is doing well. So metals having a good day, and so is IT. Agam, from the get-go, it's actually gotten better in the last hour of trade. The breadth has definitely improved considerably.
Yes, it certainly has, and I believe that there's a bout of short covering taking place as well in a lot of these indices. Maybe not necessarily in the Nifty, but certainly in the Bank Nifty, because it has been declining over the past few days. Of course, the Nifty is showing strength. We are looking at that strength largely on account of strength in global cues coming through, and that's had a positive impact on our markets right now. And the Nifty reclaiming 22,000, in fact, inching towards the mark of 22,100 as we speak right now, trading near day's highs. And at least as far as the futures are concerned, yesterday we saw a lot of unwinding in the March futures. Let's take a look at whether or not there has been a change there. No, unwinding continues. So yesterday we saw about a 7.5% decline in open interest, and today once again the open interest declined even furthermore. So at the moment it seems like there is some more positions being taken off from the Nifty futures. Have things changed for the Bank Nifty? Well, Bank Nifty, in fact, did see an increase in OI yesterday. And today it does seem like we are now seeing some amount of unwinding, perhaps some amount of short covering. But the short covering has not been expansive just yet, because it's just been about 3.3% decline in open interest. Considering the fact that the Bank Nifty has been coming off over the course of the last few weeks, last 2 weeks at least, that's something that we need to once again keep an eye on. But moving on, as far as the option market is concerned, let's see how things are panning out there. It is the weekly Nifty options expiry. At the moment, it does seem like a lot of puts have been sold at the 22,000 strike, pardon me. And on the higher end, we haven't seen as much in terms of calls. A lot of these calls have been unwound as well, considering the sharp up move on the Nifty that we've seen to the tune of nearly 1%. Let's bring up the change in open interest distribution, and you will notice that there will be a decline in a handful of those calls. So as you can see there, around 22,100, 22,200, there certainly has been that coming off. And of course, we are also looking at some increase in calls at the higher levels. But that said, this is how things are panning out. For now, of course, the Nifty is holding on to that 1% gain with the potential to, or at least the traders would like to see it move towards the mark of 22,100, and that is where it will test at least a near term as well as an intraday resistance, and from there on we'll have to take wait and watch as to how things pan out.
And I think a lot of the stocks in the broader markets as well, not for technical reasons, but are actually doing quite well on back of a bunch of brokerage upgrades that have come through. So IRB Infra is topping that list with an 8% up move. You've got REC, after days of declining, is seeing a 6% up move, trading in at its day's high point. You've got anything in the PSU pack as well is having a pretty pleasant day of trade. Like we said, the breadth is looking good and the broader markets are performing in line, if not better than the benchmark. On the sell side, you've got a few stocks, but the cuts are not very large, and I think that's what traders will be taking heart from in today's day of trade. But we have with us Nilesh Jain and Ajit Mishra to join us to tell us about the F&O picture and trading strategies for the day. Nilesh, yesterday was a flat day, but it seemed like we were coming close to an end of a downtick in the markets, and of course this morning with the positive handover from the world markets, it's been a pretty sweet pullback rally. At 22,000, what's the trade on the index?
Very good morning to you and good morning everyone. So yesterday there was a doji candle on the daily time frame chart for both Nifty and Bank Nifty, and after a decline, this kind of a candle basically indicates a bullish reversal, and that is what we have seen today as well. So what we believe is that after today's up move, Nifty has reclaimed this 22,000 psychological resistance zone, and now that will act as an immediate support. The upside is very much open for 22,170. That's the next resistance of 21 DMA. We expect Nifty to retest those levels going forward, and maybe we might see a breakout above the same, and Nifty may inch towards 22,250 to 22,300. So breadth and undertone continues to remain on a positive side now, as long as Nifty trades above 22,000. So that is going to act as immediate support. Now, good part is that in yesterday's and today's session, we have seen a sharp decline in the volatility index India weeks. So today as well, it fell by 5%. And after a long time, it has slipped below 13 levels, and that is certainly giving more comfort to the bulls. And we might see further pullback to continue as far as index are concerned. Now, on the other hand, Bank Nifty, we have a similar view. We expect a further move to continue towards 47,200 to 47,500.
Okay, all right. So that's the view on the Nifty and the Bank Nifty. Ajit, good morning to you as well. How are you placed when it comes to these indices?
Yeah, good morning, Agam. So, Agam, after this recent dip, once we reached that 21,850 mark, markets were under pressure, and yesterday we made a low around 21,700. Though by the end we managed to end around 21,800 mark. Still, we are trading below the short-term averages. That is the 20 EMA, which is placed around 21,100 mark, and halfway to the candle of the sharp decline that we had in the last week, maybe closer to around 22,200. So that's the area basically where I feel that will continue to act as a strong resistance area. So I broadly expect consolidation in the index, and the bias would only shift once we cross 22,200 mark decisively. The good part is that we are still, seeing the US markets doing well, and means there was hardly any correction in the US market in the recent past also. So that may continue to help the market to at least, cap the damage in case if there'll be any further profit taking in the market. So all in all, it's likely to consolidate within the range of, let's say, 21,900 to 22,200. But banking looks comparatively better, and once we cross 47,200 mark, I feel banking can outshine the Nifty index, at least in the near future. So among the stocks, and among the indices, banking should be the preferred candidate if you are looking any long trade. And any, let's say, dip towards, let's say, 46,700 zone, one can look for fresh buying opportunity in banking.
Bank Nifty could be a better opportunity than the Nifty, and a buy call coming in from Ajit on that. Ajit, you want to talk to me about, of course, we've talked about the Nifty, we've talked about Bank Nifty. What is the verdict on InfiBees? Anything on, tech play in the market right now? I mean, would you consider going long on the tech index in with the backdrop that, of course, the US markets, the rate cut picture hasn't changed very much?
In fact, you know what, that in the last 1 month, we are seeing a very, diverse trend in the tech-heavy index, that is Nasdaq Composite and the IT stocks in our markets. So the Nasdaq Composite had made a new record high after 2 years of consolidation. But here, from almost 1.5 months, we are seeing gradual drift. In fact, at the beginning of the week, I was anticipating that bank, IT and FMCG is going to outrightly surprise the market with the positive tone. But it turned out to be otherwise, and we are seeing profit taking. So I feel for a time being now, one should be selective in IT space, and IT majors like TCS, HCL Tech, Infosys, these are the better candidates to look at. And from the mid-cap ID basket, Birlasoft and Persistent are some of the names which one can look for accumulation, not to go for aggressive longs, but yeah, for the accumulation, these are the candidates that one can definitely look at.
Okay. All right. Hold your thought, guys. We will slip into a short break, and on the other side, we get you a lot more in terms of stocks. Stay tuned in.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back to the F&O show. We take a look at how stocks are faring at this point in time, specifically in the stock future space, and see where there is traction in terms of open interest change, and see whether or not there are in fact some trends which are emerging. So firstly, all the stocks that we have on our list, or the 4 out of 5 at the top, are looking at longs. Of course, Shriram Finance is marginally in the green, in the red, but besides that, SAIL, Info Edge, SRF, MCX, all of them are advancing and looking at a decent amount of increase in open interest towards what is seeming like fresh longs. In terms of stocks which are seeing unwinding, let's pull that list up as well. And with okay, so the unwinding in Glenmark Pharma is quite substantial. A decline of 23% in OI there. So about 1% increase in its underlying. So short covering, it does seem like. It's the same for something like an Hindustan Aeronautics, PVR, along with Gujarat Gas. All of these counters are also looking at some amount of short covering playing out today. And speaking of some of these stocks, let's ask our experts what they're recommending today. So Nilesh, I'll come to you. Stocks on your radar.
So Agam, I have two buy recommendations. First of all, SRF, this particular counter is looking positive. Today it has given a good breakout from a falling trend line. And even if you look at the derivative data, close to 3.5% OI addition can be seen. So good long buildup is happening out here. And the upside is looks like open up for 2550 to 2600. Stop loss can be placed below 2445. So SRF can be bought at current levels and on decline. Another stock is from metal space that we are liking. So overall, metals on the back of some decline in the dollar index and also a reversal can be seen in the Nifty Metal Index. So Hindalco is one stock where we have seen a good consolidation breakout. So this consolidation of past 1 month and finally it has given a good breakout. So upside may extend further towards 558. So that's the immediate target that we are expecting. Stop loss can be placed below 533.
Ajit, what about you? What are your top stock recommendations today?
So Samina, both recommendations are on the long side. So Hindalco is common to what we have already discussed, that metal as a sector and as an index, we are seeing resilience, though we have had days of sharp decline in some of these metal names. But largely the trend is up in most of these metal counters, except a couple of names, where we're still seeing the side-based negative trend. And Hindalco, basically, why Hindalco? Because the stock has been trading in a steady pricing channel, and off late we have tested the lower band of the same. And now it's set to fill the gap that we have on the daily chart. So we have a strong room on the higher side. So 560 is what we are eyeing in Hindalco. With stop at 535, one can go long in at current levels. Another stock which looks interesting to us is IRCTC. It's gradually drifted lower towards the support zone of the multiple moving averages, and now we have a strong base in place, and today we are seeing strong recovery with volume. So we expect this recovery to strengthen further in days to come, and 965 is what we are eyeing in the immediate future. With 905 also as a stop, one can go long in IRCTC as well.
So, of course, Hindalco being the common between the two, so there clearly is a consensus as far as Hindalco is concerned, and the other two interesting ideas as far as stock futures go. But let's address maybe one or two names from our end as well. Of course, things have changed quite a bit for Eicher Motors over yesterday. Let's take a look at how things are coming through for Eicher Motors today. So it is advancing, it's building on the kind of gains that we saw yesterday as well. It's 1.5%. That's where its underlying is. Can we also pull up the futures? Take a look at how things are panning out there as well. And perhaps get the future snapshot to see if there is in fact a further increase in open interest towards the longs, because that certainly was the case yesterday. No, so there is an unwinding coming through. And can we also pull up Maruti Suzuki? That's the other one. I can perhaps take both Maruti Suzuki and Eicher Motors with each of our experts here. Maruti Suzuki is flat today, even though it did move up significantly yesterday, and of course, it hit the 12,000 mark. But Maruti Suzuki is also seeing unwinding. Ajit, let me come to you on Eicher Motors. Your view, do you think that there's more legs to the kind of strength that we've seen over the previous couple of days?
So yes, in fact, the one thing which is important about the stock is that being a gradual mover, the kind of move that we had in some of these other auto names like Bajaj Auto, Hero MotoCo in past, it was almost a vertical move. That is something which is still pending in Eicher, and I feel that these kind of base that after every breakout that it forms, gives you the strength, and especially in the market like this when we are seeing excessive volatility, it's definitely a stock to look at. After this, recent, up move, I feel there could be a bit of a breather around the current area. So it's an area to accumulate. So in the range of 3900 to 3960 is something that one can definitely accumulate. And in the next run, 4200 plus is something that one should look at. So with stop at 3780, definitely one can look at accumulating iShares at current levels.
Okay. And Nilesh, Maruti, for you, your view here.
So Agam, yesterday this particular counter hit a fresh record high, and today we are witnessing some amount of profit taking, but the overall structure continues to remain on a positive side. Although the risk and reward is certainly not favorable at current level to go long, I would rather wait for some dip towards 11,900 or maybe 11,800, and one can keep a stop loss below 11,650 and go long for the upside target of 12,200 to 12,500. And this particular stock still has a potential to move towards the 30,000 mark as well. So better to buy in a staggered manner. It's a good portfolio stock.
Right, that's the word coming in on auto counters that have been catching your attention from the get-go this morning. Apart from that, the markets are keeping themselves together. You've got nothing really to worry about in terms of the street activity. Ajit, just one quick question on the OMC pack. We've seen a little bit of an up move over the last 2 days. Technically, F&O-wise, any strategy to play the HPCL and BPCLs of the world?
Samina, I feel it's just a normal breather, after the recent decline that we have in most of these OMC's names. So I feel in case we are stuck in the higher levels, it's an opportunity to exit and let the stock stabilize and form some fresh base. As of now, I feel that for HPCL, 480.85 is going to be the strong area to, resist. And if you have any position, then definitely you can look with the stop of around 455 in HPCL. To hold for 20 points higher than the current levels, and same hold true for BPCL also, because short-term averages is around 600 mark, and we are already at 585. So the upside seems capped in all these OMCs. So let them stabilize first before we take any fresh call.
All right, out of time on this show, guys. So take a moment to thank both our experts, Ajit and Nilesh, for joining us and taking us through their views in the markets and, of course, discussing a whole host of stocks that we have on our radar. And with that, we also wrap this show. But before we do that, Crystal Integrated Services shares listed at an 11% premium over the IPO price. And we spoke to the management, Sanjay Dige, who's the Chief Executive Officer of the company, about the prospects going forward. This is what he had to say. Listen in.
This is predominantly the wages which consume the working capital because of the credit cycles which are there in this sector. The 100 crore that is set aside for working capital is calculated based on the wage requirement, and that is a predominant requirement for the working capital.
Again, just sticking to this now, if you have to compare about the government working capital requirements and private side, so if you have to look at just the government contracts, you have an average receivable days of about 60 to 90 days cycle over year. Now, can you just give a mix on, if you have to compare that with the private sector, what is the mix? And just a follow up on that, in the recent 2 fiscals, if you have to notice, there has been a big shift in your average working capital days as well, about 51 to 55 days in FY21 and 22, which has gone down quite significantly up to about 25 days. So can you share what has led to this reduction?
Yeah, I will take both these questions. The working capital remit, the receivable cycle for the government, very rightly mentioned by you, is 60 to 90 days, versus in the corporate it is 45 to 60 days. Also, the government businesses are very large in nature. They are also multi-locational. So, and now the government processes are very strict now. They are more transparent. So they take a little more than the corporate receivable cycle. So in combination, we land somewhere around 77 days as our average receivable cycle. And the second question is about our working capital days, yes, we have a good dip in this working capital requirement because there were some outstanding receivables which came, I think, in the month of March 2022, and then it regularized. So that's the reason in a graphical depiction it shows that the working capital limit has shrunk. But for all calculation purposes and for you to know, it will be somewhere in the zone of 70 to 77 days.
All right. Now, moving on to the government contracts, about 70% of your business stems from this area, especially if you have to look at the Maharashtra and the Tamil Nadu hospital side. Now, correct me if I'm wrong over here. If you have to compare that with the overall industry, the margins that your business has is currently much higher. But there is another there is another player over here which has about 12% margins compared to about 7% which you currently enjoy. So what kind of operating levers are we putting in place to reach that level of scale going forward?
Yeah, good question. See, the government business, the outlook of subcontracting IFMS business in the government sector, it has grown at about 10.6% since 2018 to 2023. It is expected that it will grow by about 16% going forward from 2023 to 2028. That is what the FNS report says. So there are, in government also, there are not only hospitals, but there are railway stations, airports, and various infrastructures which is coming. So we will continue to look at that sector as well, because that is where the growth is also there. And along with that, we are also very, very focused on our corporate sector. Thanks to your the Make in India initiatives and everything else that is happening in our country. Overall, the corporate sector also is going to grow at around 10% going forward. So even though we are going to be focusing independently very much on both these sectors. And what was your second question? Yeah, about the margins.
Yes.
The margins, about how we expect to have a better margin profile, right? So there are 3-4 things that are going to achieve that. Our margin profile today is also good, and that is because of the mix between corporate and government. And our service since 2000, year 2000, we have been able to build on our talent in a very, very good way. So our service focuses on how we can make our services more efficient in both these sectors by two things. Also by recruiting on time. We have independent recruitment vertical, which is a pan-India vertical, and a training vertical. Today, if we are able to get acquire our valuable human resource, if we are able to acquire right human resource, profile them rightly, and are able to deploy them on time, and on the side manage a very consistent training program, I think at the end of the day it will add to our efficiencies and deliverables to the customer. And today we believe if you are able to offer a good quality service and efficient service which makes life convenient for the customer, I think the customer is willing to pay you more.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, Profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment.
Hello and welcome. You tuned into the Small and Mid Cap Show. I am Mahima Vajrajani and with me is Harsh Saita. Well, before we move on to two interesting managements that we're going to speak to today, let's take a quick check on how the markets are panning out to be. Well, it's a very good day for the markets, we can say. The benchmark, both Nifty and Sensex, is up about 1% today. If we talk about the advance decline ratio, well, 48 advance and only 2 decline. The top 5 stocks that are contributing to the Nifty 50 gains are NTPC up about 3.2%, BPCL up around 3.4%, Tata Steels up around 3.3%, IndusInd up around 2.6%, Hindalco up around 2.9%. So all the Nifty 50 stocks are in positive except for 2 counters, Hero MotoCorp and Nestle, which are down around 0.5%. Now, if we talk about the breadth of overall market, 77% advance and 18 decline. The broader markets are clearly outperforming the index today. Nifty 150 is above 1.7%. Nifty small cap is up and about 1.9%. But for more stock-specific action, Harsh, what is happening in the broader markets?
Well, lots happening. It's a rocking day, especially where broader markets are concerned. 1+% up on the Nifty mid cap, 2+% up on the Nifty small cap, and the breadth looking extremely good. 1.8% on the Nifty mid cap, as on your screen. Let me quickly take it to some specific names. You have quite a few brokerage notes which have come through, and on the back of that, let's pull up something like an IRB Infra in the mid and small cap space. That one is up roughly 8% as we speak. Very solid gains on IRB Infra, a Kotak institutional note coming out. You also have BSC, which is up 6.5%, again on the back of a note. Gland Pharma up 3+% as well. So plenty of chatter in that mid small cap segment and space, where plenty of stocks are gaining. Of course, within the larger end of the spectrum, you have something like an Avenue Supermarts, which is up 2.9%, a CLSA note driving that stock higher. Tons of brokerage notes and tons of movement on the back of that. Not sure if it's on the back of that or if it's a secular move, but nonetheless, a lot of these have moved quite well on the back of some of these notes. And therefore, you also have the likes of an MGL within the mid-small cap space where your stock is up roughly 1.4%, again on the back of a note. So plenty of action being seen. But that's where the broader markets are concerned. I want to switch over to sectors actually, try to see where exactly are we making gains. If we can pull up sectoral indices across the board, it's a green. But look at that PSU basket. Nifty PSE and PSU Bank up 2.5 to 3% odd. Nifty Metal, which has been one of the softer areas of the market, up again 2.5%. So you're seeing a lot of participation from some spaces which saw a bit of a correction. Let's pull up the PSE and PSU Bank space. Try and see that pocket within PSE first. There you go. Engineers India, Power Finance, REC, all of them up 6+%, clearly in trade. Nalco also gaining, SAIL also gaining. So a lot of aluminium, steel, commodity stocks, commodity plays, as well as some NBFC plays which are playing well. REC, PFC have lost quite a bit of ground. And a bit of recovery coming in on those, clearly visible. I'll quickly pull up the Nifty PSU Bank before we go on to our first guest for the show. There you go, the Nifty PSU Bank, the entire clutch of stocks in green. And if you see, the smaller ones are participating better. You have Punjab and Sindh. Outside of PNB, you have Central Bank, Indian Bank, IOB, BOI. The smaller ones are doing much better. Then you have the Can Banks and the like, which are also participating in trade. Again, no losers on this one. So the breadth extremely strong. But Mahima, our first guest for the day.
Right, Harsh. So the first guest for the day is a management from Jupiter Wagons. Well, the stock has been in focus since a long time now. It has been a multi-bagger in the past year. The company has become the first Indian roller stock manufacturer with own wheel plant in the latest, and Jupiter Wagons acquired Bontrans India for 271 crores. The acquisition is expected to reduce cost and dependency of imported wheels. And to talk more about this, we have with us Mr. Vivek Loya, MD Jupiter Wagons, who joins us now. Welcome to the show, sir.
Yeah, good morning.
Good morning. So my first question to you is that with this acquisition of Bontrans India, your dependency on imported wheels will go down. I just wanted to understand first thing that what was the mix before this, how much was imported, and where will this go, let's say by FY25, and secondly, how will this improve your margins?
Okay. Yeah, thank you. So currently, Jupiter was importing about close to 25,000 wheel sets annually. So the idea is to do a complete replacement. We had already started in the last financial year itself, started procuring wheel sets from Bontrans India. So now post acquisition, we want to strengthen this position further. And again, secondly, we want to make today Bontrans is not completely localized. So the idea is to over the next 18 months to make the manufacturing 100% localized out of India.
Got your point, but I want to try and understand before I go to the kind of capex that you will do to bring all of these operations into India and try to make it more domestic centric. I want to try and understand from you what it does to your margins as you backward integrate, because that will hold the key, right?
Yes, so the margins will definitely improve. I can, again, for us, it's very difficult to, again, give any forward-looking numbers, but I would say that next year you will see a substantial jump in terms of the margins. And as we do more and more backward integration over the 18 months, you will see there's a distinct change which will have happen to the margin profile. And it is not only because of our own captive consumption, but as you are aware that Tatra Wagonka, who are the biggest producers of freight cars in Europe, They are also a partner in Jupiter Wagons, and they are a important shareholder. So the whole idea is that going forward, Tata Wagonka, again for them also, this facility will become a captive facility for the entire European requirement. So today, they themselves are procuring close to about 40 to 50,000 wheel sets annually. So the over the next 18 months to 2 years, you will see that the entire procurement, which currently they are doing mainly from Europe, because earlier those procurements used to happen from mainly from Russia and Ukraine. But as you are aware that because of the war and the sanctions, those procurements have stopped. So in Europe today, there is a gap between the demand and the supply. So the idea is to make this captive consumption not only for Jupiter's own requirements, but also to meet the complete requirements of Tatra Vagonka. And besides that, today Bonotrans India is the only supplier of wheel sets for the metro business. So we are already working with the likes of Siemens, the likes of Alstom, BML. For the Vande Bharat, we are supplying the wheel sets. So as we localize more and more and invest in the business, so we want to entrench this position further. So all this will put together, you will see a substantial improvement in the margins as well as the revenues.
Right, but just to give a range, let's say, can we expect an increase in margin between anywhere between 3 to 5%?
That is definitely the target. That is the target with which we are working.
Right, and in terms of your order book, at present your order book is around 7,000. It was around 7,000 crores, and another let's say odd around 2,000 crores was added recently. How much of this has been executed, and what does the timeline look like? How much of it will be executed by 25, 26?
In FY25, we are looking to at least the existing order book. We are looking to execute a majority of the order book. And right now, in terms of the order flow, again, as you're aware that the order flow is very strong. Already there is a tender pending with Indian Railways for close to about 5,000 wagons. And what we can understand is that post elections, there is a substantial order flow which will happen, tenders which will come out from Indian Railways. On the private side itself, also, we are seeing that the demand is very consistent. Right now, we are negotiating for at least close to 2 to 3,000 wagons on the private side of the business. So today our focus is twofold. So orders is not a challenge at all for us. One is we want to increase capacities. So as I mentioned earlier, we want to go up to 1,000 wagons a month, which will happen in the very near future. We are already producing more than 800 wagons a month. So in FY25, we are looking to produce more than 10,000 wagons. And through backward integration and through our braking business, through the wheel set business, to improve the margin and the sustainability of the business going forward.
So I take a point. I'll go back to the acquisition of Bonotrans, because it's a very interesting one. 63.5 odd crore in terms of revenue in FY23. Where does that go, say, in FY25, once you believe you've done the relevant capex and you've fully tapped into the scope that Bonotrans has to offer you?
So honestly, in FY23, Bonotrans was mainly, they were not focused on the freight business. Their focus was more on the metro business in India, and maybe a little bit on the passenger business. So that is the reason you see the revenue profile. In FY24 itself, as Jupiter started taking more and more wheel sets from Bonotrans, you will see the revenue numbers increase substantially. And FY25, as I've told you, the idea is to make it completely captive. So we are looking to service majority, more than 80% of Jupiter's requirement through our acquisition. And again, as over the next a year, 2 years, we are looking to now invest close to about 1,000 crores in the company to one increase capacities, because right now they can do about 1,000 wheel sets in a month, but we need close to about 5,000 wheel sets to meet our requirements and the requirements of our partners. So the idea is to build the capacity as well as integrate the facility.
Right. Also, you've guided that in the next 1 to 2 years, you're expecting that your non-wagon business will contribute 50% to revenues. So, I just wanted to understand that what is the mix at present and which one is more margin accretive?
So all the new businesses today which we are entering are very margin accretive business. Say wheel sets. Wheel sets, typically the margins are much higher than on the wagon side of the business. And there is again a huge export component to this business, which again the margins are typically much higher than what we have in India. And in terms of revenue, again going forward, it will play a substantial role. Second is our brake business. So today we have started supplying the brake disc and the brake system to Indian Railways. So that business again in the next 2 to 3 years, we expect that to be about 1,000 crore business, and definitely the margin profile is going to be much better than the wagon business. And thirdly is the EV segment and the renewable energy segment which we have entered into. So there also we see a huge potential. So the idea is that over the next 2 years, we want at least 40 to 50% of the revenues of the company to come outside of the wagon business.
Sure. Okay, so I take your point. 40 to 50% of revenue coming outside of wagons. These are some really big points that you're making, Mr. Loya. So I want to try and focus in on this. Now, I want to try and understand again on the wheel side of things. As you do your capex of 1,000 crore in Bonatrans, how do you plan to fund it? You also have your own capex on the wagon side that you are taking care of. You have around 160 odd crore of cash on the balance sheet, if I see it correctly, in September of 2023. So how is the funding going to take place? If you can give us some overview on that.
So the entire acquisition of Bonatrans was self-funded. So it was through the money which was on our balance sheet. So the going forward in terms of the existing business, most of our capex is already done. So over the next 1 or 2 years, we are looking for the returns to come out of that capex. So on the wagon side of the business and on the brake side of the business. So now going forward, all the incremental capex which will come, because our cash flows are again very robust. And quarter on quarter now we are increasing our revenues, as well as our profit margins are also improving. So the idea is that we have sizable internal accruals. So to use to start with, we are looking to use those accruals itself to further fund the brake business. And the rest of the business, I think right now we don't require any substantial capex going forward.
Okay, I take your point. And with regard to the revenue itself, FY23 was 63.5 odd crore. You said that FY24, you're expecting to see that number to be much higher. So can you give us a ballpark, at least with regard to 9 months or the first half? How much has Bonatrans done?
So again, it's very difficult for me to give, so because it's just joined the Jupiter fold, so those numbers are not yet public. But as I have told you that Jupiter has been in FY24, Jupiter around close to about 20-30% of our requirements we started procuring from Bonatrans. So whatever the capacity the plant had, so more or less right now they are working at full capacity. So till about FY23, they were at about less than 50% of their capacity utilization, and right now they are at complete capacity utilization. So now the idea is to improve the capacities going forward, so it can serve our internal requirements.
Got it.
As well as the export business.
Got it. And this 1,000 crore investment that you're going to make, how quickly is it going to happen, and how quickly are you going to go from 1,000 wheel sets to 5,000 wheel sets, which you're looking for?
As I've told you, it's going to happen over the next 18 months.
Sure.
Because the whole idea of procuring Bonatrans was that the technology is in place. They have all the licenses.
Got it.
The groundwork has all been done. So now to scale it up, to do anything from grounds up is a very difficult task. But since the entire groundwork has been done, to scale it up becomes much easier. It already has the customers, so we don't have to go and hunt for customers. Today, from metro to Vande Bharat to freight, so the entire spectrum of the rolling stock business in India is today covered by Bonatrans. It has all the necessary certifications and licenses in place. And in India, you have to appreciate the fact that forged wheels are not being produced in India till now. So most of the wheel which is produced in India today is cast wheels, which is done by Indian Railways themselves. So forging is relatively a very new technology for India. So our whole idea behind this acquisition was that we did not want to experiment. So since the entire technology is available here, we just wanted to upscale it.
Understood. Understood. Very, very interesting. Thank you so much for this conversation and for all of the details you've given us. Looks like a very interesting conversation. We will pick this up post Q4, where hopefully we should have more details on Bonatrans as well. But Mr. Lohia, thank you for taking out time and speaking with us.
Yeah, thank you. Thank you for giving me the opportunity.
Right. We'll slip into a very short break. More on the other side. Stay tuned.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
Welcome back. You're watching the Small and Mid Cap Show. The next company in focus is RailTel. Well, the stock is rallying on the back of order wins worth rupees 352 crores from the BMC for supply and operations and maintenance of HMIs, and which is health department of the municipality body. Well, for this, Sanjay Kumar, Chairman and Managing Director of RailTel, joins us now. Welcome to the show, sir.
Thank you. and very good morning to you.
Good morning, sir. So, my first question to you is that your order book currently is at approximately 5,600 crores. Correct me if I'm wrong here. What is the revenue visibility from this order book that you're expecting, let's say from FY25 end perspective and 2 years perspective?
So let me first correct the number, as you rightly pointed out, that our number is now 4,900 crore as on date, our order book. And roughly around 40% of order book is likely to be converted into revenue. That is what we are going to try next year.
Okay, sir. And another order win also that's come as we speak. In fact, 100 crore order from the state project director, Bihar Education Project Council. What can you tell us about this? How quickly is the execution on this one? And what are the kind of margins that one can see, because you're ramping up fairly quickly?
Yeah. So margins, generally we try to keep project margins as far as are concerned. Generally we try to keep between 6 to 7%, but sometimes, yes, we see that volumes are good and the receivables, the cash flow is going to be faster than we take call, even go up to 4 to 5% also. About this order which you are talking about from Bihar, so it's likely to get completed within the next 2 to 3 months. It'll be our endeavor. Yeah.
Right. And can you give us some sense in terms of trajectory going forward? Your sales has been growing around 20% and net margins around 12%. So where do you expect this going forward by the end of FY25?
See, our trajectory is continue to remain in the same route, and we'll try to make every efforts to make it even steeper. So I think our growth this year is going to be somewhat more than 25% certainly. And next year, this growth momentum is going to remain there, and we'll try to make it even more.
Sure. So I take your point. Now with regard to just visibility in terms of order pipeline going forward, what's the kind of visibility and what's the order book to revenue that you will look at to be in a comfortable position to, one, execute, as well as two, make sure that you're taking in enough orders so that there is no lack of revenue visibility?
See, this year, if you see, we have more than 2,850 crore orders clocking in. If we talk of this financial year, 23-24 itself. And this quarter, if we talk of, we have around 1,250 crore or new orders. So, and we are gaining experience. We are new in project business. Hardly last 2 to 3 years, we have been we had started and focusing on this sector. So if we see that trend and the kind of confidence in our teams, I wish that we'll certainly surpass the previous milestones. That is what I can tell about this.
Okay, thank you so much, sir. It's been a pleasure speaking, getting all of that overview insight with regard to RailTel. And many congratulations on all the orders that are flowing through to you.
Thank you.
Of course, completely out of time on this edition of the show. We're very close to the day's high. We can quickly look at the Nifty 50 graph. That's what we'll see. And there you go. And but completely out of time on this one. From Mahima, myself, everyone who puts the show together, thanks so much for watching.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the Hello and welcome to NDTV Profit. I'm Smriti Chaudhary and you're watching Ask Profit, a show where we get all your stock related queries answered from our fundamental and technical guests. But before we get into that, let's take a quick look at where the markets are currently at. A very, very good day for the markets after a couple of weaker days there. You see the benchmark index rising over %, and this sort of gains seem to be broad based in this market, because if you look at the broader markets as well, Nifty mid cap is above 1.5%, while Nifty small cap is above 2% in trade. So sort of secular gains across markets. But let's take a look at the benchmark and what stocks are pulling the index up today. There are likes of NTPC, Tata Steel that are up over about 3.5% as we speak, while we have others like HDFC Bank that are contributing to the index, and on the lower end there are only two stocks, which is Nestle and Hero MotoCorp, and that's from that you can also see the breadth of the market. So out of the 50 stocks, only 2 of them seem to be in the negative and rest all in the positive. But even if you look at the broader kind of the breadth of the market, if you can pull that up and see where that's currently at, the breadth of the market still continues to be largely in favor of the advances as well. A very, very strong day. You can see since the open, it's been continuously in the favor of the advances. But let's take a look at the sectors and as well and see how what's the picture there. So all sectors in green today, nothing dragging. But the big gainers today have to be the PSU index, which is up about, the PSU bank index is up 2.5%. Let's pull up the PSU bank index and see what kind of gains are there. And yeah, the PSU bank index, if you can pull up the constituency, yes, you can see the likes of PNB, gaining today, and you look at the metal index, that's more on the softer side for the last couple of days. That's also up about 2.5%. Nifty oil and gas up 1%, pharma up 1%, realty 1.5%. So a very broad based gains, but let's also focus on some specific stock action in the market. Now the one of the stock is Wockhardt, and that's up on the back of a QIP. If you can pull that up and see the chart, it's up about 1%. Now you saw the story first here at NDTV Profit, where we broke the story in February that the company is looking to raise money through QIP, and now they've come out saying that they're trying, they will raise 350 crore rupees as the base issue, with 220 as a green shoe option, and that's one stock. Then other than that, let's also talk about a couple of other, let's mark them here. Let's pull up RVNL. We saw that RVNL is the lowest bidder for railway project that's worth 167 crores, and you can see that impact there coming in. It's up about 2.5%. Then there's also there's some stocks also gaining, probably on the back of brokerage notes, but since the gains today are broad based, it may just be secular. But one of the stocks that we're talking about today is IRB Infra. Now IRB Infra is up 7.5% right now. Now this is on the back of a Kotak upgrade that has come, and they have changed it from sell to add now, and Anushi is joining us to talk about the rationale and what has changed in the stock that Kotak has upgraded it.
Right, Smriti. Quite a field day for IRB infrastructure back on the Kotak's note over here, wherein they have changed the rating from sell to add for the company. Now, a couple of reasons that they have cited. One is the adjustments that the company sees in its valuations, especially after its private InvIT assets. Again, over here, the focus also remains on the comeback of the BOT projects, that's the build, operate and transfer projects, and the TOT projects, as well as compared to the EPC and HAM projects, which continue to remain in focus. So it sees IRB benefit as a key beneficiary to the NHI's move to bring about $444 billion worth of BOT pipeline over the next course of years. Again, this is on the back of the company's balance sheet that it has seen. So it sees some strength over here with its net debt to EBITDA at comfortable levels to take these acquisitions going forward. So that definitely remains on the watch list. Also, if you have to look at the valuations wise, the company has revised its estimates by about from 1% to 7% over year for the between the period FY24 to 26. So again, that plays favorably for the company as well. So these are the couple of reasons why the company has been on the focus, which is on the back of the Kotak note, as you see.
All right, thanks Anushi for that. On that note, let's bring in our guests for today. We have Ashish Kapoor, CEO of Invest Shop, and Aditya Arora, founder of Athletic.in. Welcome to both of you, and thanks for joining in. Now, Ashish, let me start off with you. You heard Anushi talk about this upgrade that Kotak has come out with, and they've given a target price as well of 65 rupees versus 60 rupees earlier. Based on the fundamentals, would you suggest, would you also concur with Kotak's view and suggest buying at this juncture?
Okay, you'll have to now forgive me because I did not hear the thing very well. I logged in later. So which stock are we talking about?
Okay, we're talking about IRB Infra, and this is on the back of a Kotak note that have, we're seeing big gains in the stock today, and they have changed their, they had given a sell rating, and now it's an add rating with a target price of 65 rupees versus 60 rupees earlier. Now this is on the back of upgrade driven through adjustments to traffic estimates for private InvIT assets. There's also road sector awarding shifted to TOT, toll operator transfer, and build operate transfer projects to manage their debt levels. But specifically talking about this stock from a fundamental point of view, from a longer term perspective, would you suggest buying into this?
I haven't tracked it lately, but what I know of is that yes, infrastructure is quite a good sector to be in, because after many years we are seeing good amount of traction, good amount of private participation, and good amount of projects actually getting executed. So yes, chances are that what Kotak is saying is quite right, and probably not only 65, probably it will be much higher a target which actually the company can achieve. But I haven't tracked it lately, so I don't want to comment.
Let's take a technical check on this as well. Aditya, what are the charts showing on this one? And from a shorter term perspective, what are the cues you're getting from the charts?
Very good noon. I think the charts are pretty good. Markets saw significant correction, and even IRB corrected quite a bit. But from this point of from at this level, I think the stock is looking pretty attractive and risk reward is favorable. So IRB could be bought at 57.75 and stop loss must be 53 and target is 61 to 65. So I'm pretty bullish on the counter.
Right. Thank you, Aditya, for that. Let's quickly jump into the questions now. But let me remind you, if you already haven't written to us, you can write to us on any of our social media channels or through the WhatsApp number that is on your screen. I'm also tracking the YouTube live chat, so do write to us there as well in case you have any stock-related queries, and we'll take it up with our guests. Let's start off with the first one, and this is on Aptus. The question is from Chandra, and they're asking if this is a good buy at the current levels. If you can pull up the chart. Okay, Aptus, that's up about 0.5% in trade, trading around 310 rupees. Aditya, I'm going to come to you on this as well. Would you suggest buying at these levels, or should you wait for a little bit more correction to happen?
I think, now bull market has resumed after yesterday's Fed decision. Markets are reacting pretty positively, and that too with good volumes. We are seeing traction in small cap, mid cap, large cap, everything. If the momentum builds, I think everything would go up. But I think Aptus could be an underperformer. Although market may go up, but it could be an underperformer. So I think there isn't much value in this counter because there isn't a lot of long build up in this counter, as in there isn't good volumes on good days. So institutions are not very much interested. But as I said, it's a bull market, everything can catch up, but this could underperform.
Right, got it. Now, next up, we have a question on Reliance Infrastructure. This from a longer term point of view, Ashish. And now, this one's from Arpit. They say they have purchased at a price of 60 rupees this stock. It's currently up 257, and they wish to hold for the next 5 to 6 years. Now, you've already spoken about infrastructure space, but on this specific counter, like a Reliance Infrastructure, where somebody's already sitting on a considerable profit, should you take some money off the table, or should you sit tight and wait for more gains to happen?
I think we should sit tight and wait for more gains to happen. I think infra is likely to continue seeing a lot of traction, and I think the company is doing fairly well, has now started executing very large projects. So I think the time to come, the earnings will also really improve, and so good to stay investing.
All right, got it. Let's pull up the next question. This one's on HCL Tech. Now, Ashish, this is from a longer term perspective as well. We have seen weakness somewhat from a fundamental from a demand perspective in the IT pack as a whole. But do you think now from here on, we listened to the Fed commentary last night as well, there is more positivity in the cards going forward for an IT sector company like an HCL Tech?
I think certainly HCL Tech anyway looked very good, was undervalued for a long period of time. Somehow the market would not give it the rating which it was giving the other IT majors. The catch-up trade started some time back, and I think there is still more scope on the upside. This plus the fact that IT sector as a whole has kind of underperformed, and somewhere the sector will also get some tailwinds. So I think HCL Tech still looks good, both individually as well as sector-wise, looks very good, and I think one should stay invested.
All right. Anything else in the IT space that looks attractive, especially in the mid-cap space? Ashish, anything attractive? Yeah, anything attractive in the mid-cap space? Yeah.
Okay, so I think IT mid-cap, in fact, has done better than the large cap over the last several quarters. But if you're still looking at some ideas, I think there are some companies which are doing amazingly well. One of them is Persistent. when track it and buy it on declines. The other one is Tata Elxsi, and I think these two stocks I can recommend. I mean, of course, they have run up also, and one can buy in a staggered way in both these counters.
All right, got it. Next up, we have a query on HDFC Bank. Now, I'd like to take a technical and a fundamental check on this one because multiple people are asking these questions. But this specific one is from Prashant, who has already bought in the shares at 1,450 apiece. Now, Ashish, from a fundamental point of view, we've already talked enough about HDFC Bank. Where do you stand in this discussion?
Well, I think what happened is that, the merger with HDFC hasn't gone down well with the markets, and understandably so, because the original bank was a very high net interest margin business. The merger has kind of, put pressure on their margins. And there is the visible, the expected synergy which was supposed to happen has so far is not visible in the numbers. So yes, very well managed bank, no doubt. It has kind of hit a roadblock. I think if you go in the past, a lot of companies do hit this kind of a roadblock. So if there's two ways of looking at it, I think the major selling is out of the way. That I'm very sure of. I think downside is very limited. That also seems quite certain. Upside, very difficult to guess when it will happen. But if you do not have any time constraint on your investments and you're looking for something very safe, very limited downside risk and upside potential being very large, it may take time to come, then HDFC Bank is the answer. Difficult to predict, like I said, when the turnaround will happen. But surely, given the caliber of the management, the history of the bank, and the kind of strengths which it has distribution network into the remotest of villages of India now. It is building up its infrastructure, the logistics and the IT infrastructure in a big way. A virtual bank is also coming up within this bank. So a lot of good things are happening. It might take time for all of that to kind of result into numbers. So if you are a patient investor, I think this is perhaps the best long-term large cap idea in the market today. But like I said, timing is very difficult. So it's a very big bull market. So obviously you have to be very patient to stay with a stock which will perhaps not move again for next couple of quarters also. But if you are ready to do that, then this is a very great idea. It could give you very great returns and has very limited downside risk.
Right, fair point. Aditya, do you also concur there's a limited downside in this particular counter, and how does it look from a shorter term perspective?
Absolutely, I concur with the view, and I think fundamentals are definitely great, but charts are also now improving after that significant sell-off which we saw in month of Feb. I think stock took a lot of time to digest that down move. Now the short positions are taken off the table, and we saw a lot of short unwinding in last 10 days. So I think now stock is ready for a good up move. So stop loss over here must be 1410 and target must be 1500 to 1600. So the stock looks pretty good. And one disclaimer as well, we have suggested this stock to a client. So we have a personal bias in this counter.
All right, got it. Now it's time for a short break, but we'll take more questions on the other side. Don't go anywhere. Stay tuned.
Presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment.
all you have to do
Is ask Profit. Welcome back. You're watching Ask Profit on NDTV Profit. Let's dive into the queries again. Now, the next query is from the next counter that we're going to talk about, and we have multiple queries on this counter, which is Suzlon. Now, Ashish, let me take these queries combined. We have one from Lavish from Indore. No, sorry, this one's not Suzlon. Okay, we have Keswan who is talking about Suzlon. We have another one, Daji from Muscat, and Daji's holdings in Suzlon is quite considerable. He's bought 2 lakh shares at a average price of 43 rupees. And we have, I think, one more on Suzlon, which is, let me get the name right here. Okay, there's no name on this one. Viewers, do write your queries with your name and where you're writing from. That'll be so that we'll be able to talk about your query. But coming back, Ashish, on Suzlon, we have 3 viewers talking about this specific stock. Let's talk about the fundamentals on this, and from a longer term perspective. This is a good example of a turnaround story we've seen. And what do you see for the future of this company for the next 5 to 10 years?
Well, I think the turnaround seems to be very real this time, and the company is actually doing very well. It has also managed to improve its balance sheet in a significant way by reducing the debt to almost nil. So, coupled with a very strong balance sheet and good business, prospects going forward, the wind energy is really doing very well. There are a number of new projects coming up. And the good thing also is that at the micro level, their product is very well accepted in the market. In fact, their turbines are perhaps the most preferred ones in the market. So they have a lot of strength now in going forward. The business is improving. Their product is very well accepted, and the leverage has reduced to a very large extent. So all put together, I think this is a great story going forward. The capital, of course, is very large. So the movement may not be as fast as what has happened in the last few quarters. But certainly it's a stock which if you hold for a few years, I think there is plenty of money to be made. The upside looks amazing. Difficult to set a target, but I think it will be a very fantastic journey on the way up in the next 2-3 years.
Right. Suzlon is locked in upper circuit today as well. But let's move on to the next query. This one's from Lavish from Indore. Now, this is on Bajaj Healthcare. They've already bought the stock at 370 a piece. Aditya, from a technical standpoint, they've bought 500 shares at 370 and it's currently trading at 301 rupees a share. So, considerable amount of loss there. Would you suggest holding on to it, or should you maybe book losses and get out?
I think he can hold on to the share right now because stock has already corrected significantly from 500 odd levels to 300, and now I think stock is trading at its important support. So the bad time is already behind us, and time to exit was long back, not now. So at this time, he can hold on, and he can also average the stock with stop loss of 270, and the upside levels which I'm watching out are 330 to 400. So I'm neutral to bullish on this counter.
All right, understood. Next up, we have a question from Geeta on Lemon Tree Hotels. Now, Ashish, we're seeing this tourism sort of now spurring across the world. We're out of that COVID era times, and especially religious tourism that is gaining a lot of traction in the country, and hotels are definitely seeing that sort of uptick in occupancies as well. But let's talk about this specific counter, Lemon Tree Hotels. They've bought the stock from a longer term perspective at 130 a piece. It's trading close to that 132 and up about 3% in trade. What's your view on this specific sector and specifically on Lemon Trees?
Well, I think the sector is certainly looking very good, as reflected in the share prices of nearly all the major companies, which have done very well in the last few years. Sector is, I think, poised to do very well. The domestic tourism is really looking up, and people are traveling for various reasons, and travel is likely to continue growing up. And there is currently, I think, the demand is much more than the supply, which is also the very good thing. Lemon Tree also is doing very well, has very good properties at various locations, and I think on various fronts the company is doing very well. So stay invested. I think there are still many more good times to come.
All right, fair point. Next up, we have a question from YouTube. This one's from Sid, and we're talking about Aditya Birla Capital. I think they want to buy into the stock at the current market price. Aditya, would you say that this is the right time? There has been some downtick in the stock, but it's up in trade today about over 1%. Would you suggest buying?
I think the stock has been an underperformer since a while, but now the patterns are changing a little bit. So he can buy the stock with little neutral to bullish expectation. The current price is 172.20. He must keep stop loss of 163, and target must be 183 to 190.
All right, got it. Next up, let's talk about a bank Canara Bank in the banking space. This one's from Akhil. They've bought the stock at 590 a piece. Ashish, it's a great day for banks today, and yeah, it's up about 2.5%. One of the gainers among, I think there are all gainers in the banking index. If you can pull that up and see the banking index and look at if that's the case as we speak. Yes, no losers in the banking space today. Ashish, specifically for Canara Bank, what's the long-term perspective based on the fundamentals, and should you stay invested?
I think you should stay invested. I think the public sector banks are having a good run, and after many years, they have the fundamentals which are amazing. The balance sheets of all of them, including Canara Bank, has been cleaned up. There is a huge demand for loans coming up, and they're able to do very well on that front. This has not have been the situation for the last several, I think more than 10 years at least. So although the stocks have moved up a lot, including Canara Bank in the last 1.5 years, I think there is still more room on the upside. And I think continue to stay invested, especially the better ones like Canara Bank, I think still have a significant upside potential.
So much Ashish and Aditya for joining in. Unfortunately, we are completely out of time on this edition of Ask Profit. Thanks for answering so many questions for us. And viewers, thanks for tuning in. We'll be back tomorrow. And if you were not able to take your questions today, we'll definitely try and take them tomorrow. So do come in, join in and write your questions to us. But don't go anywhere. We've lined up a lot more through the day. So stay tuned.
Presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there.
Benchmark indices trade in the green after the US Federal Reserve kept interest rates steady in March for the fifth straight meeting. All sectors trade in the green. Metals and PSU banks top sectoral gainers. NDTV Profit told you first, and now it's confirmed. Workhart has initiated a QIP to raise 570 crore rupees. The stock climbs over 3% on the news. Rate cut hopes are back as US Fed hints at 3 cuts coming sometime this year, but stocks to inflation control. On the back of dovish commentary from the US Fed, gold rallies to a record high of 66,778 rupees. Hello and welcome. This is Hot Money. I am Agam Vakila. In this show, we take you through all the stocks which are buzzing in trade, which have been the flavor of the week. And there has been a lot of updates coming through. But before that, let's take a look at the markets. And with the markets are trading in the green, that's always a welcome note. And for now, while the Nifty has given up some of its gains, it is still trading higher by around 0.7%, and that's always a positive. It's lost out on the 22,000 mark, as it's on the 22,000 mark at the moment. Well, it does seem like it's going to play around there. You know, you never know how things can pan out, especially given that it is also the weekly options expiry today for the Nifty. The Bank Nifty again showing some strength, and that's up as much as 1%. So a little bit of recovery of sorts. I reckon that it will be a green day for the Nifty, the Bank Nifty, after 9 to 10 odd straight sessions where it did see declines coming through. In terms of a losing streak, well, some of you may be surprised to know there was the longest losing streak in the last 20 years. Not that it has corrected substantially, but well, it's just one of those things that has in fact happened. So the Bank Nifty, of course, is looking to break that losing streak today, up by as much as nearly 1%. Even in terms of the broader markets, what's really happening is that we are looking at a little bit of recovery. So in fact, also an outperformance when it comes to the mid-cap index, which is up around 1.6%. And the small-cap index is also up by nearly 2%. So strength has returned, it does seem like, to the broader market indices. And even in the broader markets, we're looking at something like SAIL, the Steel Authority of India, which is up around 6.2%. Now we have a recovery coming back and return to the likes of PFC and REC as well. Each of these counters are advancing by around 5.7 to 5.8%. And of course, let's not forget, BHEL is the other PSU company, which is also showing strength today, back above the mark of 230 odd rupees per share, and well, seeing an up move around 5% as well. Do we have too much in terms of losers? Not really, but Paytm is under pressure right now. Paytm is down 3%. So is Prestige Estates. Prestige Estates is also under just a tad bit of pressure, declining by as much as 2%. But on the whole, it's turning out to be a fairly good day of trade when it comes to the broader markets as well. And on that note, let's introduce the topics that we're going to address today. Today in the show, we are talking about IRB Infra, Mahanagar Gas, as well as Wockhardt. And besides that, we're also going to be taking an expert opinion on BSE, earlier known as Bombay Stock Exchange, Maruti Suzuki, which is trading in life highs, as well as NMDC. But on that note, let's also welcome in our experts. We have Mr. G. Chokkalingam, founder and MD of Economics Research, joining us on the show. Mr. Chokkalingam, good afternoon. Thank you so much for joining us. Mr. Chokkalingam, before I come to you, let me get in my colleague Anushi to tell us about IRB Infra and what's behind the strength today. Anushi.
IRB Infra is the stock of the focus today, about 9% of gains over year. Now, if you have to look at, this is on the back of the Kotak note which came in, which they have revised their rating from sell to add over year with a price target of about 65. Again, which was earlier pegged at ₹60 for the company. A couple of reasons that the note has cited. First is the upgrade is on the back of the valuations that they have based on through the adjustments made for its private InvIT assets. So that remains on the key focus area over here. Another interesting is the road sectors award shifting to the BOT and TOT kind of projects more. This is in which NHAI has about a pipeline of about 444 billion worth of BOT projects coming in which IRB Infra is pegged to be a key beneficiary for this move. Again, IRB Infra, they expect it to be a key beneficiary also because of the kind of net debt to EBITDA levels it has, which is comforting to take these level of pipeline projects in the next 1 to 2 years going forward. So that remains as a favorable plan for the company to expand going ahead. The company also has a balance sheet which supports this kind of growth that the company can expect to take. Supporting this is the estimates now which have been revised by 1% to 7% for the FY24 to 27 period. So again, that remains on the watch out for the company as well. So overall, if you have to look at the picture, this stock is buzzing on the back of the Kotak note which has come out.
Right. Anushi, thank you so much for getting us that update on IRB Infra. Of course, the IRB InvIT, which is in question, is something which has been giving impetus to the company. And following that, I reckon that the Kotak note has been a little bit of a catalyst for that sharp up move in IRB Infra. Mr. Chokkalingam, what's your view on this particular company, IRB Infra? How would you place your bets here, if at all?
I would suggest sell on the stock if it rises further, close to 60. Because the valuations, if you look at, trading at over 40p on 1 year forward earning and still sitting on a huge debt of nearly 16,000 crore. Apart from that, if you see ever since this present ruling party came into power, there has been a lot of thrust on infra, there is no doubt. But it is also equally true that a large number of new players have come in this field. So it's not going to be that easy for this kind of old infra player to continue to compete with a huge number of new players and get a lion's share in the projects. So therefore, considering all these facts, if it moves close to 60, I would say a good sell.
Okay, that's your view on IRB in front. From there on, we move on to another counter which has been showing tremendous strength today, and that's BSE. This particular exchange was under pressure until perhaps a session or two ago, but it does seem like that following another broking note, it has resumed its strength. I'm going to get in my colleague Harsh to tell us a little more about that. Harsh.
Well, yes, nearly a 40% upside given to yesterday's close, Agam, and Investec has initiated on the BSE. What they're suggesting is that the strong print on the options front will continue according to them. There was a one-off in terms of margins, 91 crore odd hit in Q3 of FY24. That should go away, or rather more stability on margins also expected post this one-off going away. It was in relation to FX, and they believe that is possibly a one-off. Of course, we need to await Q4 as to whether that is actually translating or not. But better clarity on margins clearly expected as per Investec. What they are also suggesting is that the recent price correction has been a good time to buy. Now with the 7% uptick, not so sure how much that price correction is still left, but that's the suggestion. It trades at roughly 24 times FY26 price to earnings, and they believe that there is a 40 to 45% EPS CAGR potential, at least, that the BSE has between FY24 and FY26. So pretty bullish on this one. Target price 2,800.
Right. Harsh, thank you so much for getting us that take on BSE. Of course, this is Investec's view, which was released, and of course you've had the stock reacting since morning there. Mr. Chokalingam, your view on BSE? Also, if you could, juxtapose this against other exchanges, perhaps, which are available in the markets. Of course, in the unlisted space, you also have NSE available, and besides that, MCX, though that is more to do with commodities than equities. But what's your view on the overall space, and perhaps your view on BSE as well?
Yeah, in fact, we had initiated buy recommendation at 200 rupees. Adjusted for bonus, and after it jumped around 5 times, we had given a sell call. We were a little early, but definitely I think at current price it's a good sell. As you rightly mentioned, NSE still has over 90% market share in the cash transaction. That is why BSE could not make any great success, and they made a good progress on derivatives. That's why it is in the price. From 3-year bottom, the stock has already gone up more than 10 times. That's mainly because of the success they made in derivative markets, F&O. Now, we had a comment, a lot of criticism, and we had initiated BSE because many critically claimed that BSE doesn't deserve, P on par with NSE, and 30% discount to NSE valuation was justified. Now that I am surprised how the reverse is happening. Now it is quoting at a huge premium to NSE in terms of PE valuation, and I believe that is not at all justified. I believe it's a good sell because once the elections are over, there is a possibility of more stringent measure on F&O because a lot of people are losing money, and also with the recent correction of around 20 lakh crore in the overall market cap, I am sure many IPOs would be postponed. And also the failure to build cash transaction volume, or market share in that particular segment is a negative. So considering all that, I believe it's a great sell at the current price.
All right. That's the take on BSE, and from there on we shift focus to the city gas distribution stocks. But before that, MGL in particular is also in focus because we have yet another broking note which suggests a buy rating on this particular one. Let's get in Mihika to understand what Jeffries has to say about Mahanagar Gas, and then perhaps we can take on the rest of the sector with Mr. Chokalingam. Mihika.
Yes. So ever since the price cut was announced, earlier in March, which was 2.5 for CNG prices in Mumbai itself, Mahanagar gas stock has come down and it's dropped 20% because there were heightened concerns about the regulatory risk on margins. However, Jefferies says that the current risk-reward ratio is favorable. They've maintained a buy rating at a target price of 1,540, and they're saying that margins may not be impacted to the extent that people were thinking. And there are multiple factors for that. One is the falling feedstock cost. So Mahanagar Gas basically buys gas in order to give consumers. So HPHT, which is high pressure, high temperature gas prices, are expected to fall around 10% from current levels starting April because ONGC is going to give additional volume of gas available because there's currently a shortfall. So this will, while FY25 EBITDA margins could decline a little bit to rupees 11.5 per standard cubic meters of gas, Jefferies expects it to still be at the upper end of the management guidance, which is between the range of 10 to 12 rupees per SCM. Secondly, there's soft LNG prices. Now, recently the markets, they were tightened, but now there's some softening expected in the prices. Global capacities from Qatar and USA are also going to come online over 2024, 2026, which will also help keep prices in check, and Mahanagar Gas could use this as an opportunity to purchase gas at a lower price. Next is the Unison Enviro Private Limited acquisition that Mahanagar Gas did for around 530 crores, and this will help acquire different geographical areas in Maharashtra and Karnataka for the company, which will also help volume growth, and they expect 11% volume growth in FY25. And lastly is the EV penetration risk. While other city gas distribution companies do have some risk, especially in the Delhi NCR region, because of the policy support, in Maharashtra and especially in Mumbai, the EV penetration is only at 4 to 5%. Hence, the risk from the decline in volumes in the MMR region stands lower for Mahanagar Gas, and that's what we have from Jefferies on the stock itself.
Right, so a lot of insights are coming in from the Jefferies report on Mahanagar Gas. Mika, thank you so much for joining us and taking us through that. Mr. Chokalingam, pardon me, your view on MGL as well as the entire city gas distribution sector. How are you approaching this?
Yeah, short term there would be negative news because until election results are over, there may be some pressure on the gas prices. However, to be fair to the stock, it's trading in quite a single-digit PE now on 1 year forward earning, and that gives a little good attraction for the stock. So therefore, I would give hold rating for Mahanagar Gas.
All right. Well, that's the view coming in as on the city gas distribution companies. And on that note, we slip into a short break, but don't go anywhere. On the other side, we get you a lot more in terms of stocks. Stay tuned in.
Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable show.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid-cap stocks and small-cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
All right, well, we move on to a Wockhardt, which is also in focus today. And well, we understand that we're coming through on a story we had reported some time ago. But I'm going to say no more and get in my colleague Smriti to tell us a little more about that. Smriti.
Right, so Wockhardt is in focus today after they launched a QIP. Now they've launched with a base offer of 350 crore rupees with a green shoe option of 220 crore rupees. And the issue price for this is 517 a piece, which is a 5% discount from 5.3% discount rather from yesterday's close. Now, we also spoke to some other sources who told us that the demand seems to be strong for this QIP. So that's something to watch out for. And just to remind you, we broke this story on February 26, where the company is going to launch a QIP. Now there's a slight delay in that launching, but it has happened. Just to tell you, there's an equity dilution of 7.11% post the issue that's going to happen. Now remember that in August of 2023, shareholders had approved a proposal to raise 1600 crores from private or public placement, and of that 1600, the company is now trying to raise up to 570 crores from this QIP.
All right, Smriti, thank you so much for getting us those updates. Mr. Chokalingam, Wockhardt has been not without volatility of its own, but it does seem like it's steadying itself just a tad bit at the moment. How are you rating this counter? What is your view here?
I'm a bit surprised that, despite having a 7% discount to market price, the market has rewarded the stock today. If I look at enterprise value to sales, it's about 3.6 times. And if I look at 9 months results or last 5-year results, most of the time it has posted losses. And if, in my view, 3.6 times enterprise value to annual sales is fairly priced for this loss-making pharmaceutical company. Yes, it is good. Long term, the mobilization of resources can help the company because it is also sitting on still high net debt, which is close to 2,200 crore. I would, sell, and if its stock falls at least about 10%, then only I would consider buying the stock.
All right. Well, let's shift focus to the auto pack now. And the auto pack was the talk of the town yesterday, in as the management of Maruti Suzuki, of course, and besides that, we understand that as the MG, the joint venture with JSW Group has unveiled yet another version and an all-electrical convertible roadster in India. And Maruti Suzuki, of course, also touched about 12,000 yesterday. In an all-exclusive chat, we spoke to Shashank Srivastav of Maruti Suzuki, and this is what he had to say about the CV plans. Listen in.
There are the adoption of EVs in India is still pretty small. It's just around 2.1%. And it has been found, if we look at the other countries, whether it's France or Germany, China, Korea, etc., if the penetration of EV actually goes up, there is an inflection point at somewhere around 4.5 to 5% penetration. That is expected in 2025-26. So I believe that point we will reach the 4.55%. And therefore, I think we are on the right track as far as the timing of the launch is concerned.
Right. Mr. Chokalingam, a lot of things happening in the EV space right now. What's your placement on Maruti Suzuki, I'm sure that usually, people don't tend to go long on stocks which are trading at life highs. And that, of course, is the case for Maruti Suzuki. What is also interesting is that now the JSW Group is also entering the EV space with their JV with, something like an MG Motors. What's the way forward here?
Yes, I read this news. I'm not worried too much in the short to medium term because one thing is very clear. As a student of economics, I can tell you that it's not going to be that easy to dismantle the leader in the industry in the short to medium term. I have not come across in the last 3 decades any sector where the leader was dismantled in the short to medium. It takes a lot of time. If at all some new entrant is bred and to dismantle the market share of the leader, it would take at least 2 to 3, 4 years to make any meaningful dent, unless it's a technology product and the technology changes so fast. So I would believe that the short to medium term there is nothing to worry. And the other reason for being confident about Maruti Suzuki is that though they have been degrowing in the small car, the utility vehicle sales growth is phenomenal. At times they are growing anywhere 80 to 90% on year-on-year basis. So that is helping them to come back to 50% market share. I believe they would come back to that 50% market share in the short to medium term. And in fact, we have given a hold rating. I would say hold the stock at least till it touches close to 12,600 to 13,000.
Okay. Well, on that note, Mr. Chokalingam, would take a moment to thank you for joining us and taking us through your views on the several stocks that we wanted to address today. And with that, it's a wrap. But as we do wrap the show up, listen in to CEO of Akasa Air, Vinay Dubey, talking about the international scrutiny Boeing is undergoing and due to the security concerns and a lot more. Stay tuned.
For the moment, we are extremely pleased with the performance of the aircraft. On the other hand, we'll say that no amount of focus and safety is too much. I will say that some of the incidences have happened with the variants of the MAX that we don't have. And they've happened to modifications of variants that we don't have. So there are certainly mitigating circumstances in those that we are not exposed to at all. And so I would say for us and at Akasa, unequivocally, we feel very safe with this particular aircraft, and we look forward to this amazing growth that's ahead of us.
If you look at what the FAA's concerns are with the MAX series of aircraft, it has a lot to do with manufacturing standards at Boeing. So in as much as the variants that you operate may not have faced any safety issues, it's the overall concern of quality manufacturing that extends beyond the types that you operate. Again, is that an area of concern?
So like I said, there's no amount of focus in safety, whether it's from us or a manufacturer, that's too much. The second thing to keep in mind is that the FAA is and continues to provide certifications of airworthiness. So if they actually thought that there were concerns that prevented this particular aircraft from being airworthy as we fly it today, it would have showed up in that. So for the moment, like I said, we would want ourselves and everyone in the aviation ecosystem to continue and redouble their efforts in safety. But we have no concerns at this point in time at all.
Co-powered by Canara Bank. Together we can.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
When a strategist uses the term mean reversion, it tends to scare, especially when the markets are trading in or around new highs, if you will. And I think the note from Alpha Strategist, which is authored by Motilal Oswal Private Wealth, has used the term mean reversion. It leads me to question our two guests about what is their near-term outlook on risk assets across portfolios, which is fixed income, gold, and equity markets. Ashish Shankar and Nitin Shanbag join me to talk about this. Gentlemen, thanks so much for joining in. I'm just asking you, what are you trying to imply when you use the term mean reversion?
Hi, Neeraj. Always a pleasure to speak to you and your viewers. Look, I know the word mean reversion, elicits a lot of things. But as you know, the January edition lays the tone for the year for our clients as well as investors. So I'm just going to spend maybe a minute on the tone that we set at the beginning of the year and how that has kind of dovetailed into the theme for the month of March. Now, if you remember January, we had said that all asset classes look fully valued. And hence we said this is the year of the all-rounder, which means that investors are better off having allocation across asset classes, and there is no reason to go overweight or underweight on any asset classes because all asset classes look fully valued and all of them look reasonably attractive. Now, if you know, the last 3 years have been spectacular for equity markets, and within that, mid and small caps, especially in the last 1 year, have done extremely well. So much so that the valuations of the mid and small cap space have gone at a premium to the large cap space. Right now, whilst it may be justified due to earnings growth, but historically we've seen that mid and small caps are very cyclical, and they end up eventually trading at a discount to larger cap counterparts. Right now, the reason for the term mean reversion in this particular edition is that we believe that valuations will somewhere readjust. Now, there are two ways valuation can readjust, Neeraj. One is the mid and small caps correct sharply, right? And as a result, they come closer to their large cap counterparts in terms of valuation, or the premium kind of narrows. The second way is the large cap counterparts do well and the mid and small caps take a breather. Okay, so we are no way implying that we are bearish on the market, but we do believe that a bit of both will occur. So which means that you will see some rotation into the larger cap companies, because from pure valuation point of view, they're looking a bit attractive. The mid and small caps from a valuation point of view are looking relatively a bit more expensive. So possible that some of them might correct a bit and the larger cap counterparts may catch up. So that's the kind of rotation that we believe is likely to happen. Now, often it so happens that every correction comes with some narrative. And then when we look back, we say, oh, the SEBI came down heavily on the small and mid cap part of the market, or now, like we are seeing commodity prices move up and the inflation narrative beginning to ratchet up. So all these things eventually happen, and these narratives start building up. But at the core of it, I think is valuations. So that hence the word mean reversion.
The question though that I ask to both you, Ashish, and Nitin, is that the valuation differential has existed now at this alarming level too, if you will, for the last 6 to 9 months, right? So why now? Why this case for mean reversion now?
Yeah.
Okay, so
interesting.
If you look back over the last 4 years, and I'm just carrying forth the point on the earnings growth that Ashish mentioned, and we have covered a very interesting aspect of it in our Alpha Strategies edition as well. So if you go back to March 2020, which was the onset of the pandemic, and you now look at the end of earnings for December 23. So that's almost close to 4 years. The large cap earnings have compounded at 17%, okay, which is very, very significant. And obviously we know that the last 3 years has been double-digit earnings growth consecutively. And this year we'll have the fourth consecutive double-digit earnings growth. Surprisingly though, if you look at the Nifty 500, that has compounded at an earnings growth of 32%, right? So it has significantly outperformed the large caps, and the Nifty 500 comprises all the mid cap as well as the small cap universe. Effectively, if you take the 450 stocks, so Nifty 500 minus the 50 large cap companies, 450 stocks in our Indian domestic context have compounded earnings at close to 70% in the last 4 years. That is very, very significant, right? And the market cap that has changed during this time period has actually not kept pace with this kind of earnings growth. So what we are saying is there are two elements out here, Neeraj, that one, the fact that stock prices are slaves to earnings growth comes to the fore from this, right? Second important point is that the kind of formidable earnings growth that we have seen in the last 4 years, we believe that for any expectation to have going forward that the run rate will be the same is, I don't think, very prudent. And hence we believe that, given the sharpness of the rally that we have seen in the mid and small caps, there is a likelihood that these valuations, as Ashish also very rightly mentioned, are likely to correct in either of these ways, right? So either the mid and small cap prices will correct, or the large caps will outperform going forward. And hence today, our bias for incremental portfolio allocation happens to be large cap as well as multi-cap strategies, which any which ways tend to have a slightly large cap bias.
I'll just add a little color to it, Neeraj. See, in the last 3 to 4 years, and I know, you're questioning the timing as to why now the mean reversion. See, if you look at the last 3 to 4 years, I mean, one of the things that has driven earnings growth is also base effect. Because prior to 2020, what had happened was you had the entire NBFC crisis, you had demonetization, and the mid and small cap space really struggled. They had balance sheet issues. Even from a sector point of view, there were multiple sectors exposed to the investment cycle which were not doing well. Now, over the last 3 4 years, you've had a lot of one-offs. Like in banks, you've had write-backs. You've seen massive balance sheet cleanup, and that resulting in earnings growth translating into high double digit. Even in mid and small cap companies, you've seen balance sheet cleanups, deleveraging, and many sectors which were not earlier participating in the profit growth in the economy have started participating. So multiple factors have come together and there has been a confluence. So every quarter we've been observing. Now the last quarter, if you look at December, it seems to us that from here on, the earnings growth will be more normalized, which means that the kind of earnings growth that we've seen in the last 3 4 years and the re-rating that we've seen on some of these stocks may actually become a little more subdued.
Okay. In some sense, are you saying that even if the actual numbers of earnings go up over a period of the next 24 months, the valuation multiple will be the slave to the pace of growth or the delta, and because that is slowing down, we might see a bit of a pull back in the multiples that the mid space is enjoying?
Absolutely, bang on. Because when you have rising earnings, that definitely leads to re-rating. But as the pace of earnings growth slows down, markets tend to become a little more sanguine about the multiples. So that's exactly, and we've seen a lot of re-rating happening. I mean, you look at the smaller NBFCs, I mean, even the government ones, where they were trading at 0.5 times price to book, they're now trading at 1.5 times price to book. You look at some of the cyclical sectors where the price to book was lower than 1. A lot of them are now above 1. So a lot of the re-rating, according to us, has happened. And from here on, earnings growth will dictate how the returns shape up.
Just the other aspect before, in keeping it macro, in some sense, because you guys talk to, service HNIs, talk to them, give them options, are people wanting to, and are you also telling people to, when they get out, or let's say partially book profits, or kind of correct their positioning into equities, and particularly the SMID space, is the money being recommended to go back into equities alone, or is that money flowing into other options?
Yeah, so here for us, the first point is the investment charter, which we request all our investors to kind of adhere to, right? Because that inculcates a lot of discipline. So before trying to make any ad hoc decision, the first aspect is to revisit your asset allocation and be disciplined to it.
Sure.
And that also is true for any incremental money that you're doing.
Agreed.
So with response to your question on profit booking, etc., let's take an example. If you have an equity portfolio where a client has, let's say, 50% large cap and 50% to mid and small cap, and that's what is dictated in his investment charter, that he can adhere to this allocation, that he actually does not need to do too much. Of course, if his mid and small cap allocation has far exceeded his, whatever he's put.
Nitin, sorry, I'm coming in, but my limited problem is, I'm sure for individual people it'll be that way, but en masse, if I take an average, what is your advice been per se now? Are you telling people to get out of SMIDs because the valuation issues are there per se, and put that money into large caps, or put that money into other asset classes? Broadly, as an average.
So Neeraj, the advice you're right is to go into the large cap or the flexi cap category from the SMIDs. But overall, we are not asking people to increase their equity allocation beyond their. I mean, we're not telling people to go overweight in equities. The advice remains the same, that you stick to your allocation, but you go marginally into more large and flexi cap kind of schemes.
But not move out of equities, I presume.
No, because on the whole, I think market valuations still look okay. Certain pockets look overvalued, but see, the other thing, Neeraj, is that we've seen over the last 4-5 years the cycles are very short. So whilst we are right now telling you that, look, the SMIDs look a little expensive compared to the large cap peers. Now, if let's say the market has a sharp correction, and we know in mid and small cap, the index corrects 10-15%, stocks can correct anywhere from 20 to 30%, right? So this entire narrative could get over very fast. So we are also watchful of that.
That's true. And viewers, that chart, and this chart will probably come up on your screen as well. The Nifty P 1 year forward, the 10-year period average is about 20.3. As things stand post the corrective move that we've seen, we're probably at 19.5 or thereabouts as per this note. So in some sense, that validates the point that Ashish was just making. Okay, Ashish, Nitin, thank you for making that point. We'll just take a very quick break and we'll come back and talk about some of the other aspects that are highlighted in the note. Maybe we'll try and talk about some of the specifics, outliers, what could go against this grain currently. Also try and talk about some of the other asset classes. Stay tuned.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks.
Welcome back. You're watching this conversation on Alpha Strategies, the note put out by Motilal Oswal Private Wealth, and the authors of the note, Ashish Shankar and Nitin Shanbag, with us on the show. They have sounded off the bugle of some caution required at the small cap and the mid cap end of the market with the reasoning given. Remember, they said, if you watch the show from the beginning, they have said that there is no cause for any kind of panic, and the corrections, which if they come, might even be short-lived. So in some sense, they admit that it's very difficult to predict or give a call at book profits and move out of equities. So that's to be kept in mind. Just before we move away from equities, Nitin, let me start this with you. What are the outliers to your mind within this caution on the broader end of the spectrum? Because there are some companies and some sectors and some themes which are promising some very strong earnings growth, and for them the earnings growth has still not happened but will probably happen over the course of FY 26-27.
Yes, and here let me take you guys back to the era of 2003 to 2007, because we believe this in many ways is very similar to that bull phase that we saw, right? Because it coincides with the kind of earnings growth that we had seen. Now, one thing to be kept in mind is that during that particular phase, the old economy sectors, typically your capital goods, infrastructure, engineering companies, and what we otherwise call cyclical companies, did remarkably well, right? Because there was this whole host of capex. The entire capex cycle had begun at that point of time. We saw a lot of greenfield projects being announced, and right now the capex has been started from a private standpoint, largely led through the PLI, right, which is the production linked incentive scheme that the government has given. But there are some new emerging sectors which had not been in existence in the last few years. The entire renewable space, defense, semiconductors, electric vehicles, solar, so on and so forth. These sectors which are emerging are likely to contribute to nearly 1/3 of incremental industrial capex over the next 4 to 5 years. Right. So we are already seeing semblance of order book building up within these sectors. And we believe that earnings growth is likely to be fairly significant. Right. At the same time, I think the core sector, which is BFSI, banking, will continue to do well. Some of the sectors which have not really done well in the last, let's say, couple of years have been IT. Right. And that's also a function of what has happened in the US, the global markets in particular. So I think IT and consumers, given the fact that the rural economy hasn't quite come off the slowdown. It's improving though, but in a fairly gradual manner. Urban consumption seems to have played out fairly better on a relative basis. But these are the two sectors to watch out for going forward. And I think in combination, these are some of the areas which could drive broader market earnings growth going forward.
Shish, is there a case of mean reversion in these two as well? I mean, and is there a fundamental case for the mean reversion to happen?
Yeah, because look, if you look at the IT space, right, it has hardly performed. Okay, even consumers, FMCG volumes have not really picked up. So is the case with durables for that matter. So there certainly is a case for mean reversion in terms of earnings growth out there.
Mm-hmm. Okay. Ashish, on the fixed income side, you guys are saying that good times ahead for Indian government bonds. It's something that we spoke about a couple of episodes ago as well, but maybe good to rehash this again from a perspective of timing and from a perspective of how incremental investment in equities, particularly the small cap end, is not necessarily the best idea right now. What about bond markets?
I think bond markets will continue to be extremely positive, Neeraj, because if you look at the inflation data in the US and the in India and the expectation for next year, we are comfortably in the range of 4 to 6 that has been laid down by RBI. In fact, incrementally, we are seeing inflation coming off because we had one major spike last year due to commodities and food grains, etc. So inflation is comfortable. On the external front, we are very, very strong now with reserves of more than $600 billion. And, your current account deficit is gradually coming off because we are trying to do import substitution. So on the whole, I think, and tax collections have been extremely buoyant. So on the whole, the balance sheet of the government and the P&L of the government is extremely strong. Now, the inclusion of our bonds in the global bond indices will actually see flows coming in, I think, sometime mid of this year. And it could be fairly significant. So the case for bonds is only getting stronger. I think if yields do spike, and that's what I see, yields spiking a bit as we speak, I think it's another opportunity to enter. And I think longer the better. We are saying that, 10 years is great, but if you can do 15, 20, 25, if you can prolong the duration, obviously the gains can be that much more significant because of the duration being longer. So we continue to be extremely positive, Neeraj, on long bonds.
And in some sense, while JPM was known, there is this Bloomberg index, while it's the minor one, but out there, the major one may be due to follow, etc. Does that add the attractiveness to the Indian bond markets? And do you think, my question rather is that, do you think that this could actually be sustainable looking at the fundamentals of what's happening to the current account deficit, so on and so forth, and the quantum of flows that are likely to come into the bond markets?
Yeah, I think it will be very sustainable, Neeraj. I mean, you can build a portfolio of long bonds with a slightly longer term view. And the fact that you have imminent foreign flows at the horizon means that there'll be no crowding out. Because typically you're scared that there might be crowding out in the bond market the moment government comes and issues paper. Because banks are also fighting for liabilities on the other side. The credit deposit ratios are quite constrained. So with a fresh flow of capital coming into bonds, I think the crowding out effect will not be there, and it will allow yields to head lower. And let's see, I mean, how the US Fed, what is the narrative set by the US Fed? I think, we are talking about 2 to 3 cuts this year. So that will also help.
What else, therefore? So one is equities, and you've given us some sense there, fixed income. Anything around gold? I mean, if we covered Bitcoin, then it would have been a fascinating conversation by virtue of what the crypto has done recently. But anything on gold?
Yeah, for us, gold has always been an asset class which is to be married with risk, right? So any portfolio which is, high on risk assets, which is typically equity, needs to have at least 10 to 15% of gold. And one of the key reasons for this is that, look, at the end of the day, there are quite a few geopolitical events that are happening in the world as we speak. There is also this inflation, although it's not a scare, but it is somewhere out there in the horizon. And historically speaking, gold has often been touted and proven to be an inflation plus kind of asset class. Whenever there is a risk of trade in the market, gold typically tends to do well. And when you have a combination of equity and gold, it does very well for the portfolio in general, because when equities do not do well is when gold actually outperforms. And in the last 4 to 5 years, you've had plenty of such events, right? You've had the IL&FS crisis, you've had COVID, you had the war breakout between Russia and Ukraine, so on and so forth. And in each of these time periods, you will see that gold has acted as a hedge and has been a booster from that perspective. So whenever, gold tends to do well, what we typically advise clients is to take some money off and shift it into equity, because that's how you kind of average out your money flow into the risk assets.
Okay. Well, viewers, when one of the largest wealth outfits speaks about mean reversion, about incremental equity allocation, a suggestion of 100% lump sum in large cap and multi-cap strategies, and not at the broader end, and recommending gold and recommending fixed income, where the winds of change might be in some sense for the very short term. But as they said, not to get out of the equity markets, because corrections are difficult to predict and can be very, very swift, maybe even shallow. Who knows? Gentlemen, both of you, thank you so much for sharing this intelligence with us and for giving us your time today, and look forward to, of course, talking to you next month.
Thanks, Neeraj. Always a pleasure.
Thank you very much.
Likewise. And viewers, thanks for tuning in.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash, made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money,
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company, some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Benchmark indices extend gains after the US Federal Reserve kept interest rates steady in March for the 5th straight meeting.
All sectors trade in the green. Metals and PSU banks top sectoral gainers.
NDTV Profit told you first, and now it's confirmed. Wockhardt has initiated a QIP to raise up to 570 crore rupees. Stock is off highs after climbing over 3% on the news.
Rate cut hopes are back at the US. The US Fed hints at 3 cuts coming sometime this year, but sticks to inflation control.
On the back of dovish commentary from US Fed, gold rallies to a record high of 66,778 rupees.
welcome. You're watching Market IQ. I am Pallavi Nahata and with me is Smriti. Hi Smriti.
Good morning, Pallavi. Good afternoon.
Absolutely, and it is truly a good afternoon. So, before we can delve further into the show, let's have a very quick look at the markets. The reason we do find it to be a bit of a good afternoon is because most of the markets in the green. It's been a choppy, volatile past week, 10 days, and today is a bit of a breather. It's fairly refreshing to, like we said, see so much of green back on the screen. The Nifty 50 is still clinging on to the 22,000 mark. It's up by almost 0.75%. The Sensex too, again up by about 0.75%, and clocking in over 500 points in today's in gains in today's day of trade. And broader markets too actually are rallying. They're performing even better actually than the benchmark indices. The Nifty mid-cap 150 is up by over 1.5%, while the Nifty small cap 250 up by almost about 2%. This is of course all on the back of strong global cues. We saw the Federal Reserve announce its decision to hold rates, but it continued talking about 3 rate cuts like we were earlier expecting, and we have seen global markets react well to that piece of information, Indian markets being no different. Most of the sectors also very much in the green today. Nifty consumption, Nifty FMCG, Nifty IT, all in the green. The top gainer of course is the Nifty PSE. It's up by almost 3% currently. Nifty Realty, Nifty Metal also both up by about 2%. Like we said, most sectors in the green. But this of course warrants a closer look at some of the Nifty 50 constituents as well. Again, most of them currently advancing in today's day of trade. A few declines, but a majority of them in the green. NTPC is the top gainer in the Nifty 50. The stock is up by almost about 3.5%. BPCL 2 up by almost 3%. Tata Steel, Power Grid, both up by over 2%. But let's have a look at what's not performing so well. Yes, so Infosys, TCS, Bharti Airtel, Maruti not having a particularly good day of trade, but like we mentioned, the broader indices as well as most constituents in the Nifty 50 in the green. But Smriti, tell me, what stocks are you tracking today?
Well, you mentioned about the benchmark. Let's quickly look at the broader end of the spectrum as well and see where the mid caps and small caps are doing. And you can see they still continue to perform, they still continue to outperform the benchmark indices, still up about 1.7%, and Nifty up over 2% as well. So let's talk about some of these stocks. The one on my radar today is Wockhardt. Now, you heard it first here at NDTV Profit. We broke the story that the company is going to launch a QIP, and that's confirmed now. So the books open today for that QIP, and from what we're picking up, this demand seems strong. So for Wockhardt, it's up about 0.7%. However, it has come off days highs, and the QIP is for 350 crore with a green shoe option of 220 crore, and the issue price is 157 a piece, which is about 5% discount from yesterday's closing price. And seems like the demand is strong here, but we'll definitely get to know as the book closes today. So we'll see what kind of demand is showing there. But another stock on my radar is something like an RVNL, and let's pull up that chart and see where that's currently at. It did gain, yeah, it's up about 2.5%. over 2.5%. Now this comes on the back of a news that came about an hour ago or so, that it was the lowest bidder for railway project worth 167 crores, and we've seen some past orders come up as well in terms of these railway orders that RVNL has been getting. Can we also pull up the 5-day chart and see how has RVNL performed in the last few trading sessions? So there you go. It's okay, yeah. It's done fairly well for the last 5 trading sessions, and so that's the railway pack that we're seeing. And there's something like a MGL as well that is also up in trade today. Now this comes on it's up about 1.5%. This comes on the back of a Jefferies note that has maintained the buy on this particular stock with a target price of 1,540, which is an upside of about 22% from here on. So that's pretty much the picture, and some stocks that are moving in the mid-cap space. But another stock that we're going to talk about is Jupiter Wagons, that is edging up today around 3% on the back of an order win. We spoke to the MD Vivek Loya earlier in the day, and here's what he had to say about the revenue mix.
Margins are much higher than on the wagon side of the business, and there is again a huge export component to this business, which again the margins are typically much higher than what we have in India. And in terms of revenue, again, going forward, it will play a substantial role. Second is our brake business. So today we have started supplying the brake disc and the brake system to Indian Railways. So that business, again, in the next 2 to 3 years, we expect that to be about 1,000 crore business. And definitely the margin profile is going to be much better than the wagon business. And thirdly is the EV segment and the renewable energy segment, which we have entered into. So there also we see a huge potential. So the idea is that over the next 2 years, we want at least 40 to 50% of the revenues of the company to come outside of the wagon business.
Smriti, apart from some of the stocks that you've pointed out, another stock on my radar today morning is definitely BSE. The stock is up almost about 8%, largely on the back of Investec's note. Investec upgraded BSE to a buy with a target price of 2,800 rupees. So quite a bit of an upside, Smriti, from the current prices. And Investec's rationale is that the company continues to witness strong traction in equity derivative volumes. Option market share has jumped 3x. There's also clarity expected on margins and profitability, along with an expected improvement in the margin profile for the ongoing quarter for this stock. So the recent correction in the stock also means that it's a good time to buy. That's according to Investec. Another stock, of course, is IOC. A whole bunch of the power and energy stocks have been buzzing today, IOC being one of them. Citi has upgraded this stock to a buy with a target price of 179 rupees. Citi says that sentiment dampened by cut in petrol, diesel price, up move of crude profit taking in PSUs are some of the factors that it's closely tracking the stock. The price cut, however, is likely to be temporary, providing an attractive entry point in the medium term for those who want to pick up this stock. There's also a positive view on the margins, but the research, the company says that it's watchful of downside risks from, of course, the geopolitical scenario. Another stock is IRB Infra. It's been buzzing. It's up almost 7% in today's day of trade. That also, again, after Kotak Institutional Equities upgrades the rating to add from a sell. For more on that, my colleague Anushi joins us with the report.
Quite a field day for IRB infrastructure back on the Kotak's note over here, wherein they have changed the rating from sell to add for the company. Now, a couple of reasons that they have cited. One is the adjustments that the company sees in its valuations, especially after its private InvIT assets. Again, over here, the focus also remains on the comeback of the BOT projects, that's the build, operate and transfer projects, and the TOT projects as well, as compared to the EPC and HAM projects, which continue to remain in focus. So it sees IRB benefit as a key beneficiary to the NHAI's move to bring about $444 billion worth of BOT pipeline over the next course of years. Again, this is on the back of the company's balance sheet that it has seen. So it sees some strength over here with its net debt to EBITDA at comfortable levels to take these acquisitions going forward. So that definitely remains on the watch list. Also, if you have to look at the valuations wise, the company has revised its estimates by about from 1% to 7% over year for the between the period FY24 to 26. So again, that plays favorably for the company as well. So these are the couple of reasons why the company has been on the focus, which is on the back of the Kotak node, as you see.
Well, thanks, Anushi, for that. We're seeing that action happening in IRB Infra. But let's talk about the steel stocks. There's steel stocks like JSW, Tata Steel, Jindal, all moving in trade today. You can see those gains coming in on JSW, that's up about 1.7%. You have something like a Jindal Steel that's up over 4.5% as we speak. Then there's something like a Tata Steel that's also up close to 3%. Now, this obviously comes in the wake of the new EU policy. Indian steel makers are likely to see a 25 to 30% impact on their profitability. The European Union's carbon border adjustment mechanism requires steel makers to pay 60 to 80 euros on per ton of carbon dioxide emitted during production. Now, Vikas joins in to tell us more about this.
Indian steel exporters are likely to see an impact of around 25 to 30% on their profitability once the European Union imposes the carbon border tax from 2026. Indian companies will have to pay close to 60 euros to 80 euros on per ton of carbon dioxide emission that will be happening on the production of primary steel. Now, this happens mostly because India's carbon intensity is almost 12% more than their global peers who are also exporting to European Union. Indian companies, especially Tata Power, especially Tata Steel, Jindal or say JSW Steel and ArcelorMittal and Nippon Steel will have to take massive capex to meet or to comply to these global standards. They have already started taking or undertaking steps like converting their power plants to renewable power plants. Indian banks and NBFCs are offering them incentives to phase out their conventional power plants. Government on their part is also planning to regulate carbon emissions in the country, and they are planning to come out with 25% tax on exports. India is also planning to launch the carbon exchange where Indian companies can trade on carbon credits. However, if India is not able to meet all these standards or to comply with these standards, they will have to keep their export destination strategy ready where they can diversify to other countries.
Thanks, Vikas, for that. While there may be a dent of 25 to 30% on these steel makers, the stocks are definitely not showing that, and that's probably because the steel makers, as Vikas pointed out, have started taking measures to overcome that. But let's take a quick break now, and we'll be back on the other side with more news and updates. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Welcome back. You're watching Market IQ on NDTV Profit. Now, healthcare associations have joined the legal battle against standard rates for medical procedures. My colleague Monal joins us with more on that. Monal?
Healthcare associations are stepping up, and this is in response to the Supreme Court's directive ordering the central government to come up with a standard flat rate for medical procedures across the country. Now, our conversation with a legal expert indicates that the Supreme Court can direct and allow the center to set prices for commodities and services, just like it did in the case of drug price control order a couple of years back, setting a standard price for essential medicines across the country. The intervention filed by the associations is majorly on two grounds. One is the right to free trade, and the other involves the complexity that is involved in setting a flat rate for these medical procedures, because there are a lot of variables including geography, the kind of machinery involved, the level of specialization of doctors, capital investment, fixed costs, affordability of patients, among others. Now, CGS just had set prices in 2014, and this is the price, mind you, that the court said that it will implement across the country if the center does not step in. So it was set in 2014, and there has been no upward revision since then. Also, it's been said that the private sector, it will be impossible for them to offer their services at the same rate as the public sector without the kind of subsidies that are given towards the public sector. So all of this could indicate that it's going to be very difficult to set one national price across the country, and letting the market decide a common price would be the best way to do this.
Thanks, Monal, for that. Let's shift focus to the energy space now. If you look at the index today, there's out of the 10 constituents in the Nifty energy index, it's up about 1.5%. There's only one declining while 9 of the stocks are advancing, and you can see gains in NTPC, BPCL, rail infra and power grid. So a lot is happening in the sector. Now this obviously comes on the back of oil marketing companies after the government recently announced a fuel price cut of 2 rupees per litre. We spoke to Prabal Sen of ICICI Securities earlier today, and he says that prices here on will remain intact till the elections are over. Listen in.
The reduction in fuel prices by 2 rupees came at just the time that after a prolonged period of softness, the crude and product prices both internationally have started to actually rise up again. So to that extent, obviously the marketing margins, for retail fuel certainly are likely to see a downward pressure for the next couple of months. Our core assumption, of course, remains that, given the timing of the cut, we would not really build in any fuel price increases till the election is over.
Moving on, the Federal Reserve Chair Jerome Powell on Wednesday maintained a dovish stance on rate cuts amidst a strong labour market, and he foresees 3 rate cuts in this year. Let's listen in.
I mean, you saw last year very strong hiring and inflation coming down quickly. We now have a better sense that a big part of that was supply side healing, particularly with growth in the labor force. So in and of itself, strong job growth is not a reason, for us to be concerned about inflation.
Well, that was Paul talking last night on the Fed policy. But Akasa Air CEO Vinay Dubey told NDTV that there is no linkage between flight cancellations and shortage of pilots. He spoke to my colleague Vishnu Som about the company's strategy to train, hire and retain pilots to operate Boeing 737 MAX aircraft.
Let's just start with the numbers. Today, Akasa has almost 700 pilots to the top. Very, very close. I think maybe 697, something in that neighborhood. So attracting pilots to Akasa has not been an issue so far. And that's because we genuinely are, very safety focused on the one side. We have modern technology that really is going to be something that the pilots will be trained on and is the aircraft for the next 15, 20 years. So it's extremely important for the development of their skill set. We're extremely employee-centric. And so for all of these reasons, we haven't had an issue either attracting or retaining pilots today. In terms of training, we're very excited to have this agreement with CAE. It's the largest training provider, but they're also one of 2 OEMs that actually manufacture simulators. And so it's not just training, but it's also, an important element of training from a simulator perspective. And so we don't see this as an issue at all from Akasa's perspective. We are a team of hardcore planners. We're aviators. We know it takes X number of years to make a captain. We know it takes, Y number of years to make a cadet. And we're just ahead of the game.
Yeah.
And that's been our modus operandi since we started.
I asked this because a couple of days back, and you did issue a clarification, there were 10 flights apparently which got cancelled in a finite period of time, apparently because there was some pilot shortage. Would that be because of non-availability of pilots because the training regimen fell behind schedule? Or did it have anything to actually do with the number of pilots you have on call?
No, Vishnu, neither. In fact, I'd like to correct it. I don't think we had 10 cancellations or so 10 days ago. So first, let me provide statistics, in terms of Akasa's reliability. If you were to look at DGCA statistics, and they publish it every single month, I think you'll statistically find that Akasa has the lowest number of cancellations and statistically is the most on-time airline in India. Mm-hmm. We also believe that we have the best baggage performance in India. So first and foremost, I just want to set that base in terms of our hyper focus on reliability, right? Unequivocally, the most on-time airline. Second, when it comes to a cancellation here and there, and every airline is subject to it, it's absolutely not due to a shortage of pilots, I want to assure you. Yeah. Can we, as an airline, continue to improve our focus on training and training throughput? Absolutely. But
All right, big breaking coming in. In a big boost to the center, the Supreme Court has dismissed an application seeking a stay on the appointment of new election commissioners. The Supreme Court said that staying recent appointment of election commissioners would result in chaos and uncertainty with elections around the corner. But that's all that we have on this edition of Market IQ. But don't go anywhere. There's lots more lined up here on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Welcome, you're watching the Mutual Fund Show on NDTV Profit. I'm Tamanna Inamdar, and of course, this is the show where we help you decide and plan your mutual fund investments. Every day, we speak to the top experts in that field and talk about what you should do with your investments. Today, we're talking about systematic transfer plans, or STPs. Now, we keep talking about SIPs, but STPs can also be a very valuable tool when you want to deploy money. And the reason we want to talk about it in this period is because this is possibly a time when you should be looking at STPs. We're going and moving towards the end of the financial year. Those of you who are salaried employees may have a lot of money coming in terms of reimbursements for the full year. There could be bonuses in play, a lot of accounting to be done before you close for the financial year. If that leaves you with some amount of investable surplus, a lump sum for example, is STP the best way to do it? That's what we're going to talk about today, among other things, and of course we'll be taking your questions through the show as well. Now, to speak on this, I'm joined today by Arnav Pandya, who's founder of Money Edu School, and Ruchi Sankhe, investment advisor at Infinity Advisors. Ruchi, in fact, with us in the studio, so great to have you here at the NDTV Profit Studios.
Thank you so much.
On the show, Ruchi. So let me start exactly on this point, and let's start from the basics, the ABCs. What is an STP and how is it different from an SIP?
Yeah, an SIP is obviously when you put in money from your bank account to investments on a regular basis, and that on a systematic basis it basically draws down the money from your bank account and takes it for investments. An STP, which is a systematic transfer plan, effectively you put money into a liquid fund, and from there you switch in on a regular basis to mutual funds, to equity or debt mutual funds as you like. So that's a transfer that happens within the same fund house from one plan to another, and mostly it's a liquid fund going in money from there into a equity or a debt mutual fund for a longer term investment basis.
Okay, so why is an STP a good option to use, and when?
So frankly, I'm a very big proponent of STPs. For several reasons. One, obviously, you want to look at rupee cost averaging. So there are peaks and troughs in the market. When you invest in a systematic manner over a period of time, then you get some money through the peak, some through the trough, but you average out your cost of entry. It's also less risky from the standpoint that, the volatilities that you face in the market, you basically say that over a period of time, you're going to average out your entry, so the volatility is also lower. So it minimizes the risk to a certain extent. The other thing that happens is over a period of time, while you've been making these investments, you've put the money into liquid. So liquid also generates some return, and it's more than what it would be if you're just keeping the money lying in a bank. So you also earn incremental returns through the liquid fund plans that you've invested in. And frankly, it's a very good way of doing an objective, structured, disciplined way of investing, because it takes out the emotion. If you've got an STP and the market is at a high, you may be a little bit nervous to invest, and you may say, hey, I don't want to invest at this point of time. But if it's an STP that's already been fixed, then you end up investing even at that point of time. So it removes the emotion and makes it more neutral, the investments. And of course, for those who are a little bit greedy in STP, if you've got money lying in liquid, you can actually switch it into the equity markets much faster as well. So for all of those reasons, actually not the last, I do like STP because it's structured, disciplined, and it makes sure that you are actually effectively deploying and maintaining the asset allocation that you've got a goal or target towards, because you don't want to stray away from that. But sometimes when the market moves and you get emotional, you may want to abstain from investing, and an STP will not allow you to do that. So
I agreed. Greed can sometimes be good. So why not? Arnav also with us today. Arnav, just on that point of an STP versus an SIP, if I were to ask you to break it down into two pros and two cons each, what would you say? And of course, you can add more than just two.
I mean, initially, the first thing is that when do you use an STP as compared to an SIP? In normal circumstances, when you have a regular flow of income or money coming in, that is where you use the systematic investment plan, because it matches with your cash flow. Now, assume there is a situation where you have a big amount, or which is a lump sum, and you still want to deploy that in equities. That is the time when you use the STP, because you don't want that money to be invested at one go and have the risk of that single one-time investment. At the same time, you don't want to be in a situation where you keep that money in the savings account, but by the time you do the regular investment, it's used up somewhere else. So STP is meant for a lump sum amount which you have, which you actually go and put it into a short duration debt fund. It can be a liquid money market fund, and then you transfer it to an equity. So it does two things. It helps you maintain your regularity of investment, and at the same time, it keeps the money out of your spending reach. Now, coming to the pros and cons, now a systematic investment plan is ideal for someone who has regular income coming in and they can do this kind of investment. The other benefit of the SIP is that it averages out your costs. So without you having to look at it and make a call on when the market is high, when the market is low. Those are the main benefits of the SIP. The disadvantage of the SIP is obviously that it's not applicable, or rather it doesn't solve your problem if you have this kind of lump sum amount. While if you go to the STP route, the main benefit is that you earn debt returns over a period in which the money is lying and is being transferred to the equity account. So you do not lose out on the earnings part. At the same time, you are able to achieve the goal of regular investing and averaging out your cost. And the disadvantage of an STP again is simple, that it is applicable only in a situation where you have a lump sum and you want to deploy that. Otherwise, I mean, it does not make sense, because then the SIP route is the easier one to adopt.
So it makes sense if you have a lump sum, and that is crucial to remember. So let me come to the context we set at the beginning of this conversation, Arnav, about this being year end. It is possible you have some money coming your way. In that sense, would an STB be superior to any other route, or a lump sum, a simple lump sum investment? Because then that's the other option I would have, right? To just make those lump sum investments in specific funds which I find useful. Why then should I look at an STP?
No, this is precisely the reason why you should look at an STP. That if you have this kind of large amount coming in, could be a bonus, could be your annual reimbursement which you've not claimed, but the company is now giving it to you. So you don't want to invest in haste, because what happens is that if your final goal is to have an equity exposure, you run the risk of having just a one-time investment time exposure if you invest it at one single go. So which is why that we say that whenever you are investing, you do not know today whether the market is high or low, because it's all contextual and all this will be known only in hindsight. So which is why regular investing into equities is the best way to ensure that you are reducing your risk at the time of investment itself. And that is why if you have this lump sum, you don't want to invest in haste and then repent later saying that maybe I should not waited for some time, or I should have spread out the investment. The STP does this automatically for you. And at the same time, it's not that this lump sum is lying in the savings account earning 3.5%. You are putting it in a debt fund where, due to the current liquidity scenario, you are actually getting good returns on the short-term debt funds also. So that is one thing. And the other part is also look at the current market scenario at this point of time. One, there is this constant worry in the market as to whether there is overvaluation, what is going to happen. Second, with the elections also coming up, there is a bit of uncertainty in terms of how the markets will behave in the short term. So which is why if you spread out the investment, say you get a lump sum, you spread it out over the next 6 months, all these worries are taken care of automatically without you having to take any kind of tension over the next few months, because with elections on the horizon, it's going to get very volatile, and which is where a lot of retail investors could find themselves on a what you call a sticky wicket.
So maybe not the best time for lump sums. Just wanted your take on that as well. In terms of the timing and the context right now, does an STP become a superior vehicle versus a lump sum?
I completely agree. It does become a superior because markets are at a high. In fact, there have been lots of different kinds of modes that SEBI has been using to figure out the stress test, for example, just to make sure that what kind of liquidity is available in, in funds. And some of those actually have been have been quite surprising, the results. They've taken reasonably long for liquidating the investments that are being held by the equity fund. So there is a lot of concern about markets being at higher levels, and I would personally also advise it makes sense to defer the investment over a period of time. So 6 months, 6 to 8 months, and it'll take into account any of the other events that happen during this period of time, for example, elections or anything else. Fed, for example, has kept the interest rates steady, but if the interest rates were to move, there will also be impact in the markets here, in equity markets in India. And all of those variations are actually taken, will be balanced if you do an STP. So definitely makes sense to do STP over a 6 to 8 month period right now, given the way the market is and the levels that the markets are at and the concerns that, even the regulators are seeing at this point of time.
Just follow up on, because you mentioned the stress test and how you found some of the results surprising. Why don't you elaborate on that? Because there has been so much commentary on, first of all, this is hypothetical, right?
Yes, absolutely.
Fine, it's hypothetical, but the fact is that it's a stress test for a reason. And if there's a test, you either pass it or you fail it, or you're graded on it. Yeah. So in that sense, what was your takeaway with what you saw, with some players taking much longer than the others? Obviously, we have to adjust for AUMs, etc.
Yes, absolutely. But even some of the smaller funds, because one of the things that is that if the fund is smaller size, it's agile and it's able to liquidate faster, is the impression that investors have. But that's not necessarily the case. Some of the smaller sized AUM funds have come out in the stress test doing very poorly, and some of the larger ones are quite sort of competitive in terms of the number of days to liquidate 50% of the portfolio. For a large fund like a Nippon India small cap fund is very similar, maybe just 5 days longer than a quant small cap fund, which is smaller in AUM. A Tata small cap fund, which is actually quite small in terms of AUM, has shown the poorest liquidity. So there are differences, and you rightly said it's hypothetical, but it is a good indicator to have, saying that today if there is a run on the market and run on these funds, how long will it take for the investors to get money in their hands? And if someone is looking to sort of liquidate, or they're looking at mutual funds as an investment vehicle for quick liquidity, one should be aware that these may not be so quickly liquidatable, right?
Make a decision on investments, or would you advise people to make a decision on investments based on these stress test results?
Not really, because what I will advise clients is that, for example, when you're looking at investing in small and mid cap, the horizon for investment should be longer. Today, the markets have witnessed very high levels. And over the last 1 year, most of the small cap and the mid cap segment has seen north of 60% kind of returns only on a 1 year basis, right? So it is time to slow down, to be a little bit cautious. But if you are investing in the segment, don't do it for a quick liquidity with quick quick liquidity in mind, look at it for a 3 to 5 year horizon at least. So while I would be cognizant of the liquidity test, I wouldn't use that as a, as a principle for investing in these segments, because really the investments in small cap and mid cap are supposed to be for a longer tenor.
Yeah. Quick word from Arnav, since we've, sort of segued into a very different and slightly, it's a very current top of mind topic. Arnav, just wanted to know and was curious to know what was your takeaway from these stress tests?
So my takeaway, one is that investors should not rely just on this factor for making or either an investment decision or a decision on whether to sell their funds. Second is, according to me, over the next few months, I think we will have to see a change in the methodology of the stress test, because a couple of things are not being included here. For example, it doesn't take into consideration the cash which is maintained by a particular fund, because cash is liquid anyways, but that is not there in this calculation. The other part is that neither is the derivative holding of a fund. So if you include these two things along with the ability to liquidate the part of the portfolio, then I think the picture is more comprehensive. And I believe that over a period, this was the first time that the results were announced, but I think going forward, you will see some change in this methodology, because that will give you a better picture. But I would say that along with all this, look at the other factors involved, which the stress test has also given out, which is that what is the concentration of the top investors into the scheme, because that tells you that how many big investors, or rather what is the weight that these big investors have if it comes to, say, liquidation of the portfolio. The other part is also look at the kind of portfolio turnover which the scheme is doing, which will tell you how fast they are churning the portfolio, the beta of that particular scheme, which tells you that if there is a 1% movement in the market, what is the kind of movement that the fund is seeing. So all these things taken together will give you a better picture, and then you can frame a decision as to whether this fund is actually suitable for your risk-taking ability. That is the main point. Look at your risk-taking ability. Even though small caps are riskier than the large and mid caps, but even within that, you have to see whether a particular style of management and whether the risk element is still not far more, because when you are already making a riskier investment, you might want to play it slightly safe in terms of reducing that risk a bit by looking at these factors.
So we've spoken about STPs. We also spoke about the hot topic this moment in mutual funds, which is the stress test. But after the break, we're going to speak about you. That is your queries, your questions with our experts for the day. So stay tuned for that and more.
Co-presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
this is the part of the Mutual Fund Show where we take your queries. And our first question is from Divya, aged 38. Her goal is financial planning and she's an NRI living in the UK. Says she wants to start an SIP and invest in the stock markets. I'm looking to invest 50 to 80,000 rupees a month for the next 10 years as I am planning to move back to India in the next 10 to 15 years. Can you please suggest some funds that can give me at least 10 to 15% returns with adjusted inflation after 15 years. I'll let Arnav start with this answer. And, you know, interesting that she's in the UK for at least the next 10 years, but wants to invest in India. First up, is that a good idea? And then where does she put the money?
So it's always a good idea to put money in India, specifically at this time or juncture, because of the kind of developments as well as the growth that you're seeing in the economy. And that will be reflected in the overall corporate performance and the stock market over a period of time. So the next few years are a good time to have an exposure to India. Being an NRI, it is possible for her to take an exposure in the country also. It's not difficult. And the mutual fund route is the best route to do it, because you might not be aware of the intricacies of the market and dealing with equities directly. So the mutual fund becomes best route for you to actually take this kind of exposure. The problem here is not with the exposure, neither with the time horizon, because the investment is going to be made over 10 years and the money might be required after 15 years. So the time horizon is pretty long. That solves the problem of where you are going to take an exposure, which is equities, which is also in tune with what her requirements are. But the problem here is in terms of setting of the goal and the expectations. See, what we have seen over the past 2, 3, 4 years is something which is not likely to be sustained at this level. So when you are looking forward, you are looking at
We seem to have lost that feed with Arnav. We'll try and get him back, but an important point he's making, because the expectations there is, 10 to 15% returns with adjusted inflation after 15 years. Is that feasible, Ruchi?
So no, I think what is 10 to 15 crores after 15 years. That's pretty sizable, and I think what Arnav was saying, which I completely agree with, she has to moderate the expectations.
Yeah.
Of course, 12 to 15% is what one could expect. Or one should, this is 12% is an average over the last 10 years. If you look at what the market performance has been, it's around 12% on an annual basis. So with that, between 3 to 4 crores is what she could expect at the end of 15 years. However, it would be a more high risk, high return kind of a portfolio. So if she is looking at mutual fund route, which is obviously the right way to look at it, multi-cap, mid-cap, flexi-cap funds would be the right ways to take sort of an exposure into the Indian markets, because it gives asset allocation between mid, small and large, which is in a way sort of determined by the AMC, and also gives a higher return because of exposure in this, the mid and the small cap markets. So I would suggest that 50,000 to 80,000 would not, you couldn't do too many of the funds, but yeah, these are the kind of funds that I would look at.
Okay, let's quickly get to Swapnil's question. He's age 30, goal is retirement fund. More and more on this show, we get questions from people in their 30s already looking at a retirement fund. It's such a great trend. So kudos to that. He says, I currently hold 15 lakh rupees in mutual funds, would like to create a retirement corpus of 5 crore rupees along with some extra funds for my child's education. Swapnil, really, I love the forward-looking thought. Need some guidance in terms of my current investments, and he's listed it out. We'll play it on screen so we don't waste too much time, but the SBI Nifty Index Fund, the Motilal Oswal Nifty 200 Momentum is there, the Axis Blue Chip, Kotak Emerging Equity Fund, etc. are among them. So his question is, what do you do next? What would you say, Ruchi?
Yeah, there's a long list of funds that I can see. I would say that a couple of things. I think the ELSS schemes, one should review with the current changes in tax and where you can just take a standard deduction. Whether they still make sense is something that one should look at the portfolio and really compare it with the flexi cap schemes, because they're effectively a flexi cap scheme. So those is something he may want to review. I cannot get a sense on what is the allocation that he has currently, and what his risk profile is. So it'll be hard to say how the portfolio is constructed. Overall, it seems like a good quality of fund portfolio. However, I think that some of the funds that are there, like the Momentum 200, which is the Motilal Oswal Momentum 200 fund, they've done very well over the last couple of years. Whether they continue to perform, there isn't a long history of these funds in India. So one should be more actively sort of monitoring that those smart beta funds. Other than that, the portfolio looks good, and really the construct or the allocation will depend on his risk profile and when he needs the money for the education. That information is not available, so it's very difficult to give a standard kind of answer. But definitely the quality seems good of the portfolio.
Okay, so the quality seems good of the portfolio. We're out of time, but you know where to send your questions to us. The numbers on the screen for today. Arnav and Ruchi, thank you so much for joining us. This is all the time we have on the Mutual Fund Show today. But stay tuned, a lot more coming up after the break on NDTV Profit.
Presented by Patanjali Chyawanprash, world's best Patanjali Chyawanprash made from 51 precious herbs.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
As we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the strategy.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade,
or a long-term investment,
all you have to do
is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and any stock that is buzzing on the back of volumes. But before we get into the host of stocks we have for you today, Agam, how do the markets look like right now?
Well, they're looking quiet at the moment. Considering it's the Nifty weekly options expiry, there actually isn't as much traction. The Nifty has been moving within a relatively narrow range at the moment, and it's been maintaining its gain of around 0.7% since morning. As far as your contributors to the Nifty are concerned, we are looking at a mixed picture, and of course a lot more impetus towards the gainers. So you do have something like an HDFC, which is providing the bulk of your strength, along with L&T, Reliance Industries and NTPC. What's weighing on the indices, and that's marginally so, is Bharti Airtel, Infosys and TCS. And just about a profit taking it does seem for Maruti Suzuki. But when it comes to the broader markets, that's where things are a lot more active. That's where you're actually seeing outperformance. The bars are nearly 1.9% gain for the mid-cap index, and the small-cap index is up by as much as well over 2% at the moment. So, clearly we are seeing a lot of strength there, even in terms of the broader markets. So to very quickly take a look at all the stocks which are buzzing in trade, well, we do have something like a PFC and REC, which have once again assumed leadership. In fact, if you consider the mid-cap 100, the key gainers here are PFC and REC. You have Sona BLW, which is also up as much as 6%. So we are seeing some buying action returning. Longs coming through for BHEL as well. That's Bharat Heavy Electronics. And that's electricals, pardon me, that's up around 5.2%. What's losing out, however, and what's under just a tad bit of pressure is Paytm. That's down around 2.3%, but it's still holding on to the mark of 400, which is a positive. And then we have some amount of weakness in something like a Max Healthcare. That's down around 1.9%. But all in all, when it comes to the broader market, certainly a very, very good, advance coming through as far as your relatively smaller names and your mid cap and the small cap names are concerned. So it's a wait and watch. Of course, it is the weekly options expiry, so Nifty perhaps just could show some amount of choppiness in the final hour of trade, Mihika.
But let's take a look at the large trades and stocks we have in focus today. We have something like a Krishna Diagnostics, an Action Construction, Engineers India, and Avenue Supermarts. But up first, we have eMudra, which is a licensed certifying authority, which is involved in issuing digital signature certificates. Now, it hit an intraday high of 18.36%. It's down a bit from that, but the stock has shown strength in the past month and in the past year. The past year, it's gained about 212%. Now, when we talk about volumes, the volumes are over 7 times its 30-day average, with total volumes at 38.75 lakh equity shares, and sellers did outnumber the buyers. But when you look at the company, like we take the Q3 earnings for examples, the total income expanded 60%, and this was mainly driven by their overseas market, and EBITDA was up 20%, and net profit was also up 32%, and this was despite the rise in expenditure that the company did incur in terms of technology and infrastructure. And when you also look at the revenue mix, now they have 2 segments. One is the enterprise solutions and trust services, which has a 72 versus 28% breakup, and both segments are expanding at continued momentum. Enterprise solutions are paperless e-signatures, authentication solutions, while trust services involve product and organization certificates. And when you look at the geographical mix, it's half and half. India is at 45% and global revenue is at 55%, and this company is going to capitalize on the overseas market. They have international expansion plans, especially in North America when it comes to cybersecurity solutions. They're also in conversation with clients in the US, Middle East and West Africa. They also have some key project wins in these international markets. One is e-signature platform orders from the Middle East, Saudi Arabia and West Africa. And that's what we have on the stock right now. And moving on, we have Krishna Diagnostics in focus. Now the company's seen an intraday high of around 8%, and we have Varsha to give us more details about the stock. Varsha?
Hi Mika. So as you rightly said, Krishna Diagnostic is in focus. If you see the volume is trading at over 2x its 30-day average, and stock has seen an intraday high of over 8%. Now let's look at the background of this company. So this is an established PPP player in diagnostic healthcare in India. So basically they provide diagnostic services to government, that is B2G contract they do have. The company has a network of both radiology and pathology labs. 60 to 65% of revenue comes from radiology, while rest comes from pathology.
And when you look at the competitive advantages that this company does have, what are the advantages that the company enjoys, Varsha?
So first thing is they do have revenue visibility, as contracts with government are long term in nature, and also they do have some cost efficiencies advantage because the PPP model that they operate in, so there are no referral fees. Government provide them the space and they have subsidized electricity rates. So this is the reason, in spite of lower rates that they give to government, they are still in profits. Also, if you see, the next big thing for this company is B2C, although it just contributes 1 to 2% of overall revenue currently. But if you see the prices that they are currently offering, it's very low as compared to competition. Now this is why, because the only cost for them is marketing cost. They're going to leverage their existing infrastructure to provide this B2C services. Now if you see the guidance for this company, the management expects revenue growth for next 2 to 3 years around 30%. Now this is excluding Rajasthan contract, which is in dispute under High Court. So if they win this Rajasthan contract, the sales growth would be around 30 to 40%. Also, margins are expecting at 25% as they want to increase their pathology services, which are low margin in nature. Lastly, if we talk about risk for this company, so the payment gets stuck. As you do, business with government, the payments are likely to get stuck, so receivables are high, but Krishna does manage it really well. The last risk that they have is the project can have issues, like we saw Rajasthan contract is under dispute under High Court. So this is all about Krishna Diagnostics that we have today.
Okay, well, that's a very comprehensive and insightful take on Krishna Diagnostics. So, Varsha, thank you so much for getting us those updates. Of course, the counter has been buzzing, advancing as much as 6% right now. But the other counter, which is also on the move, is Avenue Supermart. This is a relatively larger market cap company, but this one has also advanced, not just today, but over the course of the last 2 weeks. It has come off from its, this calendar year low. But let's get in Mahima to tell us a little more about what's buzzing here. Mahima.
Right, Agam. So as you rightly mentioned, the stock is buzzing in trade today. It touched an intraday high of around 4.5%, and the volumes have quadrupled compared to its 20-day average. Well, this is the most that it's been up in 5 months now, and the support levels are around 3,904, which is a 1-week low, and the resistance levels are at 4238, which is today's, and 52-week high. Now, this is because CLSA has initiated a buy rating for Avenue Supermarts with a target price of 5,107. They have given multiple reasons to back this up. They've said that the total addressable market will be growing at $2.3 trillion in the next 25 years, and they expect that DMart's share in this will increase from lower than 1% at present to more than 5%. They've also said that by the end of FY34, they expect that at present Avenue Supermarts has around 341 stores, which will go up to thrice the number of stores that are present at currently, and it sees a potential of over 7,000 DMart stores in the urban India in the next 25 years. Now, they've also said that DMart's low price have been the key competitive advantage, and their consistent and efficient execution has also been their competitive advantage. And they're saying that private labels should drive the next leg of share gains. Private labels can be the key differentiator when compared to the e-commerce and quick commerce that are their competitors at present. Now, in terms of recent business update, well, they've recently invested 100 crore in Arm Avenue e-commerce, and they've done this by subscribing for their preferential shares. They've opened new stores in Tripur and Sehor, and if we talk about the 9 months FY24 financial performance, revenue has been up around 18% and PAT has grown over 1.9%. So this is the overall view of Avenue Supermarts, and it's been buzzing in trade only on the back of the CLSA note that they've initiated a buy rating with an upside potential of 26% today.
Thank you so much, Mahima. Well, there you have it, an upside potential of 26%. But moving on, we have Engineers India, which is another stock that is trading on high volumes today. Now, the stock has reached an intraday high of over 12% while trading 3 times its 30-day average. Let's bring in Anushi with more details.
Right, Mihika. So Engineers India is in focus today, a 12% gain, as you correctly mentioned, about with 3 times its 30-day average. While we are not seeing any fundamental drivers driving this kind of a stock performance today, we'll still go back and look at some of the key measures that the company has been taking with the last quarter and more. So if you have to look at the revenue mix of the company, about 58% of their business comes from the consultancy segment, while the rest 42% is by the turnkey projects that the company makes. The order book of since the last 3 quarters have been quite consistent over here, about 4,900 crore of an order to about 4,751 crore of an order book at the end of quarter 3. Even if you have to look at the number of orders secured, that stands at about 145 crore in Q1 to about 535 crore. So they have increased the pace over here. Now, how this has translated into the Q3 numbers over here, if you have to look at revenue, about 3% of an uptick over here, while EBITDA has seen just about a 1% of an uptick, while margins remained under pressure, about more or less not under pressure, but remain in the similar range, about 5.8% compared to 5.9% last year, while net profit has seen a significant jump. But now onto the focus going forward for the company remains its expansion in the international markets that it has been aiming for. A is that, and second is the green portfolio business that the company aims to expand going forward. So it is considering a lot of initiatives for the same over here as well. Now on to the stock price impact that the company has been seeing over the course of multiple periods. So under this 1 month, the stock has been pressure. So this is a relatively good field day for the company. Now about 10.9% of a downside in the last 1 month. But if you have to compare that with the 6 months and 1 year return, it kind of more or less fades away. Now 6 months about 37% of gains, while 1 year about more than 2 times of a return over here. So this is the overall picture which is playing out in Engineers India that should be in focus.
Thank you so much for getting us those updates. Another very strong reaction for Engineers India. We're going to also very quickly take a look at what's happening with BSE, earlier known as Bombay Stock Exchange. The exchange actually is reacting to a broking note that we've had this morning. This one is from Investec. Well, they have in fact upgraded the stock to a buy from a relatively lower rating, and they've also put a price target of around 2,800 rupees per share, which does indicate somewhat of an upside, even though it has already gained a good 9% in intraday today. Now, the argument that Investec is making is that it continues to see strong traction in equity derivatives volume. Specifically, its option market share has jumped 3 times on a quarter-on-quarter basis to as much as 15%, as against, well, just about 4.2%. Now, remember that it was back in the December quarter is when we have started to see a lot more traction in your weekly options as far as BSE is concerned as well. The positive, of course, here is that the weekly options for BSE and the expiries, the weekly expiries do not clash with those of NSE, especially the big indices. The big indices would include something like a Sensex, where the expiry is on Friday and of course the BankX expiry, where the expiry is on Monday. And this does not clash with any of the NSE's relatively larger expiries, which would include the Nifty, the Bank Nifty, and the Fin Nifty. And this, of course, has played in favor of BSE. Well, very quickly to take a look at the valuations, but they are pegging 26 times FY26 price to earnings for BSE, that is Investec, and they say that it has a potential for about 40 to 45% EPS CAGR over FY24 through FY26. So something to keep in mind as you move in and take a look at that. But from there on, we move on to yet another company which is advancing by well over 9%, and that is Action Construction. Well, let's get in Puneet to tell us a little more about that one. Puneet.
Yeah, thanks Agam for that. And yes, Action Construction is up 9.5% and has hit intraday high today. The volumes are up roughly 2 times its 30-day average. Now, do note that the company has been a stellar performer in the last 1 year and has given phenomenal results on the bourses. For Q3 specifically, we saw that the revenue was up 37%, while EBITDA as well as net profit was upwards of 80% for Action Construction. Now, the margins have breached 16%, which is unheard of in the construction equipment industry and has been a steady performer post-COVID. Now, do note that the company had raised money via QIP of 135 crores, and this was done at a price of 242 rupees per share. Currently, the stock is trading at roughly 1300 rupees per share, so it's done very well for those who participated in that QIP. Now, one of the key highlights for the quarter was that the company had purchased 82 acres of land to make expansion plans and as well as further the capacity for its current plant. Now, they say that they should double the revenue by to 4,400 crores by FY26, and there are 2 main key triggers for the stock in the next 2 months. Now, the first one is that they are about to receive orders for the 2-ton forklifts. Now, forklifts is one of the key segments for Action Construction, and they also see a big opportunity in the rough terrain space. And finally, they also participated in a tender in the month of December, and this order could be to the quantum of 700 crores for the company. Back to you.
Thank you so much, Puneet, for those details. And it's now time to slip into a short break, but do stay tuned as we have lots more lined up on the other side.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money.
Join us as we put the spotlight on 6 stocks. Welcome back. You're watching Large Trades. Well, we move on to the next story that we have. In an exclusive interview with the NDTV network, Chief Justice of India, D.Y. Chandrachud, talked about the state of India's judiciary and the importance of last mile justice. Here's a slice of that conversation.
Normally, the dialogue between the higher judiciary, that is the Supreme Court, and the high courts is with each other. And I thought that has to change. Because the first point of contact for our citizens is with the district judiciary. आम नागरिक की कोई समस्या आती है तो पहले कोर्ट कचहरी कौन सी कोर्ट जाते हैं वो? सर्वोच्च न्यायालय में आना उनको मुश्किल हो जाता है. पहला जो उनका पॉइंट ऑफ कांटेक्ट है वो जिला न्यायालय है. From that perspective, I thought that it's important that we engage with the district judges, understand what are the issues which confront the district judiciary. Because when we strengthen the district judiciary, we are really going to strengthen the interface of our citizens with the district judiciary. And from that perspective, we had this national conference of over 250 judges from across the spectrum in Kutch, all belonging to the district judiciary. It was a conference where I heard their stories, heard their perspectives, their opinions, so that we can change our policy making to adapt to their issues and of questions which concern them. Because through the judges who have a direct interface with common citizens, we gain to learn a lot more about the problems of the stakeholders in our system, including the litigants, the lawyers who come to courts, marginalized groups who seek access to justice, women, what kind of issues they have when they have a case in a court. So I thought this was a very unique attempt, and this is going to be a forerunner for a larger conference of over 1,000 judges, which we are planning to convene, drawn from the district judiciary all over the country, again in Delhi.
Sir, one more thing. Now, you have introduced technology in the judiciary. An advocate sitting in Kanyakumari can join proceedings in Supreme Court. Litigant also can see it. What is your future plan? How to use technology at best for the betterment of common people?
My mission in the use of technology is to ensure that the work which the Supreme Court and the High Courts and the district judiciary perform goes to the homes and to the lives of common citizens. So let's be very clear. The object of introducing technology and modernizing the judiciary is not to make this a new silo away from the lives of citizens, but to use technology to reach out to citizens. I'll just give you a few examples very briefly. We have been having hearings on video conferencing. As a result of video conferencing, the Supreme Court of India is no longer just a Supreme Court which is situated at Tilak Marg in Delhi, but it is truly, I believe, a Supreme Court which represents the nation. A lawyer from across the country, even a remote part of the country, can access us on a simple cell phone by getting the link of the video conferencing hearings. Likewise, litigants who may or may not have cases in the Supreme Court can hear what is being done in the Supreme Court. I personally feel that all citizens have a vital stake in understanding what work is done by the courts. At one level, of course, the public revenues pay for the expenditure which we incur on the institutions. So there is a right to know of citizens. But beyond that, I think common citizens will have a sense of faith and confidence in the work which we do as courts. Once they realize the seriousness with which even the smallest of issues, smallest not for us, smallest perhaps in the perspective of the larger issues which the court has to decide, but small issues like pension for somebody, the termination of the service of somebody, a misconceived FIR which is lodged against somebody, somebody who's languishing in jail for years without parole, and as an under trial for several years without bail. We take each of these issues very seriously.
Samarth by Hyundai, in partnership with NDTV, is a movement for equal rights for people with disabilities. Part of the initiative's strong belief is that people's disabilities do not define what they can or cannot do. And embodying that is archer Rigzin Tanchos, whose journey to his dream, the Paralympics, has seen him win an award for his innovation that helps him shoot better.
मैं पैदाइश से दिव्यांग हूँ, तो पोलियो होने के कारण से मैं चल नहीं पाता हूँ। पाकिर ज्वाइन करने के बाद मैंने ट्रेडिशनल आर्चरी सीखी। पहले मुझे बहुत दिक्कत होता था क्योंकि उसका साइड जो आर्म रेस्ट वो स्ट्रिंग पर लग जाता था, तो मैंने खुद से आइडिया लगा कर उसको काट के फिर वहाँ पे 2 नट बोल्ट लगा के उसे मॉडिफाई किया। इतने सारे टूर्नामेंट्स में मैंने पार्टिसिपेट किया, तो वहाँ पे मुझे कुछ ना कुछ इनाम मिलते रहे, सर्टिफिकेट, मेडल्स, तो इससे मेरी हिम्मत बढ़ती चली गई। मैं भी चाहता हूँ कि मैं भी आगे बढ़े, नेशनल इंटरनेशनल ओलंपिक तक जाने की कोशिश करें। मेरे सपने बहुत बड़े हैं, तो उन सपनों को मुझे पूरा करना है और ये मैं करके दिखाऊंगा अपने लिए। मैं समर्थ हूँ।
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Thanks for tuning into India Market Close, and we are holding on to the gains. In fact, have just built on a little bit to that, but it's largely been this very strong market. The intraday of the Nifty will effectively show you that it's almost been a trending day, more so for the broader end of the spectrum, which Harsh will speak about. But it's been a nice, solid trending day today, with not too many gyrations on the downside, at least, not quite there. Mid caps and small caps have done even better, and we have these charts which show the value, and a small chart here intraday which will give you a sense of what the mid caps and the small caps have done, and I think those have been clear winners. So very strong gains out here for the Nifty mid cap 100 as well, and the small caps too have not done too badly. I'll bring up the heat map for the Nifty just to highlight what's happening on the Nifty 50, and a lot of green, very little red. Bharti Airtel is probably the one stock which has succumbed to some selling, but PSUs yet again, the top 4 out of the top 5 are PSU names, so pretty strong show there too. And lastly, just get the contributors list on the Nifty before Harsh speaks about the broader end of the spectrum. There is HDFC Bank, which is contributing the maximum fare of points, and L&T, NTPC, RIL. So no clear sectoral favor, if you will, but for PSUs which are doing well. On the losing side too, maybe an off day for Bharti, but otherwise it's largely been pretty stable. So almost nothing that can be complained, and all high beta has perked up in trade.
Well, yes, Neeraj, you're right. We've seen markets sustain, so that's one positive. But let's pull up some stocks counters and focus on the back of news and developments. Let me first pull out something like a Wockhardt QIP. That stock just about 1/3% higher, not much of a movement there, but the QIP coming through for Wockhardt. Now, among other stocks, let's pull up something like an RVNL, 2.5% higher already here, in fact. My apologies, but yeah, so new order wins continues for RVNL. Avenue Supermarts, we had a whole host of brokerages today, and we have lots of movers, maybe on the back of brokerages, but also on the back of the positivity that's come through on the global cues in the morning. And Avenue Supermarts is probably one of those, 2.5% higher. CLSA initiating 5,100 being the target price. MGL also up roughly 3% on the back of brokerage. We also have the likes of a BSC, 2,800 is the target price ascribed to BSC, 10% higher in trade now, probably at the day's high as we speak. IOCL also 3.2% higher, positive brokerage notes. We have those notes coming through, especially with regard to OMCs, where there is some bit of value capture after this correction. That's what most brokerages seem to be suggesting. And that's the one on IOC as well. Last up, I want to talk about is IRB Infra. We'll speak about a lot of these counters on this show over the next hour or so with Neeraj. But IRB Infra, specifically Kotak Institutional, upping its grading, upgrading it from reduce to an add. Target price 65 rupees, stock up and away, 7.5% higher.
Okay, so that's the key data when it comes to the top newsmakers. Let's actually get in the first initial thoughts on the show from Rajesh Palvia. He's SVP Technical and Derivatives Research at Axis Securities. Rajesh, great having you. Thanks for taking the time out. Has this surprised you or did you anticipate this with this strength that is there in the markets today? And the back of this, what are the trading recommendations for the afternoon?
Good afternoon, Neeraj. So, post this gap up opening, follow-up buying action, that's the clear sign of again street is now getting confidence back as broad-based buying action is happening across the board, like mid cap, small cap, as well as large cap. All the stocks are showing good traction in terms of buying. Though market has corrected towards the 50-day moving average for the Nifty, and briefly we have given the breakdown of that level also. And on the near-term basis, the indicators were in the oversold trajectory. So that's the pullback was anticipated, but the follow-up buying in mid-cap, small cap is really a surprising factor for the market, as most of the mid-cap, small-cap have given the breakdown of their, near-term, short-term structure. So that recovery is again, giving some kind of, comfort. And again, I think if this continues furthermore for another day, so then possibly I think the broader market may likely to continue furthermore upside, and possibly Nifty may able to cross 22,100. That's the major call concentration area at this moment. So that level needs to watch on the Nifty. Once we crosses about 22,100, then I think that rally can scale up to the next target towards 22,300 kind of zone also. Most of the large cap stocks are now showing short covering action. So we believe that this rally can extend further, and one should remain on the long side. Those who have already bought at the lower level, now your stop loss should be trailed to higher side around 21,950 should be your stop loss on Nifty spot. Okay. Even on the bank Nifty,
Rajesh, sorry, just before we move there, and we'll give you a stock area as well, but just quick derivative question. Talk of maximum OI yesterday, maximum OI on the call side was at 22,000. If we stay higher, is there a possibility of some covering leading the index to make a swift up move as well?
Yeah, still we are witnessing some short covering action for 22,000 call option in today's session also. So I think that covering is taking place. And if we stay above 22,000, yes, definitely that covering may lead to some further more, traction on the buying side. So that's the make or break level, though we have a weekly expiry for this Nifty. So I think sometime we are going to spend around 22,000 level. And then if for Nifty spot, if we crosses 2250 now, then yes, possible short covering action we can see in last half an hour of trade also, and then possibly 22,100 kind of level also we can see in the today's session also. So that is very interesting level to watch for, as we are continuously holding about 22,000 level. Then there is a high possibility that we can see in last half an hour there is a short covering action could be there. So one should be ready with that move also. So it could be a sharp up move in Nifty also in the last half an hour of trade. For Bank Nifty, 47,000 is acting as a major supply zone at this moment. That major call concentration area and is still not able to take out those levels. So for Bank Nifty, that level is very important and critical at this moment. So till that level is not taken out, some consolidation we can see in range of 46,500 to 47,000. But some of the large cap banking stocks are showing traction. So I think sooner or later we may see a breakout above 47,000. Once that breakout happens, then possible Bank Nifty can also show good amount of rally towards 47,500. That's the next call concentration area. So at this moment for Bank Nifty also one can hold their position with stop loss of 46,500. Now on the stocks front, the first stock that we like in today's session, that is Oberoi Realty. Stock managed to give breakout of its multiple supply zone on daily chart, and now stock again managed to hold above its 50-day moving average. So and real estate stocks are also showing good short covering action. So that momentum we can see further higher in Oberoi Realty. So I think one can look to buy this stock for upside target of 1470. Stop loss should be at around 1400. Second stock is BHEL. Stock came out from its F&O ban period today itself, and the kind of momentum which we are seeing in most of the PSU stocks. So BHEL is also looking promising. Now stock is trading about a 20-day moving average, the kind of buying interest which we are seeing throughout the session, that clearly shows that BHAL can continue. Furthermore, upside 255 is the trading target for near-term perspective. One can buy this stock with stop loss of 230.
Okay, thank you for that, Rajesh. But in terms of where we are in where the street is placed, we've had a 750 plus point intraday rally in the Sensex, 1% rise in the Nifty as well, but nearly 200 points higher as we speak. Market cap of all listed firms has hit 380 trillion rupees. What's aiding the rally? Is it global led, domestic? Some perspective coming in from Mahima before we go across to and get some other views as well on this one. Mahima.
Right, Harsh. So as you rightly said, the equity investors did turn richer today by 6 trillion and the benchmarks have risen over 1% in trade today. The market capitalization of all BSE listed entities has touched 380 trillion during the trade today. Now, the S&P BSE Sensex jumped over 380 points and touched the level of 72,882 and Nifty 50 reclaimed the 22,000 mark. Now, broader markets have outperformed the benchmark indices, where small cap 250 was up around 1.2%, mid cap 150 was up around 1.8%. Now, a few global factors that have been working in favor of this particular uptrend, where US Federal Reserve dovish policy, they held interest rates steady between 5.25 to 5.5%, and they still expect to reduce them by 0.75% by the end of 2024. And also global markets were up in trade. S&P 500 closed at record highs, around 0.89% higher. The Nasdaq Composite surged over 1.25%. The Dow Jones Industrial Average jumped over 1.03%, and these were the overall global cues that have worked in the favor. And lastly, heavyweights pulled the index up, include HDFC, L&T, RIL, which contributed around 60 points to the rally, and NTPC, Tata Steel, Tata Motors and BPCL were also up. Well, ICICI Direct said that 21,700 will be the support levels to watch out for.
Okay, thank you for that, Mahima. That's of course a piece on the fundamental side with regard to the rally itself. Neeraj, if I can come to you with regard to this rally. Global cues leading the way, of course, today morning, but you think that this is now starting to look more sustainable? This new start, could this be a new start in your view?
Bit of a surprise from the FOMC, and that kind of removes one big hurdle or adds one tailwind as well, you could argue. So pretty interesting. I mean, it's difficult to make for a case for a sustained bounce in the small caps and the mid space because of valuations, but a lot of PSUs had fallen so badly that I think there is some bit of buying that's happening there. In fact, incidentally, Harsh, when we look at this PSU index today, yes, all stocks are in the green. So there is a bit of a bounce happening in everything, which is what we said in the trade setup today. A lot of policy / price led things, right? MGL or a Gujarat Gas, etc., or the OMCs, which are beaten and out of shape. Can they come back with a bang? And look at that PSC index today. Okay, ONGC is now marginally in the green, but otherwise, all components in the green, and quite a stellar move out there in that space.
Yes. Rajesh, if I can come to you, I know BHEL is on your list, but outside of that, any other PSEs which look very interesting for you today?
Yeah, definitely. So, Harsh, we have already recommended CPSE ETF to all our clients in today's session also, and we are expecting that CPSE index can, give some bounce back. So, we believe that, this short covering action we can see in most of the PSU stock, like we have seen in power as well as in energy space. Most of the stocks are showing good short covering, and if Nifty held about 22,000 level, then yes, possible follow-up buying action we could see. So to play this pullback action in most of the PSE stock, I think CPSE ETF is the right way to take the buying position. I think one can buy CPSE ETF that is trading at around 78 rupees. Keep your stop loss at 75 rupees, and I think again there is a potential again to regain the all-time high trajectory going forward. We are projecting target of 84 to 85 for this up move which we are seeing in CPSE ETF.
Point taken. Thanks for that, Rajesh. Before we add more perspective with regard to how global markets, FOMC has played out on our markets today. Host of stocks buzzing in trade on the back of volumes. Varsha joins in with a list of those.
Hi Harsh, so let's see which all are stocks which are buzzing on volume, starting with eMudra, wherein company has seen an intraday high of 18%, volumes are over 7x its 30-day average at 38 lakh equity shares. Recently they did win contracts of public key infra and management solution for a defense agency and e-signature platform orders for Middle East, South and West Africa. Then we have Praj Industries, which is buzzing on volumes with an intraday high of 3%. Now company's order book comprises of high margin profile orders. Company has leadership in domestic ethanol and they are also focusing on newer technologies like second grade ethanol. Then we have Engineers India is in focus on high trading volume. Stock hits an intraday high of 12%. Order book as on Q3 FY24 stands at 4,700 crore. Strong focus on international markets is what they are focusing on going forward. Also they are looking for initiatives in the green energy sector as well. In last 1 year, company has given almost 160% to its investors. Lastly, we have Cyient, wherein application has been filed by Infotech HAL Limited Bangalore, a 50-50 joint venture of Cyient Limited and HAL, wherein they have initiated a corporate insolvency resolution process. So these are the stocks which are buzzing on volumes as of today.
Thank you for that very quick roundup, Varsha, but time for a quick break. More on the other side. We'll be joined in by Richard Harris to talk to us about FOMC outcome, how markets are going to respond, all of those. We'll be right back.
Co-presented by Patanjali Honey, world's best Patanjali Honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Back with India market close, and you can't take your eyes off the markets because of what the Fed has done. Now it's important to dissect this through the day, and let's take the opinion from Richard Harris. He's Chief Executive at Port Shelter Investment Management. He joins us on the FOMC decision and the impact on emerging markets, including India. Richard, did it take you by surprise? Good morning or good afternoon, as the case. Good morning to you in London. Did this take you by...
good afternoon. I'm in Hong Kong.
You are in Hong Kong. Okay, good afternoon.
That's right.
Okay, good evening maybe. Does this take you by surprise? And are you constructive on EMs as a result of what the Fed has announced?
Well, I don't think it was a great surprise. In fact, the Fed has done very little. If you look at where the dot plots have gone, the dot plots sort of moved away when everyone was worried about recession, moved downwards, and now they've move back up again. So basically, interest rate expectations are pretty well where they were, 9 months ago, something like that. So there's been much to do about nothing in the meantime. I think in terms of EMs, it's rather more complex. I mean, India, of course, has had a fantastic performance in the last sort of year or so. China's had a terrible performance in the last year or so. So I don't think you can bucket them all into one space. My guess at the moment is that India is maybe having a bit of a rest from the rises that we've seen elsewhere that have affected other markets. And China is almost certainly turned the bottom, but is having a very slow recovery. In the meantime, the US market keeps going on and on. So I think the Fed is probably unbiased more worried about inflation at the moment than recession.
I take your point, Richard. Harsh also joining in. I want to try and understand from you where you see India in terms of its valuations. You did mention that the returns have been good, but currently, given the macro setup, how are valuations looking to you?
Well, it's valuations are very difficult at the moment because markets have continued to move on and prices have got more expensive. So I think investors, certainly if you're looking at being a foreign investor in India, you're slightly less worried about valuations as to how the market looks in the future. India at the moment looks fairly healthy. I think what's pushed a lot of the other markets on has been the whole AI bubble. And I don't think India has necessarily participated in that yet. That may come down the line, certainly in terms of software development and that sort of thing. But the AI bubble has certainly pushed the US market ahead quite substantially and also seen some movements in Europe as well. And those are the two markets over the last quarter that have done particularly well. So I think in terms of valuations, it's difficult to say anything's cheap or expensive at the moment. Markets are really moving on the narrative. And the current big narrative, of course, is AI.
Sure, Richard. And Richard, just to try and get perspective here, right? We've seen interest rates, especially, and if I can refer to the US 10-year maybe as a benchmark, creep up from that 1.5% kind of number a couple of years back all the way now closer to 4.5%. We've seen rate hikes which are pretty much unprecedented over the last 15 years at least. How do you reconcile that with how markets have behaved and performed?
I think there's one word, and that's liquidity. There's a lot of liquidity still sloshing around the US market, the European markets, because of all the government largesse over the last few years. We saw the big money inflow because of COVID. The consumer's pretty buoyant, the consumer's pretty confident, and as a result, that's leading to good earnings in companies, and that's pushing markets up as well. Then you have other issues. As I said, AI is a positive issue, and a number of these factors coming through. So we are in a bit of a conundrum at the moment, but the key thing is that the market seems to think that people can pay those higher interest rates. After all, they're not that high, and money has to cost something. And money has been at 0% for a long time. So 4%, I think, isn't too much to pay. And at the moment, the market seems to think that people can pay that.
Got it. Okay, Richard, appreciate you taking the time out and joining us. Thanks for giving us your opinion, and have a good evening.
Thank you. Bye-bye.
Right. Bye-bye. That's the view from Richard Harris from Hong Kong, and talking about the impact of FOMC on India. And most markets have seen that uptick. The pocket that has done extremely well for itself is metals. You have to admit that today, just suddenly, that risk on mood has helped the Nifty Metal Index in a big way. Stocks are up between 4, 5, 7%, and some very strong up moves seen and sustained moves, if you will. Even Hindustan Copper is up, and NMDC, which saw a downgrade from Citi, has also not done as badly. Now, Rajesh, metals have flattered to deceive and have gotten sold at multiple spikes thus far. Is this time looking different, or would you be skeptical on the rally?
Yeah, I think, Neeraj, this time I think possibly we can see a breakout in most of the metal stock for this pullback. Though still the consolidation range is still there for most of the metal stocks. So I think some of the metal stocks which are almost on a verge of giving breakout of consolidation. So our preferred choice from that space would be Tata Steel. That is also looking very interesting in this last corrective move. Stock almost taken support from its 50-day moving average trajectory, and we have seen a very strong pullback from those levels. So I think Tata Steel already managed to hold its previous breakout level, which was happened at around 140 kind of level. So that level is looking as a good important support area at this moment, and we believe that once a stock crosses above 154, then possible upside we can see towards 165 to 170 also on the Tata Steel on a positional basis. The other stock that we like at this juncture is Jindal Steel and Power. That stock is also looking promising, and almost now stock is approaching towards its previous swing high that was at around 835 kind of zone. So I think another 2% kind of up move from the current level would give a breakout of this consolidation range, and then possible upside target we can project towards 860 to 870. So Jindal Steel and Power is another stock where one can look to buy with stop loss of 805.
Okay, thank you, Rajesh. Quick break again. We'll stay tuned with our stop buy sell ideas, as well as we'll go into specific stocks, take views from our experts on those as well. Stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
Okay, welcome back. You're watching India Market Close here on NDTV Profit. You know, one of the stocks which was really buzzing in trade, or which is really buzzing in trade today, is BSE, which is Bombay Stock Exchange. Quickly looking at, you know, what brokerages have come out and spoken about this one. 11% higher, Neeraj, on this. You know, we're seeing sustained you know, positivity on this one, at least as of now. What we are getting to understand rather is that BSE continues to witness strong traction with regard to where equity derivative volumes is concerned. So that continues to be a strong point for the BSE. Upgrade to a buy by Investec. Target price is 2800, so another maybe 25-30% upside plus still in the stock after the 10% that it's done today. With regard to margins and OPEX, they are expecting that margins OPEX will come in much better going forward. There will be stability there. There was a one-off in Q3, 91 odd crore. They believe that that would be a one-off. Of course, management commentary in Q4 will be awaited on that particular count, but largely expected to be a one-off. And expecting earnings compounding of 40 to 45% from FY24 to FY26. So very bullish in terms of the commentary. But before I go to guests and take their views on BSE in particular, I want to try and break down the FNO cues for today. Agam is standing by as always with regard to what the futures and options data is suggesting. Agam, take it away.
What we saw yesterday the markets were extremely choppy. Today that has been a very, very quiet, steady consolidation coming through for the benchmarks. The Nifty specifically, once again the focus is on the weekly options too. It opened around 22,000, and that's exactly where we are likely to see these particular set of options expire. And we are seeing unwinding coming through as far as index futures go as well. The Nifty Bank, again, we're starting to see some amount of traction as far as an up move goes. And remember that a lot of this has to do with short covering, considering we've seen the Bank Nifty come off. In fact, the longest losing streak for the Bank Nifty in 20 years, even though the correction has not been as steep, we are still seeing it stay above the mark of 46,500, and that of course is the big positive, though unwinding coming in as far as the OI goes as well. But in terms of how things are panning out in the options market, and as I was suggesting, it was the 22,000 level that was in focus, and that's exactly where we're likely to see a lot more traction in terms of your overall open interest as well. There you have it. Most amount of calls and puts being concentrated here. Moving on to stocks, let's keep an eye on a handful of them. So we do have longs in L&T, Tata Steel, SAIL, SRF, Siemens, all of them advancing, all of them seeing a good amount of increase in open interest as well. And among stocks which are seeing unwinding, let's pull that list up as well, where we are seeing short covering, in fact, for Glenmark Pharma, PVR, HAL, Indus Tower, as well as BPCL. And if you notice, in both the lists, we have advances coming in. So it does seem like the broader markets are finally starting to see some traction towards the upside.
Well, thanks for that, Agam. And interesting that what we're seeing in some of those PSU names as we discussed. Rajesh, very quick view. I gave a PSE idea. Harsh asked you about PSUs as well. And I'm going to third that with a question on oil marketing companies. The last 2 days have certainly seen some serious pullback. What happens next?
So after a significant corrective move, all three OMC companies are, showing good traction in terms of buying. If you talk about BPCL, stock almost took support from its 50-day moving average and very strong pullback action in today's session. Looking at the data, short covering is clearly there. Stock now managed to give breakout of last 3 days, falling supply pressure. So I think if stock continues to hold now above 580, 578 kind of zone, then yes, possible follow-up buying action we can see towards 605 to 610. That's the next level on the higher side for BPCL. So I think those who've already bought at lower level, they can hold down the position with stop loss of 578. If we talk about HPCL, again, the same kind of behavior, strong pullback action. Still looking at the structure for HPCL in Petro, we expect that, if it's hold above 465 level, then possible pullback can continue towards 485 to 490. So here also our advice would be to hold on, as already these two stocks are recovering from their oversold trajectory on the near-term structure, and we believe that furthermore short covering can take this stock further higher. Another 2 to 3% kind of up move we can see in this continuation of this pullback.
Okay, thank you for that, Rajesh. Let me also welcome on board Nischal Maheshwari, CEO Institutional Equities at Centrum. Nischal, welcome to NDTV Profit. Good afternoon. Talk to us about what you make of the setup early today with regard to how global cues have flown and the kind of impact it's had. Do you now sense that we could be in a space where we could go higher where markets are concerned?
Hi, afternoon. Thank you for having me. So I think one significant thing has happened yesterday after in the FOMC meet, and I think Fed governor is very clear basically that he's reiterated that there will be rate cuts, and at least they are still guiding for 3 rate cuts. If you go through the details, one interesting thing which they highlighted is that Fed is now keen to do rate cuts, and they have said that even if there is if the hiring is strong, that cannot be a deterrent for us basically to cut rates. If you really, I think this is a very big policy change which Fed has announced, because if you remember earlier, every time Fed has been saying this was one of the things that the unemployment rate is still benign at 3.5, 3.6%, which is a long-term average for the US. And the hiring and the wage hikes have been pretty strong. So they were not sure actually whether this is going to be, or it will allow them to do rate cuts. So I think that's one change, basically a big change across the world. And I think across the world, the markets have been up. And this is setting up the whole market again for possible rate cuts, even in India by June. I think a positive outlook on the market.
Nishal, Neeraj here, good afternoon. Did I hear you say June? You anticipate June?
Afternoon, Neeraj. Yeah, looks like basically, I think June can be the first one basically where Fed is going to cut. And I think soon RBI is going to follow. And I think the world will follow basically. So I think June could be a very possible time.
Change the investment dynamics in any fashion? Because until about 2 weeks ago or for the last 3 or 4 weeks, not until 2 weeks, last 3 or 4 weeks, the conversation has been avoid small caps, avoid mid caps. There is a bit of a risk off at the table. Does yesterday's commentary and possible June action, as you said, change the dynamics for risk assets in India, particularly at the broader end at all?
No, I don't think so. Basically, that changes anything because I think that is a different call, basically, where you were saying that you were uncomfortable with the valuation of the mid cap and the small cap. That doesn't change anything because, yes, the mid cap and small cap, is there froth there? There is definitely froth there and should be avoided. Yes. So, yes, you should continue to hold on to your stocks, and further investment should be largely into large caps, basically, because they are looking pretty interesting at these prices. And if the risk on is there, I think a better way to invest would be into the large caps now.
Okay, Nishal, what have you liked? I know you liked some very interesting thematic notes, which we will do at a separate show because it requires time. But if I were to ask you today about what is top of the pile in an otherwise cautious broader end of the spectrum scenario for Centrum currently, what is it that you would be recommending?
So I think one theme which I've been recommending for some time, and it's as yet to play out, and or some of it is already played out and it will continue to play out, is the interest rate cut scenario, basically, because that's the most definite thing which is happening across the world. Now, I think quite a bit of that is already played out. You've seen autos going up. You have seen other rate sensitive sectors doing well. But I think there are two sectors as yet, basically, which should continue to do well or do further well from here. One is IT. I think definitely once the rate cut starts happening in the US, I think IT will be one of the biggest beneficiary as far as global cues are concerned. And domestically, I think banking has still not played its part as yet. So I think interest rate cut here domestically will definitely help the banks. So I think these two sectors can still be looked at favorably.
Right, Nishal. Now, with regard to the financial sector, one sector that's also looking, maybe at least today we had a couple of notes coming in with regard to Bajaj Finance as well. Any picks within the NBFC lending pack which you seem to like at this point, given that something like a Bajaj Finance is trading at probably a decadal low in terms of its valuations?
So we do not cover Bajaj, but I think our top pick in the NBFC space, there are several of them basically, but I think Shriram Finance looks very interesting to us. I think valuation is very attractive. Growth is very good. Asset quality is benign. So Shriram looks very interesting to us. We have been positive for a long time on Shriram. We continue to remain there. Other ones are basically the smaller housing finance companies, the 10 lakh, 12 lakh kind of a ticket size. So there, I think Aptus looks very interesting. Home First looks very interesting. So I think there is a whole gamut of plays basically which can which look interesting at these prices.
Okay, and what about banking? Do you like the larger private sector banks which are again trading at their decadal lows, or you're preferring to see value in the PSUs, or would it be small mid-tier banks? How would you play the banking theme?
So I think large caps are still looking pretty good. Basically, I think valuation-wise, HDFC not gone anywhere, done nothing basically with the almost last 1 year post its merger. So I think that is a very safe bet. But SBI, yes, I think that looks very interesting at these prices again. So I think large cap, these two stocks look good. I think in the mid caps, you have RBL, which is looking pretty interesting.
Okay, and Nischal, specifically on HDFC, right? There's a wide view that growth will have to taper. Is that at all a concern for you? So even though EPS may continue to go up, the taper in growth, is that a concern? Maybe some amount of market share given away?
No, I don't think so basically, because it's a pretty large play. And secondly, today between HDFC and SBI, they almost make whatever 20-25% of the market share. So I think that way they define the market. So if they are growing and at this size, basically they would be growing they would grow equivalent to the market, and I think that's a very comforting factor. So if they are not losing market share, till they are not losing market share and profitability remains strong, I don't see any reason to be worried about HDFC.
Okay. Nishal, just wanted a quick opinion today, so we got it from you. Thank you so much for taking the time out and being with us. But I look forward to do a slightly extended conversation with you in the morning sometime where we talk about one of the thematics that you guys write.
Definitely. Thank you.
Thank you for your time. Okay, so that's the view. And well, banks, financials, the interesting thing is today, for example, Bajaj Finance has seen two notes which have come out, one from BNP Paribas and one from Bank BofA Securities, both of which seem to be a bit constructive. The stock hasn't rallied too much, but it's certainly bounced off from the lows of 62, 6,300 and has inched up higher from there. Rajesh, quick thoughts on Bajaj Finance from a trade perspective?
So I think Neeraj, stock is facing a challenge at around 6,800, 6,820. That's the major supply zone at this moment for this pullback. I think if it's able to cross those levels, 6,825, then yes, this rally can extend towards 7,000 kind of zone also. Even if you look at the weekly structure, since last 3-4 week, stock is trying to make a bottom of this decline, and 6825 breakout will confirm this bottom formation, and then possible rally can extend. So I think those who have already long in the trade, they can hold on the position with stop loss of 6620.
Okay. Point well noted. Okay, now a stock, stay on Rajesh, a stock in focus, and I'm sure Rajesh, you would love to hear this as well, because Anushi, my colleagues Anushi and Harsh have done some interesting work on IRB Infra. That's a stock that's done really well today. Now guys, what do you have for us today?
Well, thanks for that, Neeraj. Let me first start off by giving you the peg. Well, Kotak is super bullish on IRB Infra. They've upgraded it from a reduce to an add. So that's first, but we'll try to delve deeper into it, try to understand what IRB Infra exactly does. It's the largest private roads and highways company. It builds it as well as operates it. So it does operation and management as well as building of the highway itself. It currently has a portfolio of 15,444 kilometers in terms of lane kilometers of road portfolio across 12 states of India. So it is by far the largest when it comes to this particular business. Now let me flip this around. Let me take it forward. It works under 3 models, and if you would have come across any road developer, these are the three models typically that they operate in. One is the build, operate, transfer model, where the road is built and operated by the infra developer, and then it is transferred to the government. The other one is the toll, operate, transfer, where the project is transferred to the infra developer like an IRB, and thereafter IRB operates it for the tolling period and it's transferred back to the government. And the third one is the HAM model, which is the hybrid annuity model, where the government gives certain grants to the toll and the operator of, as well as the constructor of the infrastructure project, and thereafter also on an annual basis continues to pay the operator and developer a certain fee before it is transferred back. So these are the three models. Let's quickly pull up what IRB does in general. One is that it has the one big positive rather in the current setup is that the toll price is linked to inflation and the concession period to the traffic, and that gives IRB a little bit of a leg up. More on that, of course, is when we'll come to the Kotak note and try and analyze what it says. Now, 4 business verticals. One is the concessions themselves, what IRB does. Second is it has a private InvIT platform where certain of their assets are transferred to an InvIT, some divestiture basically, which they've done to raise money. Third is a public InvIT platform, very similar but a separate set of assets, of course. And fourth is EPC, where they do the construction as well as the operation and management. So mainly most of the direct revenue comes from 1 and 4. 2 and 3, it's indirect revenue through some amount of divestiture which they've done. But let's try and look at the numbers. I'll pass that on to Anushi.
Right. So Harsh gave a pretty clear picture on what the company does and how the background of the company is. But let's move on to the what kind of market cap the company covers. About 35,000 crore of a market cap over here. But how has the company performed over the course of last 4-5 years? Just look at the trajectory. Now, if you have to look at the revenue trend over here, 6,800 crore in FY20, which has more or less remained in a similar range. No particular CAGR growth that we are seeing about FY23, 6,400 crore. But now, FY24 onwards, we are seeing a significant pickup over here, about 20% of an upside. So revenue remains in check, but if you have to move to the EBITDA and the EBITDA margins over here, EBITDA, again, a similar trend that we are following, about more or less the 2,900 numbers, shifting to about 35,000 crore of range, while the EBITDA margins remain in the 45% to 50% of a range over here, while this is also due to the pickup of the construction cost. We are saying there you go, about 50.4% in FY23 compared to about 43.4% in FY20. So quite a significant upside. But FY24, we are again seeing a dip led by the increase in construction costs we are seeing. Now, last is the profit trend. Profit trend about 71 crores. Now, this again, because of the COVID period, because of the toll collections and all, we saw a dip in FY21 and 22, which has now gathered pace in 23 onwards again. And we are seeing some pickup over here. Now, moving on to the recent news, and which is the main focal point for the Kotak's rating that we are seeing, Sinatra is about to acquire about 24% stake in IRB's private InvIT. This is also owned by Ferrovial, which remains in focus. So, if you have to look at the valuation at which Sinatra has backed at, so that stands about 40,700 crore. So this they are buying from GIC, which holds about 49% stake. So in which IRB holds about 51% stake. So that stands at about 20,400 crore. So if this is to be compared with what Kotak's valuation was at about 14,400 crore, at which they have priced it at rupees 34 per share, a kind of high premium that we are looking at, through which Kotak has now adjusted its estimates for the company going forward and has given this an add rating compared to the sell rating it had earlier. Again, more reasons for this growth projections are also the NHAI strong pipeline of about 15 projects that stands at about 44,400 crore. So in the next 2 years also, IRB stands as a key beneficiary for this, with its net debt to EBITDA at pretty comfortable levels also, if you are to look at. So accounting for this, we are seeing the adjusted traffic estimates being raised by 1 to 7% over the course of FY24 to 26 period. So these are overall the key highlights as to which Kotak is bullish on IRB going forward and has upgraded its rating.
Fantastic work, both of you. Thanks so much for giving us the details of what IRB is, what are the numbers like, and why is it that one brokerage is up today. In fact, the stock is up because of that brokerage note, and therefore need to put that into perspective as well. Rajesh, after a while, actually it's had this sporadic burst, but after a while, the kind of both price and volume action together that we're seeing in IRB Infra, and please correct me if I'm wrong, does this look strong for more?
So Neeraj, long-term structure for stock is in the bullish side only. Since last couple of months, some profit taking is happening, but still stock is holding the ground on the higher side, and long-term structure seems to be on the bullish side. I think yes, the kind of volume action and the price behavior which we are seeing in today's session, that clearly shows that yes, if possible stock manages to cross above 60, 62 kind of level, then possible really we can see towards 70. Even stock may have potential to again regain to its all-time high trajectory also. So I think one should hold the position even in the decline. One can add the position as long-term structure is bullish. Your stop loss should be at around 53 rupees. On the higher side, you can add more positions once stock crosses above 62. Then possible target we can see towards 70 to 75 in very short period of time.
Okay. Okay, closing strategies first before we take some other stock ideas, because a lot of stocks are buzzing, but Praj, Inox Wind, there's a clutch of names out there on the renewable side which are doing well. But closing strategies first. Rajesh, what is the stock that you're recommending as a BTST or an STBT?
Yeah, so BTST would be our choice, and Polycab is looking very promising. Stock managed to view breakout of its multiple supply zone. The kind of addition which we are seeing on the data, that clearly shows that this stock can now scale up to the next target towards 5150 to 5200 kind of zone. So Polycab one can look to buy at this moment with stop loss of 4970. The other stock that we like is Cummins India. Stock is enjoying its all-time high trajectory. There is a continuation of uptrend is taking place. Despite of this volatile market, stock managed to hold its previous breakout level, and now again, after a 4-week consolidation, stock is breaking out that range. So Cummins India is another buy where we can see a target towards 2960 to 2980. Keep your stop loss at around 2870.
Cummins saw a brokerage upgrade today. HSBC upped the target to 3,300 if I'm not wrong. The stock started off about a couple of percentage points and then went up even higher. So good going there. We will also try and pull up the views from Dheeraj Agarwal of Ambit. But set of stocks which are doing well today in the last couple of days maybe are some of the renewables. So Rajesh, just quick thoughts here. After having some very erratic days, Inox Wind is up 5%. Praj was up 10% yesterday, up another 3% today. We're probably seeing some traction in the likes of Suzlon, Patel, etc. as well. Any thoughts here on any of these names?
So I think Neeraj, most of the renewable energy stocks are showing good traction. CG Power is now trading at all-time high trajectory. I think that stock is looking promising. We can see a target towards 600, 620 kind of zone. A very strong breakout is happening in the stock, and one can hold their long position in CG Power with the stop loss of 520. Again, SW Solar is also looking promising, though stock is logged at 5%. So I think after this corrective, I think move now stock is showing buying in today's session. So I think whole sector is again shown good traction in today's session. So I think a possible up move can be there in all these stock. SW Solar again, Inox Wind is again locked at 5%. So I think these 3 stocks can be looked at this current level, and possible momentum can extend further in coming trading sessions. So CG Power, one can initiate trade at the stock is still available, not logged. So I think this is the only stock where we feel that one can initiate buy for positional perspective.
And the other one buzzing today, Rajesh, is BSE. I didn't get a chance to take your view on this one. Any views at all?
Yeah, a very strong pullback in the stock. Stock was moving in, falling channel on daily chart in last couple of weeks. And looking at the bounce in today's session, that is again, breakout of this falling channel. So I think this breakout can extend. This breakout can take stock further higher. I think next target we can see towards 2400. That's the previous swing high kind of level for the stock. Overall, long-term structure is bullish since last 2-3 month stock is consolidating in a range, but looking at the bounce in today's session, that clearly shows that I think going forward, stock may manage to give breakout of this consolidation of last 3 months. Immediate target we are expecting towards 2400. Those who have already long in the stock can hold the position with stop loss of 2180.
And there are some bulk deals that have happened today. So Max Estates, of course, has seen some very high volumes and some price action, but 3.5%, nothing dramatic, but up about 3.5%. So watch out for that. eMudra is up 11%. Anu Pharma is up about 17%, and Engineers India as well as Sobha have done well, double-digit gains for both of those. Some very strong price volume action in a company called Sangvi Movers, which spoke to NDTV Profit yesterday. So watch out for some of those as well. Pretty strong showing. Amber has come back from the fall yesterday or day before and is up about 5% as well. So some very, very strong price volume action seen in select stocks. Real estate has done so well today after getting cleaned out the last few days, and Sobha stands out. I think it's closing in at the day's highs, if I'm not wrong. Nifty Realty too, kind of there, and Sobha too, almost there. So that's the other point to keep in mind. Okay, more voices. We spoke to Ambit Investment Managers Dheeraj Agarwal, who explained why he is bullish on pharma. Hear him out.
The reduction in fuel prices by 2 rupees came at just the time that after a prolonged period of softness, the crude and product prices both internationally have started to actually rise up again. So to that extent, obviously the marketing margins, for retail fuel certainly are likely to see a downward pressure for the next couple of months. Our core assumption, of course, remains that, given the timing of the cut, we would not really build in any fuel price increases till the election is over.
Well, that one, Dheeraj Agarwal, not Prabal Sen, but Dheeraj Agarwal on his views. Let me quickly take it back to Rajesh. Rajesh, with regard to some of these auto anch plays, something like a Sona Comstar, which is doing very well in trade today, 6.6% higher. How are you looking at this one on charts now? We've seen it come off from those lows quite sharply. And if not this, any other auto anch plays that you seem to like at this point?
So Harsh, yes, Sona Comstar is looking attractive. Stock is moving in a upsloping channel on a weekly chart that clearly shows that there is sustained buying action is taking place. Series of higher top, higher bottom formation in the stock. Stock is holding about to its 20-day, 50-day moving average. So strength is there on the near-term structure. So we believe that till stock is holding above 650, one should remain on the long side of trade, and possible once stock crosses above 700, 720 kind of zone, then we can see a good amount of rally towards 800 plus kind of target in the stock. So overall structure for short to medium term perspective is also looking bullish for Sona Com. So I think one should hold on the position. Your stop loss should be placed at around 650.
All right, Rajesh, much appreciate your time and your insights this afternoon. Thanks for being with us today, and have a great evening. We're about very close for the markets to wrap, and let's just pull up how we are shutting shop today. Pretty strong moves there on the index. Bring up the Nifty 50, we closing in at the high point or around the high point of the day. Maybe not the high point, but certainly a very high point, if you will, if not the highest point. The market breadth should come up on your screen, because frankly, yes, the Nifty is done well, but the real story is beyond that. And look at that, it's been such a rock solid market breadth day. Typically happens when you have a positive trigger from the global side after having a slightly difficult day the previous 1 or 2 days. So very strong market breadth as well. The Nifty contributors will come up, and you will probably see HDFC Bank right up there still. And that set of stocks hasn't changed too much. But before Harsh takes over, I just want to mark what are the top movers on the Nifty 500 or NSE 500. Again on the gainers and losers list, and just to give you a synopsis of what's it looked like. Now, this is the sectoral indices, and we know that power, real estate, etc. has done well. But if we just get what has done well and what has not, look at that. The top loser is Metro Brands, just 3% lower. But the top gainers, EIL, Sobha, Double-digit gains for a clutch of names. IRB Infra, something that Harsh and Anushi spoke about, up 9%. In fact, it's closing in close to the day's highs. And stocks like Intellect Design Arena as well have come back and done really well for itself. So while copper prices may be doing what they are doing, Hindustan Copper has certainly come back on account of what has happened to base metals by and large. Harsh, over to you.
Well, thanks, Neeraj. Quick flash on the bottom of your screen that I want to highlight. SBI has filed a compliance affidavit in the electoral bonds case. This is, of course, breaking as we speak. SBI has submitted all details linked to electoral bonds, including alphanumeric numbers. They have now gone ahead and complied with what the Supreme Court has been pushing them to do, it seems. And the Election Commission is expected to release data of the electoral bonds shortly. So all of that coming through as we speak. And as markets close, we're very close to close now. And there you go. Markets have closed around 0.8% higher, at least on the Nifty 50 benchmark. The Sensex too up almost 600 points in trade today. So it's a positive day of trade, to say the very least, Neeraj. Quickly pulling out broader markets and where we are seeing a bulk of the action, 2.5% higher on the Nifty mid cap. The Nifty small cap as well, up a solid 2.3%, closing off the day. Let me also quickly pull up the advanced decline to see the breadth and to check the breadth. It's quite a strong breadth as we see it, 1661 to 353. Maybe we were a bit higher earlier in trade. The breadth was a bit stronger. We've slightly tapered towards the end, but it's not a bad day at all by any stretch of measure. But it's a solid day of trade that we close. We'll see you tomorrow morning. Neeraj, myself, everyone who puts the show together, thanks so much for watching. See you tomorrow.
Co-presented by Patanjali Honey, world's best Patanjali honey, 100% proven on more than 100 parameters of purity.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
We have Chief Justice of India, Dr. Justice Dhananjay Yashwant Chanchud. Thank you very much, sir, for joining NDTV. Sir, my question is judiciary under leadership of you visited Kutch for the first time in history of India. CJI with fellow Supreme Court judges visited Kutch to address and understand the problem of district judiciary, district judges. You talk with them. How you see what are the problems there in district courts especially, and how you will assure common people that they will get justice from everywhere, from the top, from Supreme Court to district judiciary?
Well, Ashish, normally the dialogue between the higher judiciary, that is the Supreme Court, and the high courts is with each other. And I thought that has to change because the first point of contact for our citizens is with the district judiciary. आम नागरिक की कोई समस्या आती है तो पहले कोर्ट कचहरी, कौन सी कोर्ट जाते हैं वो? सर्वोच्च न्यायालय में आना उनको मुश्किल हो जाता है. पहला जो उनका पॉइंट ऑफ कांटेक्ट है वो जिला न्यायालय है. From that perspective, I thought that it's important that we engage with the district judges, understand what are the issues which confront the district judiciary. Because when we strengthen the district judiciary, we are really going to strengthen the interface of our citizens with the district judiciary. And from that perspective, we had this national conference of over 250 judges from across the spectrum in Kutch, all belonging to the district judiciary. It was a conference where I heard their stories, heard their perspectives, their opinions, so that we can change our policy making to adapt to their issues and of questions which concern them. Because through the judges who have a direct interface with common citizens, we gain to learn a lot more about the problems of the stakeholders in our system, including the litigants, the lawyers who come to courts, marginalized groups who seek access to justice, women, what kind of issues they have when they have a case in a court. So I thought this was a very unique attempt, and this is going to be a forerunner for a larger conference of over 1,000 judges, which we are planning to convene, drawn from the district judiciary all over the country, again in Delhi.
Sir, one more thing. Now, you have introduced technology in the judiciary. An advocate sitting in Kanyakumari can join proceedings in Supreme Court. Litigant also can see it. What is your future plan? How to use technology at best for the betterment of common people?
My mission in the use of technology is to ensure that the work which the Supreme Court and the High Courts and the district judiciary perform goes to the homes and to the lives of common citizens. So let's be very clear. The object of introducing technology and modernizing the judiciary is not to make this a new silo away from the lives of citizens, but to use technology to reach out to citizens. I'll just give you a few examples very briefly. We have been having hearings on video conferencing. As a result of video conferencing, the Supreme Court of India is no longer just a Supreme Court which is situated at Tilak Marg in Delhi, but it is truly, I believe, a Supreme Court which represents the nation. A lawyer from across the country, even a remote part of the country, can access us on a simple cell phone by getting the link of the video conferencing hearings. Likewise, litigants who may or may not have cases in the Supreme Court can hear what is being done in the Supreme Court. I personally feel that all citizens have a vital stake in understanding what work is done by the courts. At one level, of course, the public revenues pay for the expenditure which we incur on the institutions. So there is a right to know of citizens. But beyond that, I think common citizens will have a sense of faith and confidence in the work which we do as courts. Once they realize the seriousness with which even the smallest of issues, smallest not for us, smallest perhaps in the perspective of the larger issues which the court has to decide, but small issues like pension for somebody, the termination of the service of somebody, a misconceived FIR which is lodged against somebody who's languishing in jail for years without parole, and as an under trial for several years without bail. We take each of these issues very seriously. It is one thing for common citizens to see what is happening and very different to read what is happening. When you see something, you understand what the courts are doing. We are using other areas of technology. For instance, I'm conscious of the fact that there is an internet divide in India. हर एक नागरिक के पास वही लैपटॉप नहीं होता है, हर एक नागरिक के पास स्मार्टफोन नहीं होता है. So how do we ensure that nobody is left behind in this mission? So we have opened now about 18,000 e-Seva Kendras across the district court complexes in India on a pilot basis, so as to make available all the facilities of the e-courts project, which is a joint project of the Department of Justice of the Government of India and the Supreme Court of India. I'm chairing that project for the last several years. So we are opening up these e-Seva Kendras so that all the facilities which are provided in the court in terms of access to electronic information, digitized files, e-filing, even the passes to enter the courts, these are available to common citizens through the use of technology. And I just thought I can share with you, I mean, I don't want to, sort of dwell too much time on some figures, but you will be surprised to note that as on 29th February 2024, 3.09 crore cases have been heard on video conferencing mode all over the country in the high courts and in the district courts. As of date, the data of about 21.6 crore cases, of which 4.40 crore are pending cases, and 25 crore final judgments and orders are available. This data is available online. We have, e-transactions. The third figure which I'd like to share with all your viewers is that the e-Tal website of the court system has recorded 46 crore e-transactions from 1st of January 24 to 6th of March 24. So you'll understand the reach of the project, the e-courts project, which we are implementing now as part of phase 3 of the mission mode project. The union government has sanctioned about 7,200 crores for phase 3. And our mission now is not just to automate paper processes. What we want to do is go beyond just automation into a whole digital environment. By digitizing files, by ensuring that every part of our work which is done is through the use of information and communications technology. Speaking for myself, my entire court is, as you know, completely paperless.
Yes.
All the files which come to us are in the digitized mode. So we are, in that sense, also mentoring other courts in the country. We are training stakeholders. A large number of our court staff is differently abled. Many of them are visually impaired. So we have made sure that the websites which are put forth by the district court complexes in India, they also provide access to the visually impaired people so that no one is ultimately left behind in our mission to provide access to justice.
Sir, as a head of Indian judiciary, how you ensure common people that judiciary is for them and working hard for them?
Let me put it in just a few sentences. First and foremost, I think the greatest strength of the Supreme Court of India and of our high courts and the district judiciary is that we are people's courts. There's a purpose why these courts were created in terms of the constitutional structure. And this was to ensure that irrespective of your wealth, irrespective of social status, irrespective of caste, irrespective of religion, irrespective of gender or any other social grouping, we provide justice to common citizens. And there is no case which is too small even for the highest court of the nation. And there is no case which is too big. We treat everyone with the same sense of equal treatment. And our mission ultimately is to stand by common people. And we are conscious of the fact that irrespective of who is in power, in which state, common people do have concerns whether it is on issues pertaining to the daily lives or some of the more important issues which confront the nation. And the judiciary is a very vital element in the preservation of the rule of law. And it is when people have faith in the work which courts do that we really gain legitimacy as part of the overall constitutional fabric. So I want to send this message across that we are there for the common citizens every moment of our working lives. Sometimes I get emails even in the middle of the night, and I'm always available to answer those emails. I got an email at close to midnight there was a young woman who needed a medical termination of pregnancy. My staff got in touch with me. We constituted a bench right away the next day, and those cases were heard. Somebody's house is being demolished. Somebody is being evicted from a home. Somebody has to surrender to a sentence of jail but is suffering from a serious medical ailment. All these problems, which are seemingly innocuous problems of individual citizens, occupy very serious attention of the courts.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dream?
Sir, you delivered many judgments for women rights especially. Do you think a lot more has to be done for women empowerment? This is lots of cases come to Supreme Court every day. We saw permanent commission in forces, many cases. So do you feel that more has to be done? There is gender bias in society also.
Well, of course, we have overcome many challenges to be where we are. There's no manner of doubt that as between what the status of women was in terms of levels of education when we gained independence and where we are today, the country has really progressed substantially. I'm conversant about the progress which has been made in the legal profession itself. But having said that, for all the work which has been done, particularly by the Indian judiciary, you mentioned about the grant of permanent commission to women in the armed forces, which was part of a judgment delivered by the Supreme Court. As a result of the grant of permanent commission to women, you now have women in the Army, Navy and Air Force occupying very important roles of responsibility. You have women who are occupying important positions in the Indian judiciary itself. In the recent recruitment to the district judiciary in India, in some states, The recruitment of women has crossed 50%, in some cases 60%, and nearing 70%. So that's just a sign of, I believe, the emerging nation. That once you have spread education far and wide, more and more young women are being educated and they are coming into the workplace. The challenge is, having achieved so far what we have, how do we ensure that we build on what we have without being complacent with what we have? Recently, we designated 12 women as senior advocates in the month of February 2024 in the Supreme Court. From independence through to 2024, we had about 13 women who had been designated as senior counsel. So we have had at one go an almost equivalent number of women who have come to the fore. Increasingly, young women lawyers are choosing the legal profession, both in terms of jobs in law firms and in the mainstream, which is court practice. And I do believe that's a sign of a social transformation which is taking place in Indian society, of which we should be very legitimately proud, and we must do everything that we can to ensure that, having joined the workforce, we create safe, secure and dignified conditions of work for women. In the registry of the Supreme Court itself, we have registrars who are very senior district judges who assist me and the Chief Justice of India in the work which we do. And I've made an effort to have women from different parts of the country come and work in the Supreme Court. So what this does really is that they bring in their experience of 20-25 years working in the district judiciary and bring that to the Supreme Court in helping us design policies for expanding access to justice.
Sir, let me ask one personal question. Everybody talks about your fitness. So you tell us, viewer, what you do. Since 3:30 in the morning to late hours, 9 o'clock, you are still always still in Supreme Court working in chamber. So how you manage it, sir?
आशीष, मैं सुबह मेरी दिनचर्या ऐसी है, मैं 3:30 बजे सुबह मेरा दिन शुरू हो जाता है, क्योंकि वो वक्त भी ऐसा होता है कि पूरा शांत वातावरण होता है, माहौल शांत होता है। उस समय थोड़ा सा मैं चिंतन कर सकता हूँ, मनन कर सकता हूँ, थोड़ा योगा भी अपनाता हूँ। मैं काफ़ी साल से, मैं 20-25 साल से मैं योग कर रहा हूँ मैं। और इसके अलावा मैं और my best friend, who is my wife, Kalpana, we follow a basic Ayurvedic dietary lifestyle. Both of us are vegans in our dietary preferences. We have a plant-based lifestyle. I'm not sure this works for everybody, but it's worked for me. And that, I do believe, is very key, because what we put at the tip of our tongue ultimately determines the vitality of our bodies and minds. But having said all this, about my leading a disciplined lifestyle and, my love for yoga and being a vegan, I also believe that your fitness, both in a physical and mental sense, originates within. It doesn't originate without. It doesn't originate beyond us. So it is within the mind and within the heart of each of us all that we determine how fit we are. I must share with you that it's not that I don't share my own set of challenges. I've had, my life has been like the life of any other person in our society. There have been ups, there have been downs, there have been facing challenges. I've seen the whole cycle of life. And my mantra really is to live always on a sense of optimism and hope, and not be overcome by the challenges, the problems which we face at that particular point of time. Another thing I believe is that in all the challenges which we face, there's always a purpose and meaning. So long as we understand that there is some purpose and meaning in all the challenges which we face, which may not be readily apparent at that particular time, but so long as we retain that intrinsic element of faith in our own humanity, I think we all have it within us to do something to surmount what we have to encounter from day to day in our lives. So I think I'll leave that.
सर, मैंने मुझे पता चला, लोग जानना चाहते हैं आप खाते क्या हैं, तो साबूदाना और रामदाना जो यूपी में बोला, उसकी बड़ी चर्चा हुई। उस पर बहुत सारे लोगों ने कमेंट भी किया कि चंद्रचूड़ साहिब जो है वो रामदाना खाते हैं, साबूदाना खाते हैं।
आशीष, रामदाना हाँ, साबूदाना नहीं, क्योंकि हमारे यहाँ महाराष्ट्र में साबूदाने की खिचड़ी बनती है खासतौर पर व्रत के दिन। तो पर मैं ज़्यादा करके रामदाना खाता हूँ, क्योंकि मैं पिछले 25 साल से मैं सोमवार का व्रत रखता हूँ। पर हमारे यहाँ हम महाराष्ट्र में खासतौर पर रामदाना ज़रूर लेते हैं। We call it laya in Marathi. It's called amaranth in English. And surprisingly, it's such a light cereal that if you blow, it will blow away. But it is one of the most healthy cereals that you can imagine. So I have my own preferences. I do have some cheat days also when I don't follow a very strict diet. But overall, so long as you keep your mind under control, I think that solves a lot of your problems.
चीट डे में क्या पसंद है सर आपको?
Well, ice cream.
तो थैंक यू वेरी मच सर फॉर गिविंग अस टाइम, और बहुत बहुत शुभकामनाएं आपको। जुडिशरी ने जो कर रही है, जिस तरह से कॉन्स्टिट्यूशन बेंच के जो पूरी हियरिंग लोग सुनते हैं, बड़ा ट्रांसपेरेंसी के ढंग से उस पर कमेंट करते हैं, ये एक बहुत बड़ी उपलब्धि है। और हमें ये भी पता चला जब आप बांग्लादेश गए थे तो वहाँ के ऑफिशियल ने भी कहा कि हम भी इंडिया को वॉच करते हैं, फॉलो करना चाहते हैं। तो एक बहुत बड़ी उपलब्धि है इंडियन जुडिशरी के लिए कि ट्रांसपेरेंसी एक आई है, अदालतें अब जुड़ रही हैं, न्यायपालिका आम आदमी से जुड़ रही हैं। बहुत बहुत धन्यवाद सर।
थैंक यू आशीष, थैंक यू।
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things.
Sensex and Nifty close higher for second day in a row. Broader markets outperform benchmarks. Financial services stocks contribute the most to the gains following US Fed's decision to keep interest rates unchanged. Gold prices rise to over 66,700 rupees per 10 grams on the back of dovish commentary from US Fed. State Bank of India files a compliance affidavit in the electoral bonds case. According to a copy of the document reviewed by NDTV Profit, an election commission is expected to release the data of electoral bond details very soon. Private sector banks may lead the race as the deposit war in the Indian banking sector is set to intensify due to rising structural risks and high loan-to-deposit ratio, says an MK Global report. In an NDTV exclusive, Chief Justice of India says that no case is too small for the highest court of the country, adds that his mission is to increase the use of technology in judicial work for the common man's benefit. Election Commission directs government to immediately halt Viksit Bharat messages over WhatsApp. Patanjali issues unconditional apology for airing misleading ads, says its intention was to only exhort the people of this country to lead a healthier life by using its products. Hello and welcome. You're watching The Reporter on NDTV Profit and I'm your host Pragati Oberoi. As always, this bulletin aims to bring you the market headlines along with national and international news. But before we move on to the show, it's time to see how the stock market fared during the day. My colleague Harsh joins in for a quick market wrap.
Well, the Sensex as well as the Nifty build on gains, but largely these gains have been contributed by how the global handover was. We saw a strong rally, especially in US markets, which is what is really reflecting and trickled through on the Indian indices as well, especially when it comes to the broader benchmark. Well, seeing the Nifty bank in the green particularly makes me happy because it's a 9-day losing streak that has now been put to an end. It's the highest 20-year streak that we've seen. And therefore that is a positive. But outside of that, let's quickly look at where the mid-cap and small-cap indices is where the bulk of the action also was, have closed 2.3% higher on the Nifty mid-cap, 2.3% higher on the Nifty small-cap as well. Let's quickly pull up the heat map on the Nifty 50 before we go to contributories. And there you go, you see a host of stocks within the PSU basket which has done very well. You'll also see metals have done particularly well today. Outside of that, among the losers, far and few, but you'll see private sector banks as well as the likes of an HDFC Life, Bharti, those one-offs have done slightly muted in trade. I wouldn't say badly by any stretch, but was slightly muted in trade. But overall, the texture of the market, the breadth of the market was strong. Let me also pull up now the sectoral indices to try and break down which sectors did well. And we spoke about some of these. You see PSUs there, you see metals there, but outside of that, realty has done fairly well as well in trade today. Pretty much no sector in the decline, so that's one big positive. But if I look within the PSE basket, if I look within the metals basket, I won't find too many losers, or rather no losers there. Okay, PSE basket, only ONGC being the loser, 0.25% down, but the metals basket as well, if we can pull that up, no loser there. Pretty much all in the green. So some of those sectors did quite well. Of course, need to wait and watch how the market closes the week off.
Thanks, Harsh, for the market wrap. Let's take a look at the commodities section as well, because gold prices have reached to a record high after US Fed's dovish commentary. Now, the prices of the yellow metal went above 66,700 rupees per 10 grams after the US Central Bank left lending rates unchanged. Now, according to several analysts as well, gold prices have gone up on the back of future rate cuts by the Fed. The Fed has kept the key interest rate steady for the 5th time in a row, as we mentioned before. Now, another very big story and important update on the Indian banking sector. The deposit war among lenders is set to intensify, and this inference is according to a report by MK Global. As the Indian banking sector rides retail credit growth, the biggest challenge could be raising retail deposits at a reasonable cost. As per the report, the credit growth is expected to in fact moderate to 12 to 14% over FY25 and 27 compared to the current levels of 16.5%. But bringing a focus back to the competition in deposit growth, according to the report, a combination of factors like slower branch expansion and household savings growth, rising alternatives like mutual funds, small savings schemes, and even interbank competition could pose challenges for the deposit mobilizations. And here, the private sector banks are expected to lead the race. In fact, the report also highlighted and rather recommended that banks need to devise their own solutions in order to survive in this retail deposit war. According to MK, some solutions include concentrating on expanding branch network with more focus on the Hindi heartland, more focus on promoting steps like corporate salary community banking, self-funding ratio, capturing the corporate or SME customer via transaction banking CMS, and even retail customer cash flow via the wealth management services. In fact, MK's estimate said that in order to support this deposit growth, branch expansion will have to lead the way, and the banking system will need to add branches at 5% CAGR apart from improving the productivity of the existing branches. So all this, all in all, will bring down the high LDR in the banking system and also promote the deposit growth. Well, that was the update on the market, the gold prices and the banking sector for you. But now it's time for a very important news story from the healthcare section. The healthcare associations have joined the legal battle against standard rates for medical procedures. Our colleague Monal joins in with more on this.
Healthcare associations are stepping up, and this is in response to the Supreme Court's directive ordering the central government to come up with a standard flat rate for medical procedures across the country. Now, our conversation with a legal expert indicates that the Supreme Court can direct and allow the centre to set prices for commodities and services, just like it did in the case of Drug Price Control Order a couple of years back, setting a standard price for essential medicines across the country. The intervention filed by the associations is majorly on two grounds. One is the right to free trade, and the other involves the complexity that is involved in setting a flat rate for these medical procedures, because there are a lot of variables including geography, the kind of machinery involved, the level of specialization of doctors, capital investment, fixed costs, affordability of patients, among others. Now, CGHS had set prices in 2014, and this is the price, mind you, that the court said that it will implement across the country if the centre does not step in. So it was set in 2014, and there has been no upward revision since then. Also, it's been said that the private sector, it will be impossible for them to offer their services at the same rate as the public sector without the kind of subsidies that are given towards the public sector. So all of this could indicate that it's going to be very difficult to set one national price across the country, and letting the market decide a common price would be the best way to do this.
Well, thanks for the update, Monal. Let's move on to another very important conversation that our channel has had. As the regulatory framework evolves, it will be like a co-pilot. And that's the word that's coming from Gagandeep Rihal of -0 on what the end user can expect from the tie-up with Ashok Leyland and the timeline that it would follow. Here's a look at the conversation for you.
Yes. So yeah, so basically we are an autonomous technology company, which we build to be integrated into automakers' vehicles, whether it could be passenger cars, trucks, and all. With Ashok Leyland, we'll be focusing on trucking applications. So there are two kind of use cases. One is for internal ports, seaports, airports, where basically all those scenarios where they need it to be fully autonomous. Because you need them to be running 24/7 and all. That is one scope of this engagement. Another is onto later on long haul trucking and all, where it will not be removing the driver. It will be as a safety feature. You can think of this like co-pilot, that maybe sometimes if driver gets sleepy or something, the system can take over, so that it's because those long haul trucking for 8 hours when you're driving, that takes a lot of time. It's very exerting. So these will be in indoor campuses. It will be end-to-end autonomous, fully autonomous, and on eventually later on public roads, as regulatory framework evolves, it will be like a co-pilot.
Well, it's time to slip into a short break, but please stay tuned because we have lots more lined up for you.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Welcome back. You're watching The Reporter on NDTV Profit. Now, in an exclusive interview with the NDTV network, Chief Justice of India D.Y. Chandrachud talked about the state of India's judiciary and the importance of last mile justice. Here's a slice of that conversation for you.
Normally, the dialogue between the higher judiciary, that is the Supreme Court, and the high courts is with each other. And I thought that has to change because the first point of contact for our citizens is with the district judiciary. आम नागरिक की कोई समस्या आती है तो पहले कोर्ट कचहरी, कौन सी कोर्ट जाते हैं वो? सर्वोच्च न्यायालय में आना उनको मुश्किल हो जाता है। पहला जो उनका पॉइंट ऑफ कांटेक्ट है वो जिला न्यायालय है। From that perspective, I thought that it's important that we engage with the district judges, understand what are the issues which confront the district judiciary. Because when we strengthen the district judiciary, we are really going to strengthen the interface of our citizens with the district judiciary. And from that perspective, we had this national conference of over 250 judges from across the spectrum in Kutch, all belonging to the district judiciary. It was a conference where I heard their stories, heard their perspectives, their opinions, so that we can change our policy making to adapt to their issues and of questions which concern them. Because through the judges who have a direct interface with common citizens, we gain to learn a lot more about the problems of the stakeholders in our system, including the litigants, the lawyers who come to courts, marginalized groups who seek access to justice, women, what kind of issues they have when they have a case in a court. So I thought this was a very unique attempt, and this is going to be a forerunner for a larger conference of over 1,000 judges, which we are planning to convene, drawn from the district judiciary all over the country, again in Delhi. First and foremost, I think the greatest strength of the Supreme Court of India and of our high courts and the district judiciary is that we are people's courts. There's a purpose why these courts were created in terms of the constitutional structure. And this was to ensure that irrespective of your wealth, irrespective of social status, irrespective of caste, irrespective of religion, irrespective of gender or any other social grouping, we provide justice to common citizens. And there is no case which is too small even for the highest court of the nation. And there is no case which is too big. We treat everyone with the same sense of equal treatment. And our mission ultimately is to stand by common people.
Well, in line with the legal news, the Supreme Court has also dismissed an application seeking a stay on the appointment of the new election commissioners. The SC has said that staying recent appointment of the ECs would lead to chaos and uncertainty with elections just round the corner. Our colleague Varun joins in with more details on this.
The Supreme Court has refused to stay the application of a legislation that removes the Chief Justice of India from the selection panel for the appointment of election commissioners. Now, as per the legislation which is under challenge, the election commissioners are supposed to be appointed by the President on the recommendation of a selection panel that will comprise of the Prime Minister, the Leader of the Opposition, and a Union Cabinet Minister which will be appointed by the Prime Minister itself. Now, notably, this legislation under challenge is in the teeth of a top court judgment which was delivered in March last year, which said that this panel must comprise of the Prime Minister, the Leader of the Opposition, and the Chief Justice of India. Now, when the case was being argued in court today, Senior Advocate Prashant Bhushan said that the government was well aware that the case was supposed to come up before the top court on March 15. However, the union deliberately appointed 2 new election commissioners a day prior to the hearing, that is on March 14, so as to render this whole proceeding infructuous. He added that none of the members of the selection panel had any time to apply their minds so as to while selecting these election commissioners. Now, expressing concern regarding the process through which these election commissioners were appointed, the court said that although it was not questioning the credentials of the members that have been appointed, but the speedy procedure which was used to appoint them raises certain eyebrows. However, the bench was not inclined to stay the application of this law and therefore posted the case for a final hearing in August, when we'll get to know whether this legislation will continue or not.
Well, let's take a look at the steel sector now. Indian steel makers are likely to see a 25 to 30% impact on profitability after EU's carbon border adjustment mechanism is implemented from 2026. Let's go across to our colleague Vikas Srivastava for more on this.
Indian steel exporters are likely to see an impact of around 25 to 30% on their profitability once the European Union imposes the carbon border tax from 2026. Indian companies will have to pay close to 60 euros to 80 euros on per ton of carbon dioxide emission that will be happening on the production of primary steel. Now, this happens mostly because India's carbon intensity is almost 12% more than their global peers who are also exporting to European Union. Indian companies, especially Tata Power, especially Tata Steel, Jindal, or say JSW Steel and ArcelorMittal and Nippon Steel, will have to take massive capex to meet or to comply to these global standards. They have already started taking or undertaking steps like converting their power plants to renewable power plants. Indian banks and NBFCs are offering them incentives to phase out their conventional power plants. Government, on their part, is also planning to regulate carbon emissions in the country, and they are planning to come out with 25% tax on exports. India is also planning to launch the carbon exchange, where Indian companies can trade on carbon credits. However, if India is not able to meet all these standards or to comply with these standards, they will have to keep their export destination strategy ready where they can diversify to other countries.
Thanks, Vikas, for that update. Now, in a latest development, rather if we should call it breaking news, SBI has filed a compliance affidavit in the electoral bonds case. We have Sunil Prabhu from NDTV joining in with more details on this. Sunil, what can you tell us about this, considering that this was one of the last pieces of the puzzle by SBI?
Well, the chairman and managing director has now filed a compliance affidavit where he very clearly states that all possible data, barring the KYC, because they don't want cybersecurity to be compromised, all data required in terms of the bonds, electoral bonds, to link between the giver as well as the donor, in this case the political party, will be able to be correlated. This comes in compliance with the Supreme Court constitutional bench, which is extremely tough on this matter and had taken objection to the fact that the State Bank of India was withholding assent. This, of course, after you saw from the Chambers of Commerce, from the government, from the State Bank of India, every attempt to try to stall the entire process. But the Supreme Court was quite conscious of the fact that full disclosure is required so that the people at large know who their funders are. Having said that, this data has now been given to the Election Commission, and shortly we're expecting these details to be made public by the Election Commission. And as I said, the State Bank of India has given those details to the Election Commission, and this chairman managing director has given an affidavit to the Supreme Court stating all has been complied with.
Thanks so much for bringing us that update. In fact, the Election Commission has instructed the Union Ministry of Electronics and Information Technology, or METI, to stop sending a communication by Prime Minister Narendra Modi from the account Vikasit Bharat Sampark to WhatsApp users immediately. The EC asked the ministry to submit a compliance report also immediately, and in response, the ministry had informed the EC on March 16 that the WhatsApp messages were sent on 15th of March. That was before the elections were announced. Well, in line with another legal news, the Supreme Court has stayed the implementation of amendments to the IT rules that allowed a fact-check unit to be set up to verify news items appearing in media about the government, saying that it involves serious constitutional questions. Varun joins us with more details on this.
The Supreme Court has stayed the notification pertaining to fact-check units, which was published in the official gazette on March 20, that is yesterday. The top court said that the notification is being stayed due to the fact that the union itself had made a statement before the Bombay High Court, where this case is originally under challenge, saying that these fact-checking units won't be notified until a final verdict in this matter is delivered by the High Court. Now, the inception of this case goes back to 2023 when stand-up comedian Kunal Kamra moved the Bombay High Court challenging the constitutional validity of an amended rule under the Information Technology Act. As per the rule in challenge, an intermediary such as Facebook, Twitter or Instagram will have to make reasonable efforts to ensure that the users on its platform do not host, display, upload or share any information pertaining to the business of the union government that is identified as false or fake by these designated fact-check units. Now, a division bench of the High Court first heard this case, and in January of this year, the bench rendered a split verdict which further complicated the legal dispute. Thereafter, the dispute was referred to a tiebreaker judge, Justice A.S. Chandorkar, who declined the whole establishment of these fact-check units until the matter was finally adjudicated upon, saying that there was no conclusive argument against their notification. Now today, the top court added that the impact of these FCUs or fact-checking units on the fundamental right to freedom and free speech will have to be analysed by the High Court, and that this case raises significant constitutional questions. It must be noted that this matter is pending before the High Court, which is likely to be taken up on April 15th, 2024, which will then dictate what happens to these fact-check units and to the rule under challenge.
Thanks, Varun, for those updates. Patanjali, in fact, has also issued an unconditional apology for airing misleading ads before the Supreme Court of India. Now, the company said that its intention was only to exhort the people of this country to lead a healthier lifestyle by using its products. Now, this was also after a contempt notice was issued for flouting the court's order. Supreme Court's order had restrained the conglomerate from advertising certain medicinal products. Well, let's quickly take a look at what's trending on social media. Now, Elon Musk has shared a video of the first Neuralink patient that has been widely circulating on social media. The video has crossed over 44 million views, in fact. Let's quickly go across to our colleague Malika, who's been tracking this story at length. Malika, what is this video about? Why is it trending so much?
Well, you're right. Elon Musk shared a video of the first patient of Neuralink ever. Now, before I begin with the story, let me tell you what Neuralink is. So Neuralink is a brain chip startup that was founded by Elon Musk himself. And in this, what happens is a chip is inserted inside your brain that creates a brain-computer interface, and this enables a human to control computer just by thinking. And an example of this was shown in the live demonstration of telepathy today through a video that was posted on the X account of Neuralink, where a video was shown of a 29-year-old man who's paralyzed below his shoulders. And he was shown playing a game of chess just by controlling the entire game online, just by controlling the entire game through his brain. So imagine what is even more appealing in the video was that he was able to control the cursor movements just by thinking. And that garnered a lot of views. The video, as you said, has crossed over 44 million views online, and people are widely circulating this video. After Elon Musk retweeted this, he also shared through another post that after telepathy, which is basically the ability to be able to control computer devices just by thinking, he will also come up with blind sight, and that's the next after telepathy.
All right, Malika, thanks so much for bringing us that very interesting update. Let's also shift our focus to some sports news. In a major development, MS Dhoni steps down as the captain of Chennai Super Kings, and this in fact has come just one day before IPL 2024 season is about to kick off. Now, in place of MS Dhoni, Ruturaj Gaikwad is all set to replace him as the skipper of CSK. The announcement also came after Gaikwad attended the captain's meeting ahead of this year's competition in Chennai, which, as we mentioned, begins tomorrow on Friday. Now, Samarth by Hyundai, in partnership with NDTV, is a movement for equal rights for people with special abilities. And part of this initiative's strong belief is that people with special abilities do not define what they can or cannot do. And embodying that is the archer Rigzin Tamkos, whose journey to his dream, the Paralympics, has seen him win an award for his innovation that helps him shoot better.
मैं पैदाइश से दिव्यांग हूँ, तो पोलियो होने के कारण से मैं चल नहीं पाता हूँ। पाकिर ज्वाइन करने के बाद मैंने ट्रेडिशनल आर्चरी सीखी। पहले मुझे बहुत दिक्कत होता था क्योंकि उसका साइड जो आर्म रेस्ट वो स्ट्रिंग पर लग जाता था, तो मैंने खुद से आइडिया लगा कर उसको काट के फिर वहाँ पे 2 नट बोल्ट लगा के उसे मॉडिफाई किया। इतने सारे टूर्नामेंट्स में मैंने पार्टिसिपेट किया, तो वहाँ पे मुझे कुछ ना कुछ इनाम मिलते रहे, सर्टिफिकेट, मेडल्स, तो इससे मेरी हिम्मत बढ़ती चली गई। मैं भी चाहता हूँ कि मैं भी आगे बढ़े, नेशनल इंटरनेशनल ओलंपिक तक जाने की कोशिश करें। मेरे सपने बहुत बड़े हैं, तो उन सपनों को मुझे पूरा करना है और ये मैं करके दिखाऊंगा अपने लिए। मैं समर्थ हूँ।
Well, that's all that we had for you on The Reporter for the day, but please stay tuned to NDTV Profit for all the latest news and updates.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?